Good morning. Happy St. Patrick's Day. We're going to be streaming options, futures, stocks today. It's March 17th. Quad witching. Get set up here. Got a little Yazzie going. I'm going to share the stream on Twitter, and I appreciate you guys have done the same. I've seen it, and I love it. Let's get some charts going. Good morning, Jason. Oh, SPY had a sell-off again. It's bouncing now. It's on Twitter. If you guys want to retweet it, that would be dope. I'm gonna do it on. Get your Discordians in here. Okay. Morning, Tree. Morning, Burn. Morning, Jonathan. Check the short interest for you? No, but you can check it for me. That gas kind of sold off a bit. BBBY is flat, GME is down a bit. Today being quad witching, with all the volatility we've been having, and I don't know, I think we could get a pretty volatile quad witching. And next week with basically all that free capital, I think we might start seeing some big moves. I mean, we've been seeing big moves, I guess, but there hasn't been data. We don't have Fed for another week or so, a couple weeks maybe. But the market, there's plenty going on to move the market. Kind of a little inverted head and shoulders here, the 4-hour and a little bit on the daily. That's kind of, I guess, what that green candle yesterday gave us. But it might continue. SVB filed for Chapter 11. Industrial production came in unchanged. Fed capacity 78%. Consensus was 78%. Yeah, that's all at expectations. Alrighty then. Ahoy. Gonna buy some SG and PCs. An open PC. I don't know what you're saying, Tree. I don't know what any of those letters together mean. 9:25, got about 5 minutes to open. Thank you guys for being here. Thank you for your thumbs up. Legends. That's 7. Daily chores must be done. Well, hoping nat gas doesn't just follow oil on the way down. GME yesterday made a nice bottoming looking candle. Not engulfing, but does have a wick down here, full body at the top, very strong looking. And we do have an RSI divergence. No, we don't actually. But we just click a double bottom. BBBY. Set up for green indicators. Cool, man. Well. Morning ace. Buy's kind of ripping up here. 3 minutes to open. My puts on GME. I sold those 2 days ago. So somehow timed the bottom on that. And started to get calls yesterday, but nothing got filled. And that's probably fine. I've just been buying leaps, so short dated calls like monthlies, I might wait till after earnings even. Even if there's a good earnings, it doesn't mean it's just gonna gap up. You gotta see what the market maker's pricing in. But yeah, this inverted hammer and an inside bar, that could very well be a bottoming candle also. Look it up, because the thing with that candle is the candle itself is not very, to me it's not a bullish candle, it's bearish, but if it's at the bottom of a trend like that, it could be a sign of a reversal. So there you go, inverted hammer. After a downtrend, inverted hammer, boom. Similarly, the top of a run, it could be reversal. I don't know the probability of this one, but yeah, it's looking good. And it's very subtle, but we do have an RSI divergence from yesterday, or from 2 days ago to yesterday. See here? Draw some lines. Boom. See that? Now see this. Diverging. And I can call this diverging because this is also, at least the way I do it, is there's a peak. An inverted peak. See a point. So there's like 2 points there. Here's a bottom, and here's a bottom basically. But again, it is kind of subtle. Because yesterday we didn't close that high. But it still is there. I still like it a lot. Netflix $2.90 today. Full offers, morning access. See, man. Sorry, not a member. It's okay. It's okay, Ace. Fine. He's fine. You have a noble mission. Alright, market's about to open. Ding, ding, ding. So, being quad witching, we might get crazy moves intraday, but maybe in the last like 20-30 minutes. Oh, I closed some of my birds contracts immediately. That's so weird. Right when it opens, it just... Somebody wants some. Wait, what just filled? Had something just filled. Oh yeah, one of my birds. We wanted one contract. Had an order for open. Huh. Interesting. GME, very flat. Out of open. Buy with a little bounce from the low there. And pause this for a bit. This, I don't know if there was any kind of news to trigger this sell-off this morning. Assuming there wasn't. But, yeah. See if I can figure it out. GME is shut off. Is it awake? Market's open. Okay, let's see. That one. Good till cancel. I've got covered calls. I'm selling or closing on GME. Probably looking to get some more leaps on it. The 20 strike for January. And then shorter term, I think I might wait till Monday. I don't know. FedEx had earnings. They beat on a lot of fronts, up 10%. Vulcan's up 12%. Phase up 13%. Evital. Oh. One could be a runner. This little guy is holding on. It might get more shares actually. Yeah, I think I'm going to. I have buying power for this stuff. Okay. Not supposed to close out this week. Yeah, I think the market could definitely make some moves next week. There's a kind of an inverted head and shoulders here on SPY, so we might be getting a big rip next week, really. And then even today, like by end of day, we'll see if there's some big things shaking up. Is there an ETF or balance or anything today? DBS, do you know, or anyone know? Thanks for your likes, guys. Hey MT, hey DBS, hey Jan, happy Friday, happy St. Patrick's Day to you. Thanks for your 10 thumbs up. GME just like doesn't seem like it's on this morning. It's OPEX, yeah. Is there ETF rebalancing or anything? Or is it just our actually COPEX quarterly, right? So it's a big boy. I know we've seen those crazy end of day moves on the ETF rebalancing days. For some reason I was thinking that was today also. I'm just kind of hanging out here. Let me get rid of these levels here. Be careful. Okay. I'll just watch. I'm careful. No trading is the most careful. Yesterday, yeah, SPY closed so strong yesterday. I grabbed a short here because it's double top, and then it rallied some more. And I held them, and then, yeah, I closed out. SPY's coming down a little bit here. BBBY is pretty flat. GME is coming down pretty good, actually. Down 2%. 1640. We did have a divergence on BBBY. It is there. It's not a huge, magnificent one and a ton of glory, but we do have it. Yep. If today kind of makes that roll over, it won't be as pretty. You know what I mean? I'd like to see today's RSI tick even higher than yesterday's. Yesterday's 36.27. They could be a little higher. That'd be good. Yesterday's candle though was inverted hammer, and that is a reversal candle after a downtrend or even an uptrend. So it doesn't always work out though, as you saw here, and kind of inverted hammer kept dropping. But combine those things together, and we could be at a bottom. Bunch of news around next week. Yeah, I think the rest of the month could be pretty exciting. SPY's kind of cranking up here a little bit. Had a pretty big range after hours. I was down almost like 1% right here. Crazy. Yeah, I'm gonna scale in, average into some of these GME leaps. Just put an order out. Put one at the bid. It's a wide spread, so see if it gets filled today. Might though, and if we get a nice flusher in the morning. Look at that. GME just coming down and SPY cranking up. FedEx holding up well. Phase up good. Oh, I put an order. Oh, it didn't fill. Trying to get some more shares of XXII. Up my price a little bit here. SPY's moving up now. That gas is just flat at the lows from the sell-off. Can't wait for Tuesday. I know, it's hilarious they did their earnings when they did. 30 billion for FRC not be enough. They filed Chapter 11. Was that FRC or who was that did that? No, not FRC. SVB did. SVB. X paying is up 9%. This thing's been flat for a while. Did IV come down? No. Not really. Silicon Valley's parent company filed. Hmm. Mm-hmm. 2.5% down on GME. Tesla's holding flat. How did that AMD rally? It's holding up as well. That crazy rally AMD had. Buy is moving up. Kodak's up this morning. Yeah, Nvidia is also crazy. It's true. Yeah, we're looking for a short entry on this thing, but with quad witching and everything loosening up, we might be having a little violent short squeeze going on here on tech still the rest of this month. Even though they haven't really come down with the market at all. Not Nvidia, not AMD. A little cup and handle. Crazy. First Republic's down 21%. Well overvalued. HUBC, is that a bank too? Hub Cyber. IPO'd one, huh? Little cup and handle, maybe getting formed there too. Dollar's down a little bit. That can help with the rally. Oil's down though. These nat gas, I don't know why nat gas Mays aren't or April's aren't, like, seems like the liquidity really dropped off on it. Not sure if it's because we're coming into this witching or what, but these don't expire for 11 days and the next months aren't active yet. Sure what's going on with that. SPY's coming down here a little bit. Israeli cybersecurity company. Yeah, I saw that recently listed. Why are you guys looking into that? Vulcan's up still, so yeah, 6.5. Body's up 5%. Sure why that contract filled on birds this morning. GNS is getting wrecked, huh? Well, I didn't get many of GNS yet, so that's probably good. Buy with a pretty big red candle. The volume yesterday was lower than the day before, but has kind of been picking up the last 6 trading days in GME slightly. So we could still get a new low on that divergence, especially with today's volatility that could happen. Has potential. Is up 11% now. BBBY at $1.06. Flat from open. I think we'll get some spiky spike on this thing today. I'm gonna hold my my 1.5 cash secured puts until close to the bell because they could expire out of the money. I feel like they could, so I'm not gonna look at rolling them yet. Wait. BY coming down here. It's at $1.05, down 1.25, 1% or so. Just a pre-market's low so far. I'm looking at my cover calls. I need to close today. That got filled. SPY's coming down. BY skipping severance payments to workers. Interesting. Not sure how that plays out in court. Yeah, and then my it's my and my one puts, I was gonna let them expire. My one cash secured puts on BBBY. We're getting close though. I don't feel like we'll close below that end of day. My 1.5, so I'm gonna leave. The GME got just the leaps and the cover calls. Okay. Nat gas is not really trading. I'm a little concerned with this contract. GME is really getting flushed now. Down 3.5%. Eyes moving down here a bit. Pretty flat from open, really. Bullish. Will not drop below 73 and we'll start selling at 125. I learned. Oh, really? Yeah, I mean it's good that they're not paying them. It's good for their balance sheet, but I don't know how they could legally do that. The lawsuits would cost more than the severance probably, but maybe not. AMC breaks under 4. I think AMC is going bankrupt. 0. Wrecked just before OPEX, like the old days. I mean, not really. It's down 3.5%, and yesterday it rallied pretty good. But I know what you mean. Yeah, the old days. Yeah. Like we never had like any big candles coming into it like we've had before. Like especially like here. Okay, I bought more shares of XXII. Or here, you know, been pretty small, pretty mellow all the way through. But we'll see. Yeah, maybe today will be a 8, 9, 10% down day and we'll make a new low and get that divergence. Buys coming down some. My XXI shares filled, so now I've got a few more of those. Investors keeping the price up for loan payments. Um, how do they keep the price up? No, there could be squeezes, there could be volatility on AMC. I've thought it's going bankrupt though for a while. Poor leadership mixed with dilution. You're just that's a spiral to bankruptcy. BBIG. Hot sense. Q470. Everything has a higher market cap than BBY. Thanks for your likes, guys. I appreciate it. We're at what, 20 minutes into open. 21 likes. Not bad. On this beautiful St. Patrick's Day witching. Should see some, maybe. Sometimes there's not much to them. Other times we see volatility. With how much the market's been moving around, the options that are expiring, I'd see some hedging. 96 cents on the old Bed Bath. That gas kind of making a new low there. Dang, man. Still looks good. Yeah, BY is down 3.5%. $1.02. So the low we've had from the other day is $1.01. 1 penny above that so far. So yeah, like to hold above that. SPY bouncing up here. I'm hoping UNG holds this level. Continues this kind of inverted head and shoulders here. But it really needs to bounce here to and break this neckline to really confirm it. Any word? Yeah. Yeah, they issued a press release that they're going to squeeze. Oh, there's a flush on that gas. Shoot. Once they stop diluting. We haven't had any dilution of the common shares yet. So preferred shares. Is it flush by itself? I want an auto flush. What filing are you talking about on BBBY? I got an 8% discount when they buy. Yes. You talking about an old one? Oh, one from Mr. Ben. Mr. Ben. Spy's kind of just chopping around here. Don't want that to happen. I accidentally bought 3 more contracts on night gas yesterday. Trying to get MES. Went too quick and didn't notice the ticker. So I got more than I wanted. Well, not at a good price, basically. I'm pretty big on that one now. Oil's down a bit. 1.3. The dollar just flat. Kind of flat. Yeah. Yeah, so I closed my cover calls on Corsair. Still waiting for my GME covered calls. Close. And another leap to open. Then maybe Monday I'll get some monthlies on GME. But I don't know if I'm gonna get much before earnings. Okay, I'll get you. So BBBY still holding. Let's see, 102. 101 was the low from the other day. Multi-decade low. So we'll see. See if that holds today. Jason, you're kind of just talking out of the side of your head. All that ridiculous chatter.
Has some kind of nuances here to
their
execution and strategy that could potentially kind of bring some variance into the results going forward. So we'll definitely keep that in mind. Anthony, thanks a lot for the look here at the company.
Oh yeah, what Phil?
Trading. Anthony DeRider from Third Bridge. I got Tom with
me. Yeah, I closed the cover calls on GME.
So you've got an approach here that takes into account the bounce and kind of trades this in a range.
Yeah, a little bit.
Pulls away for months and does nothing.
Implied volatility, which is cratered.
It's investing, mate.
Not only because the stock is higher,
takes usually more than months.
The event risk is gone.
Takes years and years.
A strategy that takes advantage.
Make money in the market
safely.
When we're looking for an unsafe, sketchy, fast.
This type of strategy. So I looked at a put calendar that's basically at the money, where maybe FedEx hitting 7-month highs starts to consolidate a little bit, but still giving yourself a range in case the stock does move away from the strike that you put this strategy on. So I looked at basically a 4-week wide put calendar on the 220 strike put, where I'm going to buy the April monthly 220 puts, sell the March 24th 220 puts, which expire next Friday, 7 days. It's just paying roughly about a $3.60 debit on this. So that's going to be your risk, $360. But you can see from the risk profile here, you're getting a lower cost entry point, but you've got a nice wide range for the stock to trade in over the next 35 days to remain profitable on it. And that's about 210 on the downside and about just over 231 on the upside. Now, as you get closer to expiration over the next 7 days on that short option, you'll be able to buy that back cheaper, roll it on a week-to-week basis, collecting credits, which reduces your risk every time you do that, but then also increases potential profitability. But you want the stock to kind of remain around that 220 level, but this type of strategy gives you a lower cost entry point and a nice wide range for the stock to trade in over the next month.
Okay, got it. So looking for a pretty wide range for FedEx to move in, which it already has demonstrated it can.
Yeah.
Seems like it might have a little difficulty getting through $240, which was pretty much a 6-month area of resistance. about a year ago.
Yeah.
So it seems like it makes sense from that standpoint. That being said, what if you look at FedEx and you go, okay, it's not that different from UPS, which has been a little bit more sluggish. Maybe a trade there for like a catch-up?
Well, I think if you look at this, they report earnings at the end of April, so you've got that that event risk, right? So I kind of wanted to avoid that with the strategy that I came up with. But UPS, focused basically in North America, right? South America a little bit. So it seems like their balance sheet is better. Maybe they manage expenses a little bit better, even though FedEx has started to talk about efficiencies quite a bit here lately. But if you think that this stock is going to, on the back of the FedEx great earnings here, or the good guidance also, that FedEx might outperform or start to rally into their earnings report at the end of April, this might be the way to look at it. So I looked at a combo trade, sometimes call this a risk reversal, where I'm going to finance a bullish call by selling basically an at-the-money put here. Buying the 195 strike call in the April monthly series, then selling the April 190 put to help finance it. You're collecting a credit of $1. It's actually maybe a little bit more than that right now. But if you collect a credit of $1, your break even to the downside is going to be just below the current share price, about 189 over the next 35 days. So this is a pretty aggressive type strategy that you can use, where if the stock does fall below 190 and remains there into expiration, you have to buy the shares right at that 189 level because you collected a $1 credit. So you do have to keep that in mind, putting on types of strategy like this. But everything above that break even of 189 is going to be profitable. If the stock just kind of hangs out between 190 and 195 over the next 35 days, you're still going to keep that credit that you collected, but you get all that upside above 195 going into earnings at the end of April.
Okay. All right, it's two trades here. FedEx in a bit of a range and some upside potentially for UPS. Thank you, Tom White.
Yep.
All right, when we come back, update on consumer sentiment. And we're going to trade Foot Locker as well, which has been a bit of a shock winner in the retail apparel category. Stick around as we head into hour two. Stocks right now are doing okay. NASDAQ continues the lead, grinding its way higher, and small caps trying to come back, as well as some of those bank losses recover a tad. FRC now only down 15%. We do have some earnings to think about for next week. Consumer sentiment comes in a little bit light.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select Time Frame to adjust time intervals or to favorite a time frame. Select Style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing.
Thank you, Ace. Is that for first? Yeah. Appreciate it. Sorry to step out for a sec. Thanks, Ace. I appreciate it, man. Leaving no one left behind. Crazy. SPY's ripping up here. And just back up to the high of that. Just setting a big intraday move. GME moving along with it. BBBY bouncing some. Second is flashing on us. Oh, XXII. No, it's down 2%, mate. Nothing. Good, it's good. This is at least a 3-week play. If it has any bit like this, you want to hold above this level. If it breaks below here, then you can start looking at it. But as long as it stays above there, you're good. Is ripping up here. I don't know where to take a long. Don't want to miss like I did yesterday when it broke this level. Thank you, Ace. Is that another one, dude? Oh goodness. Yeah, you guys click the box. Click the gift box. Get a free membership. You have to enable gifting. Click that or click the 3 dots. And then enable gifting. I'm pressing it. Morning, Donrow. Do it for capitalism. It's possible if you're thanks, Donrow. Make sure our hopper's full of memberships. Thank you guys. Holy crap. No one knows how to use them though. Yeah, basically I think if your YouTube account is not linked up with a Google, then it won't work. So it has to be linked up with a Google account, I believe. So if it is and you're lurking and you want a free membership, there's like 6 or so of them sitting there waiting for you. I'm pretty sure every viewer is a member now. Thank you guys. Yours is. I can do this again. Let's see. So yeah, basically you're looking for, we're going to click on one of these boxes and you should be able to receive gift, or even click in these dots. Don't hit report. Hit receive gifts or enable gifting or something, or it's even on these boxes. I'm not sure. Alrighty then. You are a member, MT. Yeah, if you guys remember, jump on our Discord if you haven't already and DM me. I'll give you a membership role on there. Chob, you can't either? Hey, Dr. GME. You're gonna hang out, you might as well. Yeah, I need to get some more ideas for the members. There you go, Dr. GME. Thanks again, Donrow, for those 5, and Ace. You went crazy the other day. There you go, Zell. You got a membership provided by Ace. Nightcast bounced a little bit there. Spy kind of rejecting new high. BBBY holding so far on that $2. XPEV's holding up well. FedEx is also. Kodak. There's always Kodak. If BBBY gets boring, could just go crazy on Kodak. Spy's coming down a bit now, a little fleshy flush.
I think that's going to be the
case, talking about.
Who knows? I very well could be wrong. But
thank you guys also for your likes and your support, subscribing, hitting the thumbs up, hitting the notification bell. All of that helps. So thank you for that. We're at 34 this morning so far.
The ego on you.
Diving a lot less into
all that support helps. Aspect of all this.
Trading
Kodak make me that's all
very random, very range bound, and very much contained.
You know you trade it
for a while. I mean,
when it was squeezed or whatever.
It's right in the ego on you. Last year, 94 to 114. It's looking for more information, and everything that we've received over the last couple weeks, couple months
for the 100 memberships.
Stronger than expected inflation data, which is now kind of shifting to weaker. You have the bank debacle. That wasn't it, right? It didn't tip the catalyst.
No, thanks, Donner. I appreciate that, man.
Range-bound rates, for example, a similar situation. We saw that spike up at the 2-year back to 5%, but we got knocked back down quite rapidly here, hanging out around 4%. And again,
holding up.
That was part of the indices. Yes, the S&P's rallying back off the lows from earlier today. The Nasdaq's positive. Bitcoin, I think,
dollar's still pretty
the
flat.
Real standout here. I mean, it's actually breaking out a bit to the upside
Oil's
here, which You know, I was sort of thinking about it, right? In many ways, this is the bull's best case scenario for Bitcoin, right? A banking debacle. Isn't that what crypto ultimately was created for, in theory?
Oh, there's oil dropping down.
Ultimately, you know, so I'm sort of looking at the broader market as relatively contained, but definitely taking note of the move that we're seeing in Bitcoin.
Okay. Dollar down, so a pretty clear response there to the number. Inflation expectations.
What's up, Pick Six Cards?
So that's helpful.
You're not a member. Click the membership box. Become a member. It's free. It's been gifted to you today by Donaro.
Thanks, something Liechtenstein, host of the Future Show.
Liechtenstein.
Right, we've got a pretty clear.
I have my MySpace shares.
Market definitely making itself very well understood ahead of next week. Dollar down, interest rates lower, looking for some of these soft points of the economy to bring a softer Powell. We'll find out. Let's talk some earnings. In the meantime,
end of month 10
not
calls.
the only thing on the schedule next week. Foot Locker reports on Monday.
Those sold puts? Why are those bullish?
Shock winner. Kevin Green, our senior markets correspondent, taking a look at what matters for the company ahead of the report. For a while there, it seemed like Foot Locker maybe was going out of business, frankly, but they've managed to execute a pretty impressive turnaround.
Crossover.
They have
MACD crossover, green over the 9.
Brought down their expectations of the company as well. So I think that's also adding
Earnings
to
didn't help.
a little bit of the momentum of the
I actually like
stock
Lyft,
to
I
the
think.
upside here, Oliver. But let's talk about what
I don't know what their valuation is, though.
Expectations are at this point in time. From a revenue standpoint, the street's looking at revenue coming in at $2.15 billion. The adjusted earnings per share estimate right now is at 52 cents. And there's about a 12% implied move. So there's going to be a lot of eyeballs on this earnings announcement here. And the reason being, the company has actually provided some pretty conservative guidance going in to the fourth quarter of last year here. They are actually looking at total sales to decline year over year between 8 to 10%. And they do cite foreign currency headwinds as well as the just slowdown from a macroeconomic standpoint. They're looking at comp
still going on about Foot Locker.
6 to 8% year over year as well. And then gross margin, they are actually looking at it coming in between 29% to 29.3%. Now, they are citing that, yes, they might see demand spike here a little bit, but they are marking down their inventory fairly significantly, which is eating into those margins.
Post links here. That's a
comp sales numbers as well. So
that's a
at the end of the day, Oliver, the expectations are fairly low.
limitation with YouTube, I think.
They are able to exceed that, and
or maybe I could enable that. Not sure I want to though.
We could see a significant pop in the stock here.
Maybe I could do it for members.
Market is implying that we might have.
Now that's sketchy because Ace made everybody a member.
Okay. So we're not really expecting much in the way of growth at this company.
Football cards?
It's kind of like the
all right, cool, man.
Catch here, right? Like it's not like they're booming.
Eyes coming down here.
They've like shored up the problem.
They'll just chop around in this range.
Definitely, yeah. Actually, we are looking at a contraction pretty much on every metric here, Oliver. But they are
the longer term it does just kind of
as well. So they are taking some action there to try to be able to pad themselves here a little bit. They have been working on the inventory management process. They've been getting in some inventory that has been a little bit more
the momentum shifted
for consumers, and they're trying to get that inventory fairly
crossovers
quickly. That was actually a bright spot in their earnings for the last quarter.
No divergences as far as I can tell.
Some rocky metrics that they did report that was actually a bright
it's
spot.
It's at a low for sure. It's like all-time lows on it, I think, right?
Them a little bit more opportunity here to improve the top line number. Also, we have to see what's going on in the Asia Pacific markets. We know that China is reopening as of right now. That's not going to be fully reflected into this earnings report, but from a conference call standpoint, we might actually start to hear some of that guidance coming through when it comes to the Asia Pacific markets if they are seeing demand increase. We saw the same type of commentary come from the casino stocks like Wynn, Resorts, and some of the others as well, and that actually was the catalyst for the move to the upside for those stocks. I'm curious to see if they're going to try to pull the same type of strategy and provide that same type of clarity on their conference call on Monday.
Okay. A good context here.
Yeah, I was noticing the dividend was out
helps kind
on
of
SPY.
For this stock, basically throughout 5
Signify
years.
the bottom. I've seen that before. I'll check that out.
But the long-term context of some of the struggles they've been through and treading water, essentially, which shows up almost perfectly technically over the past 5 years. Thanks for the context, Kevin Green. A good setup into the number. Let's do some trading ahead of next week. Dan Deming, Managing Director.
What are you doing on IBKR?
Thinking about some shoes. Dan, what do you think?
Yeah, I think Kevin brought up some great points there. And, when I'm looking at various other analysts as such, that it was actually just recently upgraded here by a couple analysts. And I saw, I think Wedbush indicated that it's neutral in their book, but reaffirmed that. But
Good morning, AC John.
the general trends appear to be
Hopefully you gave a thumbs up before you gave that
Foot Locker
doom and gloom
as
comment.
they continue to work
But yes,
through,
Easy Money is gone.
kind of reinventing
I think there'll still be a
themselves to some
place
degree
for
and cutting costs. And so I still think that
the Ubers and the
as we
Lyfts,
look at the price action
DoorDashes.
here, Oliver,
Maybe not
and
all of them at
potential
once,
with
but
the higher implied volatilities going into this earnings
I don't think
announcement,
transport is going away.
that you can possibly play for the upside here with this trade example that I'm looking at. So what I'm looking at is buying
GME's
a
down
call
4%
spread,
now.
but also selling a put way under the market to kind of finance the cost of that call
Okay,
spread.
get 1,000 worth of
As
interactive
well
broker
as
shares.
if we do see significant sell-off, then you have the option.
All right,
to
Doctor,
decide
you're
that,
back, and now you're a
if
member.
we do
How does
trade
it
down to
feel?
that 35 strike, to get put into the stock at a much better level. So that's kind of the variable outcomes in this trade example.
Okay, all right.
End
Nice.
of times, guy.
So,
So let's
there
look
are
at the
three parts to
dividend
this trade.
dividend deal.
The call vertical, which is kind of one
Oh, it wasn't the case here.
chunk, and then selling the put
Traded flat.
to the downside.
Wasn't the case
other
here.
side.
Kept
So it's pretty
dropping.
bullish.
It is, yeah, it is. It's
It
trying
happened
to take
here,
advantage
but it
of,
really just
the
consolidated,
general
bounced
trends.
out of that
We're coming
low.
off of the recent highs, but nonetheless, if we
Wasn't
continue
a bottom
to see
there.
this turnaround,
Meltsville?
man,
Ooh, I got my
manifest
call.
itself with Foot Locker.
Yeah, I got another
Also
lead.
some of the
So
general
yeah, the
trends we're
dividend
seeing
thing,
in the market right
not
now,
as true
that,
as
it could, we
some
could
might
see a
make you think.
positive upside move
But that
here,
said, the
and this
SPY is in
would
a
allow you
downtrend
to
here, but
capture that move from it's a
and
42.50
we're
call
still kind of in
spread
this
that I'm looking
long-term
at in April,
downtrend.
but also selling
But
a
in the shorter
35
term,
put in
it's a little
April.
inverted
That's,
head and shoulders.
if we were to trade down to
A
35,
lot
I
of
think
volume.
that's a level where
And today being
you
quad
could think
witching,
about
next week could
possibly,
really loosen some
getting
stuff up,
long the
and
stock at that level. So
things
really,
could get kind of
this
crazy, I feel
has
like.
a defined risk
Yeah, so I just
profile
got
in
another
the
leap
area from,
on
let's
GME.
say, 42 half to 50. And then, of course, you have a decision to make if we were to get down to 35, where that's where you have some risk to the downside. But again, the idea is if we get down there, you have the opportunity to
January.
get long at a much better level, I think. If
January
we do see a
20
reaction to the
call
earnings
on
announcement. However, this
GME.
allows you to participate to the upside, Oliver. And again, your intrinsic value is a little bit closer to the current of the
Probably
strikes.
just
I
put an
should
order
say,
in
by
again
selling the put,
tomorrow. Unless we get a
lowers the
big dump
cost of the
today,
call spread, so
it's a
you're
lot
closer
cheaper,
to the
but
intrinsic value
those
of
probably
the
won't
stock.
move a whole lot.
Got it. Adds a little bit of risk
Not tomorrow,
onto
but Monday.
it to some degree.
It does.
But it also gives you a little bit of juice. So if you got conviction, go for it. Nice. I like it. All right. So the call spread and then selling the put for Foot Locker.
Peter
ahead of the
Schiff
report.
does
Take it
promote
down.
gold, top of the world, baby.
And
Woo!
Director TKM Financial. All right, with the bullish look here, looking for some continuation of Foot Locker's recent strength
Driving for
next
fit for
Monday on
fun.
earnings. Let's get back to the big charts with John Kosar. After the break, the chief market strategist will
Brand new
take us
drivers.
through his checklist of what he sees right now. Stick around.
Yeah, I mean, if we have a free economy, it'll work itself out. There's a demand for it, so just it'll survive in one form or another. I mean, that's why there's taxis or shuttles or any sort of public transit, or I guess private transit. If they're too bad to their workers on Uber, they'll go to Lyft, and if both are too bad, then there'll be another company that comes around, or they'll change and become better. It's the beauty of a free market. Let the consumer decide. SPY's coming down. Maybe break this low, which would be actually low on the day. Turn off extended, I suppose, now.
200-day moving average through the trend line from the January 22 highs. Got up to a little bit higher by the beginning of February, and now we've come right back in. There's that chart. So there's two important takeaways here. The first one is note that since the beginning of December, we've been drifting sideways. The market isn't quite sure of what to do here, and you could really see it in the sector rotation. We're in technology one week and we're in healthcare the next. A lot of consternation about what's happening to the economy, what's going on with inflation, where are we going next year? There's all these cross currents, and then of course we had the issue with the banks. So that just basically threw more gasoline on that fire. This is a big support level right here for the S&P 500. You can see we had the breakout on Jan 23rd. Now we've come back and we're sitting right on the trend line from 2022. And then you've got some Fibonacci retracement levels that are right there. The level is precisely 3850 to 3762. As long as we stay up above there, and we are now, this could be a potentially very good place to re-enter the market. The risk reward down here is extremely good, because if this support does not hold, I think we go back to the lows that we made back in June and October of last year.
Okay, so as it pertains right now with your factors,
I took a short there on the MES. I don't have a lot of margin for much because I have it in that gas.
They were starting to veer
we did break the low on the day.
They weren't like screaming.
See next support down here at the pre-market, and then
so have we pretty much held since then? I guess.
Probably
or is anything
2 days ago high for the next one after that.
Your recommendations.
No, that's what's missing. The Asbury 6, 5 of the 6, actually all 6. You can see all
down
6
economy should be bullish for the. It could be, yeah, gig economy, people just trying to find work, for sure. Yeah, I can see that too.
Generally speaking, most of these are in solidly negative territory.
But yeah, I mean, pricing has to be. They'll have to adjust pricing, which I don't know why they wouldn't. Reflect the economy and people's what people can spend.
We're sitting on
at least moving people, maybe not as much food delivery.
2000, but the internals are still weak. These internals need to strengthen up a little bit.
People need to go places
before it becomes safer to go back into the water. If you're a risk
Thanks, MT, appreciate it.
And you want to lean on the support and hope for the internals to get better, that's one way to play it. The safer way
there's
to
kind of
play
cold
it
front
is
in
to
south.
wait for the market to recognize that there's a little bit of stability, a little cooling off.
There's a spike coming down. I got my leap on GME.
That would be the safer
I try to get another one next Monday.
market is accepting that things are starting
I know
to
food
get
delivery.
starting to cool off a little
We do it
bit.
sometimes. I'm
And
like,
at that point, I think it would be a little safer.
Yeah. We did it a lot when it was like free or whatever, like
into the
Chipotle.
markets from our risk
Get the
off,
free,
two-thirds
I don't know,
to
DoorDash, it was like $1 delivery or free.
Internals and the kind of fundamental metrics
and it
that
kinda
you're
got-
watching certainly are not.
I hooked a
screaming
little
goodbye,
bit.
But the technical setup looks
I don't
like
even-
it could be
I don't even
such
get
a
pizza delivered. I
payoff
pick up
if it
pizza, but
works. If you're a little bit of a
Chipotle I
risk
get
taker,
delivered.
the
Chipotle's further
technical
from me, so.
suggests maybe you could dabble a little bit. How do we know if it's not working?
Spy's
We go
coming
back into
down
that
here. Let's see what happens at the pre-market low. Wow, it's down. I mean, it opened up pretty low, so it's down 0.85%. This low from pre-market was close to 1%, I think.
Obviously, but the Asbury 6 would have to remain negative. So in other words, you never got that calming where corporate bond spreads are starting to narrow, where there's more money going into the spiders.
Watch Hitler's
market
speech.
growth is getting better. So through
He
that
was
level,
very
again, the
passionate,
bonds,
inspirational,
it's,
absolutely.
3850 to 3760. Through there, we go right back, I think, to that September 2020 high. You see the marking for that on the lower left. We actually tested and held that in June. Tested it again on September 30th. We broke through it for one day on October 13th. You can see it at the bottom of your screen. That's the risk right now. If you buy here and the internals do not get better, the Asbury 6 stays red, then I think we're looking at a retest of those lows.
These are normal prices.
And from there, who knows? I mean, this is a
Yeah.
really, really important inflection area.
Yeah, I haven't noticed them
We've got the risk reward here.
inflating
We
the
don't have the
menu
strength
prices
of
to
the
price in delivery at all, but just inflated
caps,
cost of everything in general, I guess.
Weaker related
That's
to
true.
the bank stuff. Technically, does the
Search purposes.
Russell
It's kind of bouncing here a little bit.
different from what's going on?
Close to the low.
Indexes go in very different
Might
directions.
close these little shorts.
They line up.
What? They never opened?
They do line up. The difference with the Russell is the support that the Russell is sitting on is much more long term. You can see it on the chart. It's based on the highs that we
Okay, never mind. I guess I
in
don't.
October the 2018. I'm sorry, of August 2018, January of 2020. That levels from 1742 down to 1750.
Oh my goodness.
1742 to 1715.
I sold 2 nat gases. What in the world?
For the past 3 or 4 days, the market sees
that's crazy.
Time that we have tested that.
That's the same thing happened to me yesterday. The other.
If we go
Jeez.
through there, and I look at the Russell as kind of a more, it's a higher beta, a higher risk.
There it flushes.
That way to trade the market. When people are looking for,
That's
people
annoying how E-Trade does this.
Tend to go into small cap rather than
selling
maybe the safer
MES. I sold nat gas.
So if we break through
all right,
that
GME is
low,
flushing
you can
down.
see you
SPY's
don't
at
have
that
anything
low.
underneath there. So that's a level that's on my screen all day. I'm
I'll
looking
call
at it
sell
all
off.
day.
I think we'll see
If we
swings
break
maybe
through
both ways
there,
today with this switching.
and for more than a day or two,
I swear I had that on the
for
right
more than
one.
just a few index points, to me, that would be a leading indication that we've got another shoe to drop here.
Oh, it's because it
which could
rejected
take
it.
the
I
S&P
didn't.
back down to that 3,600 level. So again, screaming inflection point. Again, if you're looking at this from risk reward, very, very. It's either got to market's got to get in gear here, or it's vulnerable.
Might be a good long here. We'll see if it bounces at all.
All right. Thanks, John. Love the charts. Really good stuff.
Down 1% on the SPY.
Style situation. Seems like we're on
I'm gonna
right
leave it
now.
alone.
And, the Asbury
aggravating.
indicator still
GME is down
red,
almost 5%.
internally, so some reasons to
Looks
be
like
on
SPY's
alert.
gonna wick down there
Thank you
below
very
that
much.
support.
Likewise, John Kosar, Chief Market Strategist at
FW.
Asbury Research. All right, coming up,
Bed
let's
Bath still
talk
holding
about
that
the trade-off
$1
between inflation and
level.
deflation. Kind of the theme, rich dad, poor dad. There's some inflation, deflation themes there. Robert Kiyosaki is back with us.
Why are you watching
Worried
that?
about inflation pain, but right now the market is a little worried that economic crises around
Fidelity.
banks might lead to some deflation. We'll see what he thinks.
That's what Don uses too, is Fidelity. Should I get my nat gas back? Me? So ridiculous. I accidentally bought those 3 yesterday and then accidentally sold 2 today. AR. Special rich Persian link. GME broke this 16 level. SPY's wicking here, yeah, maybe even a long. Yeah, I keep IKBR, Fidelity. Those aren't going to give you a nice UI. You've basically got Webull, Robinhood, and TD. TD Ameritrade. Depends if you use desktop or mobile. Mobile Fidelities is still nice, I think. I think you already use Fidelity. Oh, here he is.
2013, and this followed the 2008 crash. And I'm on CNN on Wolf Blitzer's program 3 days before Lehman's crashed, and I said Lehman's is going down.
We actually have this
I
game.
was on Neil Cavuto's show this past Monday, March 2023, saying that Credit Suisse is going down. So my job is to watch the ups and downs of the markets, and I'm fairly accurate, but I don't trade stocks anyway. So the reason I'm
concerned, short Credit Suisse, though, you think Credit Suisse is gonna go bankrupt?
Oh, yeah, it's already bankrupt. It's one of the most corrupt banks in the world, you know. And I hate to say this, we're in the area of corruption and collusion, and I can't believe how corrupt the Fed is, the Treasury is, our banks are, and that's why everybody watching TD Ameritrade, stay tuned, pay attention. This is not a time to buy, hold, and don't fight the Fed. But anyway, what happens is what they just did with this bailout is, as I say, they kicked the can down the road, or whatever they call it. Did they solve the problem? And that's what I wrote about in this in 2013. They didn't solve the problem, they made the problem bigger. So today, debt is even bigger before. I don't know how many trillions they printed for this fake COVID stuff, but I don't know what the heck. We're in serious trouble here. So they're not solving the problem, and the problem's getting bigger. And every time they raise interest rates, as you know, stocks, bonds come down, real estate comes down, and this cash is going to be trash. So that's why, please keep listening to TD Ameritrade. I'm plugging for you guys. I mean, I'm on your side on this one.
Hey, Robert, when you say that things have only gotten worse, the response, the way I understand what you are saying there is that the response to the financial crisis in 2008, the buildup in a debt sense, has made the problem worse. Would then that imply that our financial crisis that's going to happen next, or rather, specifically a bank situation, should it be worse than 2008 then? So should we be trending towards bigger crises? Is that your point?
Yeah, your last guy who was on, I mean, I took trading for about 3 years. My brain, I'm a real estate brain. I'm not a trader brain. I'm very slow. I'm an old man. But the thing right now, you better be nimble, you better be quick, and you better be watching what's going on with the charts. You know, what's going on in moving averages, stochastics, and all this. Pay attention. And the thing I'm cracking up right now is, Jim Cramer was saying that SLV, Silicon Valley Bank, was the best buy. And now they have a Cramer ETF that whatever he says, they short. I think that's hysterical.
Hey, Robert, one of the things that I've seen you talk about is how to kind of hedge the problems.
I broke the low there.
Talk about gold. I hear Bitcoin in the mix a lot from you, the crypto stuff. How does that fit in to the risks?
I think you were saying all the fake money that was made from COVID.
Began this
all the printed money
event where a crypto-centric bank in Silvergate, Signature next, and then Silicon Valley's clients, which have a ton of tech and crypto overlap. It seems like a big chunk of that was the problem here.
Yeah, it's go woke and go broke. I mean, they went woke and they went broke. They're a bunch of idiots anyway. I'm so old. I remember this here. This is a 1964 Kennedy half dollar. In 64, this was real silver. And then in 71, the dollar was real gold. It was a silver certificate, really. So in 71, Nixon took the dollar off the gold standard. So I write about flying behind. I was a pilot in Vietnam with the helicopter, and I fly behind enemy lines and buy gold. So gold is a hedge because this is real money, gold and silver. And I like Bitcoin. I'm not buying Bitcoin today because it's too high. but I picked up Bitcoin when it crashed and then wrote it back up again. So this is really, you know, a TD, a Ameritrade type of environment right now. Buy, hold, and pray, and don't fight the Fed. The Fed is corrupt. So you guys keep attention.
Robert, so you said Bitcoin's too expensive for you, but you like gold. You think gold's a better buy it right now at 1960 than than Bitcoin is at 26,000?
No, silver is the best buy of all right now, because I was buying silver at 50 an ounce, and today it's about 30. You can buy one of these little babies here for about 30 bucks. This is a silver eagle or a silver buffalo. But this is what I really do, is I take companies public. So this is my gold mine. It's called ODV. It's the richest gold mine in America. It's in Provo, Utah. And I am a pure hardcore entrepreneur. I don't buy assets, I create my own. There's a difference. And that's what we teach at Rich Dad, and that's the cash flow game back there. The small circle behind me is a rat race, and that's what happens when you go to school and get a job. And on the outer track, called the fast track, is where you put your own deals together. So we teach people to be entrepreneurs,
hey, trader,
not employees, buy, holding, and praying.
All right, I like that. Hello, entrepreneurial spirit here. We started this network almost 6 years ago. Robert, thanks for coming back.
Thank you, man. Keep up the good work. Everybody listen to TD Ameritrade. Do not buy, hold, and pray, or hope the Fed's going to on your side. The Fed is corrupt. Thank you very much.
Thanks, Robert, man.
Robert Kiyosaki,
that guy's a legend,
author,
dude.
Rich Dad, Poor Dad.
GME bouncing up here quite a bit.
Gold and Bitcoin right now. Chartmasters coming up.
SPY's kind of wicking down.
From this week, Adobe and Dollar General both led to some interesting.
See, 1592 is a low there on GME.
We'll take a look at the technicals when we come back.
We could drop below 397 SPY this morning. We're way below that already. We're at 390. Use your credit card, not debit. Yeah, pretty much. You have to pay them off. Kodak's up 7%. To like you freaks. That was his name, Robert Kurtnevak? Yeah, no, I don't know his last name. Rich Dad, Poor Dad author. Yeah, it's Robert Kiyosaki. Kiyosaki, yeah. Robert Kiyosaki. What's your cash back on your debit card? Only issue with that is you're not building credit, but you already have other lines of credit. It's not a huge deal, I guess. Cashback scams. He was saying don't buy, hold, and pray. Yes. Yeah, he is old though. I guess you can't tell, dude. Asians like don't age. They look 35 their entire life. But yeah, he's a funny guy. We actually have that game I play with the kids, Cash Flow. Cashback and referrals. Jeez, you guys doing all the cashback hustles. Oh, horse pilot. Oh, I think he just said he was a pilot. I don't think he said a horse. Yeah, he said he'd go behind enemy lines. I think he was fighting on our side, though. I mean, he's Asian. Would he go behind American enemy lines and buy gold? I think he fought for America, but I don't know. %. That's not bad for a debit card for sure. I think credit cards I use are 2% on everything and like 5% on certain things, right? Cycles through. I was just making back all the grounds it ripped yesterday. Bye-bye gains. I don't have margin to short anymore. Bought too much with my trading account. And my nat gas play is not happy today, so that's probably not helping. The dark web. Man, I've not tried that one before. It seems like a good play though. Nasdaq's overvalued. I think they're all overvalued. Yeah, we've had this kind of tech squeeze going on. We see where they diverged a bit. 313, this just had a much bigger move than the SPY. That is actually pretty significant divergence. Yeah, I'm still in BY. Yep. Holding it. Buying more.
Just a
times.
couple weeks ago there. So overall, I thought
Really
it
just
was,
data
kind of
farming.
an
I don't. The
impressive
IV
move
just
upward
stayed
from a
high.
technical
And
standpoint
actually
here.
increased.
So we also have to consider as well that
I
momentum
shared
has crossed above the
been sharing stuff on
threshold from
Happy DD.
bearishness to bullishness here.
You guys that are
It's
new on
back in the
Discord,
hands of the
kind of just
upward
stuff that I
momentum
find
now
I
after
share on here
crossing
so you
above
can
that
see it.
50 midline here.
So,
you know, the moving averages
yeah,
themselves,
Chameleon has
too, they're
an
starting
IV
to
chart,
turn
which
upward.
probably my
Their
brokerage
slope
does
is
too. I don't know where it
changing
is, but
from down to up. So
yeah,
that's
look at this
another sign that the
elevated
trend could be changing
IV.
here. So longer term, yes.
So you can see the
downward
chart
trend.
here, kind of like
Shorter term,
BY
it's
chart,
starting to
right?
look
When you'd
perhaps a
like
little
had the double
promising here.
move,
Now,
and
where would we look for support and
but then it came
resistance?
down, and
To
then
the
IV
downside,
stayed
we've
flat,
got
but
our
the
two moving
price came
averages
down.
near 343 or so. The two shorter
That goes
term
along
ones
with
that
this
we
right
follow,
here.
so that's a
This
likely
was the
point to
IV, the
look
two
for some
spikes,
potential support.
and then
To
IV
the
came down to like
upside,
here, and then
the
it's just been flat
375
here while
level,
this has
that
just
pale
melted
red
down.
line,
This should have crushed
caught my eye.
IV.
That's a volume node. It's also
All
the
of this
start of a gap
lack of
downward here.
volatility and
So
just
those
dropping.
are some areas to consider watching.
All right. So,
But it didn't.
kinda had that
So
intersection
kind of
of
interesting.
some trends
I guess what I write here could be
broke
caused
to
by
the upside,
big money
but,
expecting a big move
not out of the woods
and keeping the
totally from
options
the
demand
long-term
very
downtrend.
high.
Seems like intermediate though, a significant improvement.
I mean, because the market maker's
Does
pricing
seem
a
like
big
it's
move.
improving a bit here.
And it hasn't let up.
It also
Market
was
crazy
worth
by
noting,
end
I
of
think,
day.
that we
That's
held
because I'm
those
thinking
lows at
I
that
get
green
some
line
moves from
near the
quad witching.
322 level. So that was an encouraging sign for the bulls as well. So keep looking. Look if we can pass above that purple 252-day EMA near the 379 level as well. That would be kind of the a nice confirmation that the trend has indeed changed.
Okay. All right. Nice. Potential little comeback story for Adobe if it keeps going. But as the NASDAQ fades, Adobe kind of losing some of that early momentum as well. Dollar General is our other one here.
What a waste of the
and,
gamma ramp.
shares are down. They've been down all morning. Even though it seems like the analysts are kind of mixed on this, I guess they are
You right of the moon.
tilting a little bit more negative. I don't know. It depends. There's a couple downgrades, a couple price target adjustments to the downside, one or two to the upside.
You're right. Very mixed reaction here.
If silencers, suppressors wear out, you can just use an oil can. Those are cheap.
From accumulate. It cut the
I don't know how
price
quick they wear
target
out, but how many
to
shots are you using with a
$220
silencer?
from 230.
Suppressor.
That still suggests about a 4.5%
Eyes coming down more
move
here.
to the upside from where
Like
it's
you need to do
trading
target
now.
practice with a
And this
suppressor
is
on it.
after Dollar General posted mixed
What's this,
fourth
level
quarter
3?
earnings. They missed street expectations for revenue, and it gave
Oh,
a
that high from
disappointing
pre-market.
profit outlook for the full year. And this analyst says
Kind of
that
sucks not being able to play
essentially
this.
he left the Dollar General
Probably be
fourth
good. I'll
quarter
save
report
money.
call yesterday with more questions than answers. And that doesn't happen a lot because he believes that this is a strong fundamental story.
Javier.
It has a very strong case
morning.
for what it sells. Everything's $1.
AC John, if you want to become a member, I think there's
Right?
probably some free
People
ones.
Go to dollar stores, especially right now where
Click
they're
on
trying
the
to
box.
find a cheaper price for things, right? But Gordon Haskett has 5 main concerns. It's worries about the sufficiency of planned labor investments, right? Of being able to get adequate employees for these places. It's also concerned about the biggest competition, which is Walmart right now, and those heightened focuses, the focus that Walmart's placing on pricing right now. Also, the cost to maintain unit growth for the company, for Dollar General, and to backfill remodels of stores.
Fuel filters, oil
and
filters,
also
yeah.
concerns
Guess
that
doesn't really
its
matter
comp
either
basket
one.
and mix
I
issues
think I've seen
could
with
linger
oil
a
filters.
little bit longer. And lastly, what the
But I
analyst
suppose
is
a fuel, like a
describing
diesel
as
fuel
Dollar
filter.
General's third consecutive
No, I guess a
below
normal
algo
fuel
year.
filter too.
And so where
Yeah.
it's mixed among analysts,
I don't know.
is
Was one work
that
better than
Telsey
the other?
Advisory Group reiterated an outperform rating and maintained a $242 price target.
may or
while
may not need to
Deutsche
be
Bank
threaded.
boosted the price target to $249.
BBY doesn't usually
kept it
follow
on a
SPY.
buy rating,
From
and then
I haven't been watching
Truist
very long. I mean,
maintained
a
it
couple
at
months, I guess, but
hold
I haven't
and
noticed
raised
it following the
price
SPY.
target to $214 from
One day I
$211.
noticed it following the SPY and it actually ripped at the end of the day, so I kind of kept an eye on that as an indicator that it might rally.
Maybe the discount story is struggling a little bit, you know, where they
Yeah,
say
the
it's kind of
22.
an uncharacteristic
It's like
weak
it's like blowing a feather.
number. Does the rollover here for about 3 months, Rick, change the direction of the longer-term trend for Dollar
First,
General?
You have no
Longer-term
facts to
trend
back up
has
what you're
been,
saying.
You know, before the past few months was more sideways.
If you do, please,
now it's
please
still
share.
looking more down. It looked to me like we were in a falling wedge type shape that began in late November here. You can see those two
Oh, really? I didn't know they made a
lines,
purpose built.
one going
That's
across
funny.
the highs, one
I've just
going
seen the guys
across the
using
lows, are
actual oil
converging
filters.
toward each other. This is typically regarded as being more of a bullish type pattern.
I
here.
sent the video.
It's
No,
not
Mr.
always
Ben
a
is not
guarantee or
is
anything
not
like that. It's
actual
certainly not,
sharing factual
going
evidence.
to
There's
always work
speculation
out that
involved.
way. And indeed, it looks like we're breaking to the downside today below.
There's
that
no
level.
evidence
The
of
210 level I thought was
dilution.
pretty important looking because, as you can see from that green dashed line,
There
that's
is.
about
Send
where
that.
price opened up after a big gap downward that we saw all the way back in May here, and we're starting to give up that level. So that means, if you look at our volume profile study on the right, that means we're heading into an area of relatively
But it makes
thin
sense.
trading. We're below
Just because it
our,
makes sense
value
doesn't mean it's
area
the
here pretty
fact.
significantly. The value areas where 70% of the trading took place, it's between those two thick yellow lines on the volume profile. So that
Lots
means
of ways
if
to
we do
suppress the
start to break
price.
downward, we could see some fast-moving prices and not a lot of
That's right,
trades
Ace.
with conviction until
Just
about the
chill out, though.
195 level, where you can see that we have that node, that area
Alright.
of heavier trading here.
These aren't the
Now,
usual,
our
maybe.
moving averages alternating
Nat gas
downward.
bouncing up a little
RSI
bit.
is on the verge of slipping into the oversold area.
I got my leap,
We,
I think, right at the right
you know, are
time so
breaking
far
downward through this
from
pattern.
GME.
Overall, things do not look very
RT
positive for
City
the
is
bulls
up.
in this name right now.
Those Revlon, all the
All
bankrupt
right,
ones.
Interesting, you know, turn of events here.
What's
Dollar
this?
General wants
What's
a
all this
hideout. Not so
chatter
much
about
anymore.
gamma ramps? Look at that
Analysts kinda
volume
iffy
on
it.
SPY. What in the
Chart looking a little
world?
bit soft.
That's
Thanks,
massive.
Mr. Cat. Thanks for Young. Adobe looking better than
Guess
Dollar
that's
General right now, it seems
launch
like.
protection team
When
stepping
we
up
come
to the
back,
plate
We're
there.
going to discuss the fade in the market. We'll get an update on forwards.
That's crazy.
We'll be right back.
What was that? Did you guys see that? Comes to the quad witching. I think we're probably gonna get some more of these weird spikes of volume and such potentially. Still buying shares. Wait, it's not really up to retail, I don't think. Gamma ramp is basically when the options chain can go either way, but there's a lot of open interest. A lot of people hold options that are near the money and continue to climb up out of the money. And as the price goes in the favor of those options that are out of the money, and as they get into the money, the market maker has to hedge, and you start to see an increase in the price from the market maker hedging, and it kind of creates a snowball. So that's where you see this kind of gamma ramp, or that's more or less what a gamma ramp is, and a gamma squeeze. Yeah, there's a lot expiring today, but these were open probably, you know, a lot of these were open a month ago, 2 months ago, 3 months ago. This is a COPEX, so quarterly options expiration. So these could have been opened a while ago. Really, it's going to be after this OPEX. We're going to see what's what. Next week, though, we do still have quite a bit of open interest. These 1.5s, 2s, and then 5. So those will be big levels to break. And then 5 will probably be a pretty big resistance if we get up there next week. But I mean, this will change as the week progresses. As price action comes in, people start coming into calls. Week after, looks like it's pretty good up till 3, and then yeah, there's not as many strikes for the week after. I guess it's interesting. Huh. So yeah, moves next week could very well be on the table. I'm thinking potentially on GME and BBY as well could have it. GME is actually showing pretty good support there without the SPY. Hoping nat gas after this expiration starts to move again. It's like looking kind of illiquid. I haven't traded futures long enough to know if that's normal. This contract has the most volume still, so I think I'm in the right one, which is kind of weird. Yesterday after hours it was starting to look like it was a little illiquid. SPY's consolidating at the lows here. Sorry. Mozu shares. Yeah, I mean, so the gamma ramp will still be in play, because you know it opens at a certain price and then it's up there and those calls are in the money. So, all right, looks like nat gas is moving up a little bit. SPY is coming down some. Oh, I forgot even to look at it. XXII is holding up. Tesla's had a pretty big flush. I could have held that. No, I think actually I got a good exit on my debit spread on Tesla. Probably made the right play there. Rivian, I maybe could have gotten a little more. I don't know. Maybe not. GME looks like it will confirm a bit of a double bottom here. And Deutsche Bank shares fall 3.3%. Bill Ackman concerned about contagion risk spiraling out of control. The U.S. housing market isn't going to see a 2008 size crash, according to a Reuters poll. Hey. PCSA. Got all the random tickers. Maybe. So here's what I have to kind of manage today. Well, those, not GME, those are all good. So I got one more kind of leap on GME. I don't know why it separates. I need to have these combined. Every order makes them separate. I guess it's kind of nice, because then I know if I want to close this specific one. Will it work like that for the tax lot? Huh. Maybe it would. It's interesting. But yeah, I've got these 1.5s expiring today on BBY, these cash secured puts, and there's one strike, which I think I'm gonna let these expire. I don't think I'm gonna close them because there's 50 of them, so pretty good amount of profit to close these. Yeah, it's $50, and it was only, the credit was only 215, so let that one go. And if nothing else, I guess I'll have 5,000 more shares at $1. Well, really under $1, but I think we'll be fine there. These I'm gonna roll, but I'm thinking by end of day today, possible we will have a move up, big move up. I don't think they'll want it to close over $1.50, but we'll see. It was actually, yeah, that last time we had that rip was on a Friday too, wasn't it? Let's see, when did we have like a... Yeah, this was a Friday. 310. That was last Friday.
Yeah, I mean, we had that muscle memory from the GFC in 08, 09 there, so
June 16 calls are green.
That's something to watch out for too.
Yeah, the IV was kind of coming up on
is something that could sway the Fed and
BBBY, which is crazy. It's already elevated, but I think it's been kind of rising the last.
Favoring a 25 basis points rate hike, but they're
0-day IV is 1,700%.
Maybe a pause, and then even if you look at June projections, there's actually a small possibility of a rate hike being priced in there. So that's pretty interesting to see, and you can see why the markets are so jittery and choppy. But like I said, we've seen pretty solid gains led by the heavyweight technology sector and communication.
Yeah, GME's moving up here.
Well. George, give me a last thought here as we close it out. We've got about 40 seconds.
Yeah, let me go back to the banks for a minute. Just because the government is providing support to the banks themselves, it doesn't necessarily mean it's going to support bank equity. I think that's important to realize and consider, because you see a lot of volatility and a lot of downside risk in these names. So, if this support comes from the discount window, it doesn't necessarily mean it's going to help the equity holders.
Okay, understood. All right, so fair enough then. Stocks, different story than the depositors. Okay. Right. George Tillis, Rob Fleming, thanks, guys. Trading 360 with Nicole Petalides is up next. Appreciate you joining Morning Trade Live. I will see you this afternoon. Market on close, 2 p.m. Central Time.
Expire today. Yeah, options, futures, bonds. Quad. We have everything expiring today, so big quad witching. Paul did not send you a pair of free socks. Shut up. I don't believe you. GME's bouncing up here a bit. Thanks for your likes, guys. Well done on this Friday. 46 likes. Yeah. On this very special quad witching. Bond sales in euros on the debt capital markets plunged to 3.3 billion euros this week, lowest level in 2023. US drawdown announcement for Ukraine coming very soon. Mark Zuckerberg warns in Meta layoffs announcement to prepare for a new economic reality that could last many years. Anyone else hate AMD? Like the stock or the product? Or the shareholders? And advertising first to go during recessions? Yeah, like marketing, advertising. Yeah, the 2008 great financial crisis is what ended my my snowboarding career. So, yep, we were the first to get cut. Extra expenditures. But it was a blessing. UI barcoding down here, 103, 102. Maybe. Maybe furs. Maybe I am. Stock. Sounds like you have a short on it. It's relentless. That old AMD's teasers. This one is so liquid. I need to be trading AMD more. Such a nice liquid train. I trade the mega caps. Tesla's probably the main one I trade. But you look at AMD, Nvidia, Netflix, chips especially. They move bigger. So SPY's consolidating here. Probably gonna flush through this support and make some new lows. It looks like. So where to next? Here? Yes. So maybe I'll try some. Oh, I can't really day trade on this account. Or can I? I think I can. I think I can. Maybe I'll try some day trading on just SPY. I haven't done that in a long time. I can't. No margin for futures right now. See what this is like. You can just market order these. I love it. All right, I bought a daily on the SPY put at the money. And probably just dump it at the flush. Investing is a tough game, isn't it?
Its price target on First Republic to $62 a share from $150 with an overweight rating, saying they stand with a 68% of First Republic's deposits being uninsured, which does screen higher than the typical regional banks at 49%. And the stock has, of course, seen a significant selling pressure. However, they said the largest banks in the U.S. did step up in a way they have not seen before to provide direct deposit support.
I think on this account I can only do, what, 3 day trades a week? So I have 3
well below their tangible book
I can do.
current levels. levels, they see First Republic as a higher risk but potentially very high reward name. JP Morgan also said
Stock's the
that
lowest
given
since
the
2022
substantial
or
upside
22.
potential to the
June.
firm's revised price target, First Republic actually remains their top pick. So some optimism from JP Morgan today. We didn't see that in all the analyst coverage. Wedbush did downgrade shares to neutral from outperform with a price target of $5 down from $140, which is pretty substantial, saying they see a distressed
Volatility in
M&A
these banks
sale
is
that
wild.
could result in minimal, if any, residual value to
Maybe a
common
put
equity
debit spread
holders
on
that are owning First
FRC would
Republic's
be
significant negative
plan for the
tangible
IV is already
book value
crazy.
after taking into consideration the headlines we've received
Because
over the
that
last
weekly
week or
RSI is
so.
at
Atlantic
18.
Equities was another name we saw today that did downgrade shares to neutral from overweight without a price target, also
The
citing
26,
the
that
overall
17 low.
volatility and now just added risks with some of these
That's
US
all-time
regional
low.
banks, Nicole.
Wow. It already broke its all-time low on First Republic.
Obviously, the big story here on Wall Street this week. Jenny Horn, thank you. Markets correspondent here on the TD.
Only took 2 weeks.
Let's get
Not
some
even.
insights on the news shaping the markets, and for that we welcome in Bruce Levine, CEO, Knight Shares. Thank you for being with us. I mean, what are you thinking as we are wrapping up this week? I heard the question, are you more nervous
BBBY
this Friday or last
broke
Friday?
out of its barcode. $1.04
Answer, but
on the
there's
old
still,
towel
even
stock.
with all the band-aids and bailouts and deposits, there's still nervousness here.
Absolutely. There's been a ton of headline risk, a ton of volatility.
This guy.
With Knight Shares, the whole idea is that the overnight markets are actually less volatile over time than the daytime markets. And what we've seen year to date is a tremendous amount of volatility happening in the day. We've seen some in the night as well. And
I'm
it's making
short
for
of his
an interesting
research
time.
paper.
And our products, we have products that are invested overnight and out during the
Oh,
day.
is
and
DD
there are
is
certain
video
days,
by
maybe
Mr.
like this one, where
Mr.
that's
Ben.
attractive.
Right. Explain the whole concept of Knight Shares, right? You have NSPY.
Oh yeah, this is an interesting
these are the
ETF.
kinds of things that
I like
are
this.
based on nighttime
Most of the moves
trading
happen in the after
compared
hours
to
on the
daytime
SPY
of
if you
S&P 500
haven't noticed.
performance. I mean, what are you looking for? What have you seen?
Over the last like 200 years or 100 years, however long.
Yeah. So
S&P's
we
only
found
moved
over
like
time
half
to get most of
percent
your
or something
return at the
ridiculous
night
during the
and most of
day.
your volatility
But
during the
after
day.
hours, it's
And
moved,
so
you know,
over time, you're
300
getting
or
higher
whatever
risk-adjusted
percentage.
returns if you only held in the night session. So we have two funds that do that: NSPY for large caps and NIWM for small caps, and they're essentially invested overnight and sitting in cash and treasuries during the day. And then we have one fund, NSPL, that is invested during the day, but then leverages into the night by an extra 50%. And so these are different ways to tilt into the night. But really,
Jeez, I remember why I don't play options.
the daytime is the
Just in
problem
this
child,
nothing move, I'm down
historically.
25%
There's just
on it.
a lot of volatility and not as much
Just
return as you get.
consolidating and slowly going up.
Yeah, understood. I mean, I know you had some comparisons. You were looking at the small caps, your NIWM product. You just mentioned it.
Yeah.
Focuses on small caps. Is there room for small caps here? Because it was the small caps that really took a nosedive on the heels of all these regional banks. Is there opportunity?
Yeah. Absolutely. There was a huge divergence between large and small caps last week. The night effect had its best week since we've been live last week. For example, the Russell 2 was down 8%, and almost all that happened during the daytime. I think the S&P was down around 4%, and most of that happened in the daytime as well. So, in volatile times, these products can.
Okay, maybe this is the bottom. We'll see.
Right, understood. What are your thoughts on the big picture? I mean, how do you think
Seeing
the
a bear
Fed
flag
may or
still.
may not move, and what do you think should be done?
Yeah, they're in a tight spot. Thankfully, the banking system seems to be holding. I think we'll all catch our breath, and probably they ought to stick to the course of 25, and recognize that it's open-ended after that. But they need their credibility, and I think that's what they'll do.
Right, understood.
That math's still holding up
in a
to
year from now,
$1.04.
I mean, by the end of the year, are you anticipating recession, soft landing? I mean, more unemployment? Are you thinking that in the back half of the year you may even see more opportunities?
Yeah, we're expecting a choppy year for sure. Whether it's a light recession or not, hard to say. We don't expect a deep recession. And in volatile markets, historically,
maybe a double bottom here on the hourly.
This night effect did really well, or let's say staying completely out of the day did really well when the markets were down or up modestly. And then when they were up strongly, you wanted that day component. So, we kind of give people a way to think about with their own worldview of what the rest of the year holds, two different ways to play it.
Yeah. Thank you so much, Bruce. It's great to chat with you. It's been an incredibly busy week. Glad to have you on. Bruce Levine, CEO of Knight Shares. Thanks, Bruce.
Thanks,
More
Bruce.
to come here on Trading 360. Our 360 Spotlight looks at FedEx after that earnings report.
FedEx. ICC judges issue arrest warrants against Russian President Vladimir Putin. Uh-oh. Not the old Poot. SPY might be moving up here. I might close out of this put. Friday.
Live on the floor of the New York Stock Exchange, time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts.
Indio
here
beer.
to take us through the trades. Achilles Lavrea is here.
Not
founder,
familiar with
CEO
Indio.
of Lavrea Wealth Management. All right, great to see you both. It is Friday. I'll start with you, Achilles, right here in person. Before we get to BP, I mean, what do you think about the volatility we've seen on Wall Street, the bank story that it still is dragging? Somehow we managed to squeeze out gains, which is amazing.
Yeah, well, the bank story it's not over. There's a lot of banks right now are coming into question. Why hasn't there more stress tests been happening to these mid-sized banks? You know, certain size and below really didn't get any stress testing whatsoever.
Goodness.
So we're asking ourselves, why not? And is this going to be part of the standard operating procedure
I don't
going
like really
forward?
heavy beers.
So that way we can safeguard our monies going forward and not go into the scenario that we saw before.
Well, that's the whole concern. What's safeguarded, what's not safeguarded. Anyhow, let's get to your picks today. You're turning right over to oil. You're looking at BP. This is oil's at the lowest levels since 2021, but you think there's some opportunity in a name like BP?
Yes, I do. There's always opportunity here. There's a great story that is not an oil story per se. Even though they made millions and record profits, BP is one of those companies that is transforming itself. It is in a transition period to renewable energy, solar, wind, hydrogen, so much opportunity.
Data burned on
Can
these
you
things.
imagine if they just grab a certain percentage of the hydrogen market and that takes off? That's going to be huge. That's going to be bigger than gas and oil, in my opinion, going forward. Also, the revenues are there. But aside from that, what I'm seeing with BP on a long-term basis, within 10 years, we're not going to recognize this company anymore.
Really?
Yeah, we all know this as the oil company, and the dividends were once half
I'm
of
closing
what
my
they were.
short or my
but
put.
I think this is going to be a company more about
I think I lost like 35% value in
and
it.
we're going to see 12
5
to
minutes.
15%, 12 to 18 month time frame. Yes, resistance
Gross.
points as we're going along, but up forward, big upside on this stock.
Interesting. All right. So we saw this stock hit $41 in February.
One time saw Axl
Ben,
Rose.
Has since pulled back, but Achilles sees that opportunity.
Thanks for your likes, guys. I appreciate it. Today is quad witching. It's Friday.
I see weakness on the short
It
term
is
playing
St.
out.
Patrick's
Trend,
Day.
That was intact
SPY
to
is
the
moving
upside,
up
recently
here.
getting invalidated. You mentioned from 41. I've got my eye on the move lower.
GME
from
kind
that
of bottomed
level all the
earlier
way
and has
down to
already
34,
started
and I went ahead and
rallying.
identified some areas of consolidation that formed along the way, so we can see some of the weakness in the staircase type pattern
Actually
that
help
plays
us
out.
stranger
And you can see we're
unless.
currently consolidating around this 35 level. So I think what we're seeing in terms of price activity, a reflection of how ultimately this disruption creates demand destruction, and so there is some
Weird how 1
uncertainty in
million
terms
is
of
not
crude
much
oil, as
anymore.
mentioned, back to
A lot,
those
but it's
fall
like
of 2021
not what it
levels.
used
Let's
to
move
be,
away
that's
from this more
true.
intermediate 30-minute candle time frame, and I mentioned here this weakness that we've seen from 41 down to 34 actually invalidated a longer-term trend that we had been seeing to the upside. Now, let's just see, because we actually established a bit of a double bottom down here around this 25-26 level, if you remember, end of 2021, beginning of 2022, and then we retested that lower level in the summer of 2022 last year in July before rallying up, kind of pausing around this 35 level, spiking higher, starting to overlap and consolidate around 40, but look what's happened. Now we're taking out this key level balance area associated with this, the middle of it associated with this 35 level. So that, for me, at the very least,
What is this
invalidates
they're
working
talking
assumption
about?
that we
BP.
have been trending higher. So we're losing some of that momentum higher, not necessarily a reversal or a sell here at this point, but definitely loss of momentum and a significant pullback at that from 41 to 35. Take a look here. Significance, it really speaks to that here with the 50-day moving average getting taken out, still holding above the 200, but look at RSI here, Nicole. This is supportive of continued weakness here. It's not necessarily indicating that a relative strength index here showing that price could continue to play catch up here and we could see further downside momentum. So again, longer term, I think Achilles is talking about here. I'm sort of focused on the weakness and what it means for this
Last more
chart
than 2
ultimately
weeks.
and potential continued selling over the next couple days and weeks.
Look, I mean, he's making the point here. Ben is showing us how it has broken down in a big way. And so this sell-off, Achilles, you're thinking, I mean, I guess you're seeing some opportunity. What kind of numbers are you looking at? Because that high was 41. It's trading at
Break
35
110.
today.
Try
Where
this
would you
range
buy
to see.
some? And where do you think it's headed?
Yeah, well, I would start definitely in the 35 range. I would pick up some more at this point. If it were to shrink down and get into the 28-31 range, absolutely pick up some more. This is a high-quality company. They've got their act together. The only unknown
I'd like to see more of a break.
is this renewable technology that
It'll
they
be a
have
big move
committed
once I think
to,
it breaks.
the strong
Big from
point
here.
in their
You
future
know,
arsenal.
I think
And
1.5
that's what
will
we're
come
looking
up
at.
pretty
And
quick.
that's how I'm going
basically.
with the 18-month
And we see this thing moves up, like, and even in the morning,
Yeah,
it'll move up
understood. I even see
10%
that
just
they
in like
have,
a minute.
An electric vehicle
So-
adoption. They have a charging unit, right? I mean, that goes into that renewable
a little
energy
move
that you're talking about.
to previous day's
Okay, let's get to
highs.
your next name. And you are
Not going to
looking
be
at
good
Ford-
enough to move out of a
Ford Motor,
range.
thinking this is definitely a winner.
Yeah,
You know,
Ford is a
we need
funny
to see it
company.
break
You
kind
know,
of
it's
this
one of these companies.
135,
It's
I think,
$20
really.
one day,
And then
it's
it's got to hold, though,
$12
that's the
the
thing.
next day.
It just
The big
spiked.
thing with Ford right now is, are they
But I move up to
communicating their
1.5
EV
now.
or
It's-
the electronic
It's a pretty big move
vehicle
at this
strategy
point.
strong enough?
Where we at?
Before they were, now not
Yeah, it's a
so
44%
much.
move,
We
so.
feel that they need to be a little bit
Buys
more
melting up here.
concise. They need to be a little bit more forward thinking, and that they are. But we still feel that there's inherent value in the stock easily anywhere between, to get back to that 18 to 20 range could be very possible within the next 12 months.
Buys.
But we see significant resistance going forward for the entire sector, not just Ford, but we do see a move to the upside along those lines.
Right, so 8 to 10% upside, as you said, in the next 12 to 18 months. And look, I mean, there's no doubt they've had
might get on some
incredible
SPY calls. We've got a bullish
for the
MACD, we've got
Lightning,
green over the
right?
9.
The F-150 Lightning, they're bringing on a lot of EVs. It's a great American company. Ben, your thoughts here, because it has been breaking down of late.
It is, Nicole. This is a stock that sold off from 15 when we saw earnings back in February, and just actually broke out to the downside into the end of this week. So Achilles was talking about some of the fundamentals and how they've really struggled to break into the EV space. I think we're seeing a reflection of that in terms of price activity. You've got a well-defined trend environment to the downside. Again, as I mentioned, 15 down to, well, currently trading 11.27, but you can see some of the areas of consolidation that formed at these lower levels. 13.60 every 80 cents, right? 12.80, $12. Will we see something around 11.20 here? We're definitely, well, attempting to get vertical to the downside, trying to break out. So let's keep an eye on the stock next week. But yeah, definitely follow through to the downside. Weakness, no rejection of this lower level as of yet. And we're talking top left corner to bottom right. Let's step back from the intraday. You see that, well, the move we just looked at here from 15 down, that's part of the bigger picture trend that's been playing out, a very similar pattern, right? High conviction to the downside, sideways consolidation around this. Well, let's go ahead and identify it as the 13 area.
If I were to pick a bank, I'd invest in a probably JP.
Again, you get this pattern repeating itself on a more granular basis multiple times. Look, we break down high conviction here and then kind of go sideways around this $20 level. Similar pattern.
It's still not that low though at all. I mean,
16,
look,
17,
October
break
was
down, and then
way
again,
down
as
here.
I mentioned here, acceptance of this lower level and just value
I'm not a buyer at
forming
these
around
levels.
13. So kind of working our way towards the
I wanna see
lower
some new
extreme here.
lows.
Looks like a triple bottoms held
Maybe
so far.
COVID
We'll see
lows.
if that fourth test does as much.
Maybe a flirt with
Let's take a
bankruptcy.
quick step back here and show you where things
Then I'll
stand in
buy
terms of the 50-day, the 200-day moving average, because we were just talking about, well, weakness here, and you can see a reflection of that. Look, recently failing at the 200-day moving average, that moved from 13.14 down and holding below the 50-day moving average. Now, RSI also supportive of the move here that we're seeing to the downside, taking out the lows that we saw back in the end of February. So I guess the next target here
super
again is
high. We looked at that the other day.
End of December, beginning of January. Let's keep an eye on that next week, down around $11.
Okay, wow, that was good stuff there, Ben. And you know, as you look at this, I don't know how similar or different something like General Motors would be, Achilles, when you look at these charts. But Ford is your standout, and that's the one you seem to be focusing on over a name like GM.
Yeah, it seems that they all seem to have this malaise that's going on right now. It's nothing new, but I think Ford has a better strategy for the electronic market. They've already got waiting lists on that F-150 and the others winner vehicles. So this is the reason why I chose Ford versus their peers.
I'm not seeing an EV bug. I think I should have held that.
And last but not least,
shook me out. A little bull trap there.
As your last pick, NVIDIA.
Fully was a bear flag.
Tell me more about this one.
Well, I wanted to bring an easy stock to your program. We think that NVIDIA is a winner right now. Just in the last 2 days, it's up $10, $11, and we're seeing that this company has once again proven investors right again and again.
You've
They're
seen
in the right place.
buzz?
It's the right time. We're also looking at a double-digit
That's
growth
the only
going forward
old school
for this year. I wouldn't be surprised if we
EV
see a
that I've seen from
20+% on the upside. It has
actually have like an R
already
version too. It's supposed to be a little faster.
threefold from a year ago to this point. So we're not afraid to get into this stock and make a little bit more money. But we're looking on the conservative side, trying to say, hey, you know what, 20% to 30% within an 18-month time period is not a bad way to go. Strong operating margins, strong profits. We think that the company's a winner and a dominator to boot.
Look, this was a $346 stock. Right now it's at $258, and it really was a clear leader in the world of semis.
You saying it's a good deal?
I know I'm looking at a 3-year chart here, though. Ben, tell us about your technicals.
Achilles mentioned this stock is a winner, and it has been for the bulls, to say the least here. This is probably one of the best performing stocks in the portfolio.
It wants to break
best
the
performing stock
low.
in the S&Ps, that's for sure. Let's begin with the 1 hour candles. A very well-defined trend up, right? Not many shares charts that you pull up look like this right now. And here you can see multiple pauses, multiple areas where we consolidated and just kind of regained composure, and then again resumed the trend to the upside.
Okay. What drive line are they using?
Followed by horizontal consolidation,
like the ID3 or whatever from the other
transition
Volkswagen?
Between these two phases, and then oftentimes, such as what we're seeing with NVIDIA, you get this really well-defined staircase pattern to the upside or to the downside, and then we're watching the areas of consolidation that formed prior to the one that formed relative to the current. So again, right now we're breaking out of balance to the upside through this 230 range that we have been around, and the question is, will we start to establish a new area of balance? And then if we do, then we're referencing 230. But right now, again, this is just an attempt to break out here. We'll see if we start to accept that with overlapping rotational price activity. But look at this, again, a well-defined trend higher, and you can see how the move that we just looked at was a bit of a reversal in terms of the trend that had been playing out to the downside. And again, one of the things that I like about this, these looking at price activity through this lens in terms of these areas of consolidation, the kind of path that the market leaves us in its trajectory is that, well, not only helps us establish trend, but also when trend is no longer present. So we were watching areas of value form at lower and lower levels, 309, 240, 155. But look, breaking out up and through 200, so taking out the highs that we saw back in June, August of last year, and then also taking out 240. So this is significant. This has legs right now at this point, and here you can see, speaking of legs, look, this thing's been above the 50-day, above the 200-day moving average for quite some time, since middle of January. The one thing that concerns me here is that this breakout isn't really being facilitated by a move up here in the RSI. So a little bit skeptical of this run up, maybe a little bit overdone to the upside here, Nicole, but something to watch, right? We can see RSI catch up here and resolve the divergence to the upside quite rapidly, or price roll over here, but something to keep an eye on here, again, especially with the NASDAQ coming off to the extent that it has this morning, from up around a third, almost 0.5%, to now down 1%. So let's keep an eye on the stock today and in the coming days and weeks.
Yeah, thank you for those charts, Ben. As we look at that, and Ben showed us how we've been running hot. I mean, this name is up over 75% this year. Sometimes people get afraid to, really nibble at names that have run up so much. Are you looking at that momentum? I mean, I did see that Morgan Stanley today raised their price target to 304.
Do we run because Morgan Stanley said something about it? No, we're big believers in the long-term potentiality of this stock.
Right.
Easily above the 250 level from this point on. It's not hard to say that this stock is going to go back to where it was, but it's once turned a long-term play. And at the same time, you want to say to yourself, I want a high-quality stock, and I want some high octane in my portfolio. Not a ton, but definitely some of that long-term play and high octane on the move upside.
Look, you always try and find some good long-term winners. You just have to be patient. Achilles Larea, thank you. Founder, great to see you. CEO, Larea Wealth Management. Thank you, Achilles, and thank you to our own Ben Lichtenstein for the big three every single day. Coming up next, our spotlight on FedEx, still jumping. It's off the highs, but still up about 8% right now. Oppenheimer's got a market perform rating. We'll find out all the details, what they are thinking there at OPCO when it comes to FedEx. We'll get that next.
Yeah, GNS has been kind of selling off quite a bit. Net cash has made low there. Albiz too. Albiz has been selling off a bit. Yeah. What is it? Yeah, Revlon is on the pink sheets now, or OTC or whatever. REVRQ. Yeah, I saw that news on Run about SVB. There was like 6 or 7 that used SVB for their credit, and Run was one of the culprits. Yeah, that's how the contagion spreads outside the bank.
For the S&P, down 1.25%. The Dow
just eating a little food here, guys. Sorry.
31,808. The Nasdaq 12,479, and the Russell at 1725, down 2.5%. I'd like to welcome in Kevin Green, senior markets correspondent here on the TD Ameritrade Network, taking a look at Synchrony Financial. An upgrade there and a downgrade there. Tell us more.
Definitely, we are seeing the stock down about 3% at this point in time. We have Oppenheimer actually upgrading Synchrony Financial to outperform from market perform here with a new price target of $35. And they are believing that the marketplace itself just really oversold, or really just hit a broad base of financial companies here. And they do believe that better than industry credit migration for Synchrony is going to occur. So meaning they are expecting that deposits may flow over to Synchrony, and they also believe that the liquidity fears may have brought on some of the recession type valuations, and that a sharp snapback could be in the cards here in the near future for the stock. But we also have Keith, Boyette, and Woods. They actually downgraded Synchrony to market perform from outperform with a new price target of $32. They are really just focusing on the macroeconomic risks that are in the marketplace. So they are really taking a more conservative approach when it comes to the overall financial sector in general. So nothing really specific for this stock. They're just taking a little bit more of a cautious approach.
Yeah, I'm just looking at the regional bank index is down 14% this week. So while the S&P and NASDAQ are higher, you look at small caps, you look at the regional banks, and you see, of course, Synchrony Financial, another name with a down arrow here, SYF. Thank you for that. Kevin Green, appreciate it. Senior markets correspondent on the TD Ameritrade Network. Okay, we'll turn that arrow around to a green arrow. That's FedEx.
Well, but that in the long term, I mean, it's nice it's on getting a discount.
Business and Industrial Services
Just have to find somewhere else to get some money.
Thank you for being here. So we did see earnings per share beat. I know there was some lighter volume, but a really a great reaction to what we've heard from FedEx.
Yeah, what's that? Is that all time?
With the stock jumping today.
Yeah, good morning, Nicole. Yeah, it was it's been a very nice stock reaction this morning. I think a lot of people were expecting the guidance into the quarter was pretty conservative, and not only was there outperformance, but the guidance for the fiscal year was raised. So I think that's nice to see.
Might pick up another GME leap.
The one counter to that is, the business, the demand conditions are still very challenging. And if you recall, FedEx this was its fiscal third quarter, back in its fiscal first quarter, it had a really tough quarter. Bad demand at that point.
Thanks, Ace, dude. Oh my gosh, man.
Structure. So they're really working their way back. It's kind of a rebound story right now.
I appreciate it, homie.
Legs, they made very nice.
I guess you've run out of people to give memberships to. Every rando, lurker, bot in here is a member by now.
It looks like most on Wall Street are really optimistic on FedEx. I see buys and outperforms. Where do you stand? Where do you think this stock is headed? As you noted, I mean, they've had some blips on some of the quarterly reports. This one, though,
I don't think he's saying that here, but it is the
does
gift.
Bring some reassurance to folks.
Actually, what is this from?
It does.
What is this from?
Yeah, we are a perform rated, a neutral.
I don't know what that's from.
A little wary. The margins are at very low levels.
Thank you, Ace.
On the core Express business. That's the international business, and also Express in the U.S. And they're still very
I've been buying leaps so far for it. I might get some shorter dated calls
on their ground business. which is
Monday.
US domestic local. So they have a lot of ground to make up. They are aggressive.
I might even wait till after earnings,
costs, though, and I think that's
and
what
just
you're
have my
seeing
leaps
the
for
market
exposure
reward them
for earnings.
They set this plan back
Let's get nuts.
2 quarters ago when things were looking very challenging, and they're off to a good start on the cost.
So we're gonna get some kind of IB crush.
It appeared in the
in fact, let's look at that.
in the ground and the freight segments. Express
Expected
still
crush.
have a 1% margin, 1.2% margin.
Was that Ace Ventura?
Very, very low.
I recognize that
So a lot of
costume.
room to improve that, but they're parking airplanes. They parked, I believe, 9. I think it was 9 in this third quarter. They're going to park another 6 international flights in the fiscal
First
fourth
quarter
quarter.
yep.
So a lot more costs coming out, and I think
the second one, okay, yeah.
volumes. You're going to see that
the
margin
second one.
start to move up here. So I think
Bungie comes out of the woodwork,
for the margin,
making sure we don't get the Ace Venturas wrong.
Hopefully so, if the
Well
cost
done.
Progression proceeds, and that's what the
let's look at
market's
the
pursuing. We're a little bit more cautious though.
Here.
Just
this guy talking about FedEx.
Historically, the margins are quite
They're going
low.
crazy on FedEx.
We're kind of
Oh, so the implied move is low still. I do have some time, so that could move up. But
just a tough environment.
So that's good. I mean, it's reflecting how low the IV is, even though it's come up quite a bit already. Current IV is 95%.
Is if you do have a recession, a global recession, financial crisis.
So this could move up today. Really, only has today, tomorrow, or Monday.
What you think, and how it may or may not compare to UPS, because that too is a name that is similar.
Look, there's not been a time since 2017 that it has beat the implied move to the upside.
Or so, yeah, you're right. FedEx is
last earnings was the closest,
and
it didn't even beat.
The last few quarters, demand
so playing an earnings move to the
has
upside, historically, it's stupid.
Obviously, it was boom times during the.
But that being said, this would be your best time to do it, as the market makers so far pricing in the smallest move. Current implied move is 9.4%.
B2B, a little uncertain globally as well.
So that gives you an implied range of 1467 to 1771.
Is challenged at FedEx, and not sure that's going to be
average implied move is 13.9, so that shows how much lower it is.
It's just, again, FedEx had way too much of a cost structure, so that's the story now. Take out cost, take out cost, take out cost. UPS.
So this would be a good earnings to play.
UPS. We prefer it.
Yeah, I guess I could get some up. Maybe wait till Monday, since maybe I'll get more today. I think today could have a big turnaround by end of day on like everything.
Both companies doing a nice job with.
Then the IV would be pumped for Monday already.
But I'd say with the cost structure,
they still make comedy like that anymore.
Weathering the storm a little bit better.
That's true.
And hanging in there. So we prefer
it's not PC enough.
That's not to say that we're not facing challenging
don't make comedy anymore in general
for both of them, but on a relative basis.
Why's coming down here?
We still prefer UPS. The two stocks actually on a PE basis on forward 12 months expectations are very close to UPS.
I just don't make them like these two.
PE point.
It's all ball bearings these days.
Right now to FedEx. Historically, that's about a 3-point premium. So
you can make any low here.
Getting rewarded today.
All right, batch. Oh, good. Yeah, you're scaling it, Ace. Well done, sir. See this? I mean, this is a good price. Yes, here's a good price too, but your patience is rewarding you.
That's got to help names in the transportation industry overall.
Yeah, SPY's coming down. Yesterday's candle is a pretty bullish looking reversal candle. That divergence is there, but again, like today, it's kind of falling over, so not showing a lot of strength in the RSI. But we do have a divergence from here to here still. But wouldn't like to see an engulfing candle here today. So, but today's not over, and like I've been saying, I think we could see some big moves by end of day. So that's where this scale in does well. Today, and then we move up to $1.25 or something by end of day. Monday we might be back down to $1.10 and get some more, whatever. You really got to look at cash cleared puts, Ace, and paper trade those. With how high the IV is, it's money, a lot of money on the table that you could be making. scale into full port. Just slowly scale your full port in. Exactly. It's a good way. Pros are logging in profits. Birds made a 52-week low. I actually sold on my contracts today on Birds. Someone had a order for market open, and boom, one of my contracts sold. Kind of funny. Bought more BBY. Birds is a micro mobility company, so like the e-scooters that you can rent in the cities. They have the biggest market share of it. But I did see that Lime is going to be going public. I think Lime is pretty close. I haven't looked it up, but I know they both kind of came out of at similar time and started growing at the same time. Helbiz has a pretty good exposure. They're one of them. Based, by the way, the Helbiz you invest in. They're bigger in Europe, though. Birds, as well as Helbiz, both had the curse of the SPAC. So their stocks are awful. Loses capital. Happy St. Patrick's Day! Ready to start boozing. Moon on BBY, I don't know. Without a news catalyst, I'd probably look at the chart, probably another month or two at least before another pinch up. But that being said, we should have without a big move up, at least a bounce out of here, I would imagine, pretty soon. We have this RSI divergence from yesterday it's weak, but it's there. Whoa, there's just flush on SPY. All that chop. Probably would have been positive on that put, but not want to hold through all of that. Okay. GME's coming down. I do have another order for another leap on GME. That'll put me at they've got 8 right now, so I have to be at 9. Yeah, they're competitors. Helbiz does like some more stuff though. They have like media stuff. I'm not even sure exactly. Earnings for BY? Yeah, it could be earnings. I think that's next month. That's next month on Bed Bath. What is GME? Let's see when they did it last year. Yes, last year is April 13th. So that definitely could be a catalyst. We're not going to see a whole lot of the balance sheet reduction from their closing of stores on that earnings, though. I mean, it's, you know, that we'll have to wait for the next quarter for that. Should see some, I would think. But maybe that was an announcement with, you know, bullish news. Yeah, it's the penny stock algo trick, the barcode, the whale teeth. Beep, 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 beep. It's Morse code of the stock market.
The elements of cost control, and if ad spending starts to improve, the stock might.
I don't have cover calls. Nope. Nope. I want to see a rally for that.
Looking at as well. So what we can actually do is.
What are you talking about, GME, Bungie?
To May with about 63 days.
I don't. Well, let's see. I don't think I have them for even Bed Bath. No. I'm happy I closed out of them. I actually took a loss in some when I closed it out, but I think most of my profit.
Now altogether, this would cost you about $2.25 a share, or $225 a contract. So break even on this is not too far off the current price. It's around $14.75. And then basically you're paying $2.25 to potentially make $2.75. So you're getting a greater than 1-to-1 return on risk.
Yeah, no, I have cash cleared puts, I guess,
At least hit the break
for today.
Of 14.75.
These are what I have as far as the theta farm. And then my other account, I'm actually just holding a bunch of shares, so
slowly inch higher between now and expiration in the next 63
so this one will have to roll probably, but I'm waiting because I think we might get a big move up today. So I'll get a better roll if we do.
You too. Have a good weekend.
And then these ones I'm gonna let actually expire because it's 50 contracts, so it's $50 to close it. When the credit I receive is only 215, so it's like, kind of eats into a lot of the profit there. I'm gonna let that one go, and maybe open some more next week. I like the dollar strike. That seems like a pretty good one to roll those cash cleared puts on, and it's close enough to it now that the premium on is pretty high. You know, for a week you get 10 cents for $100. 10% a week. Oh yeah, that ain't bad. And the probability, let's see, what is it right now? Probability of that trade working is over 50%. 59%. That ain't bad. More green crayons, bro. Need to buy some more. Another speeches through CSGO mic chat. Noise. Are you closing yours or are you just letting them go? You have to have so many contracts that it's like brokerages are racking it in on these options. Jeez, nat gas new lows. Ugh. Dang, man. The witches aren't being nice to natural gas. I'm weird too, but you're weirder. Just let them expire, yeah. You usually close them out though, right? Your theta? Your farm? What threshold value of the forest price can the barcode algo no longer keep up? I don't know if it's necessarily like keep up. Yeah, I mean it's once they let it go, it's gonna go and it's gonna stop barcoding. Getting good feedback. When the volume picks up, I mean that's one indicator we've seen with it breaking the barcode. So here volume picked up, it broke it. Volume up a little bit here, it kind of broke it. Even to the downside too. So the morning when the volume's higher, yeah, we're not barcoding. And this was the end of the day. This is when I was actually trading with SPY right here. This drop and bounce, this looked like it was with the SPY, which is kind of the first I've seen it trade with the SPY. And then it kind of did its own thing. And then this was the end of the day rally we had that other day. It's Friday. Yeah. Yeah, that was last Friday. So I'm thinking we could get a move like this today. But yeah, you see volume pick up and kind of break that barcode. Working beside very chill. Good to hear it, Tana. Thanks, man. Thanks for your support. Thanks for your likes. Thanks for your subscriptions and your notification bell ringing. There might be some free memberships floating around. If you find the box at the top of the chat, just click it and you'll have a free membership. Compliments of Donero and Ace. I think today it was Donero, but everybody else has been Ace. You see in the chart, Walter Price level started it. Walter prize level? I don't know what that is. Oh, what price level? From which price level started this barcode? Oh, like in general? once it gets into a penny stock range, I mean, this is how a lot of penny stocks trade. So it'd be definitely some legwork, but that is interesting to think about. Let's see, probably below like 5. I'll start to see barcoding. A little bit there. Yeah, maybe it's below 2. Kind of below 2.5. Looks like this looks like barcoding and kind of this. It's just a little wider range. I don't know. This is barcoding. Just with the bottom's broken out. This, I guess you could say, is barcoding. This kind of looks like it. Hold on. Yeah, it doesn't look like it up here. Yeah, I guess it was since we broke that low. That's interesting to look at. Yeah, when we first hit that $3, even when it was, oh yeah, see when it was down here, back down here at 2.5, it was barcoding, right? So, and back down here, yeah, it's just like it's at a certain price and it does it. I don't know, I haven't really researched it. I'm not curious enough, but you can research like why it does it or what's going on. There's a certain reason. Looks like under 2.5 maybe. Yeah, it's kind of started to pick up right here. That's $3. Yeah, 2.5. I'll zoom out and you can see where this was. So don't mind that. It's broken when I zoom out. But we were looking all the way back to here, I think. Yeah, we looked all the way back to here. Or no, back to here. We're kind of under that 2.5. Gas finally with a little green candle. We're way up, green box. I should be able to see at the top chat, or not top chat, but the top of the chat. They actually have to click on that box. Levels above 3. Yeah, it looks like 3, like below 3, 2.5 area kind of turned on. Interrogating Lulu. 1 year since you started trading? Wow. Congratulations. Are you having a cake, like celebrating your anniversary? Whew.
So I would look at a JP Morgan. I think that's a great name. On another dividend play, I'd look at a Caterpillar. I'd look at a John Deere. I'd look at a Costco. Names that are safe havens at a time when you're dealing in a slowing economy. I don't think you make the tech sector bet unless you want to be very selective. I think you earn a dividend, be paid to wait around, and let this volatility play itself out.
Right, understood. David, what do you like here? What stays in to X out?
Yeah, I mean, look, we don't like JP Morgan. They're out. And we do focus mostly on what's out. But what
With quiet, what you mean? It's when these four ladies in the woods stir up a pot.
And Google. You know, those are you know, great.
And out comes
great balance sheets,
price action and margin calls
depressed because of
and millionaires.
interest rates and the compression on their ability to be value. And we think they're great long-term holds.
Can't afford it. Can't afford an anniversary.
And disrupt.
It's just when different derivatives expire.
Thinking about.
So derivatives have expiration dates, and there's big ones that happen. So there's quarterly ones that happen, 4 times a year. This is one of them.
Thank you both very much.
So you have, I think this one we have options expire, quarterly options, which are written much earlier than like weeklies. Futures expire, and see what else expires. I don't know. Excuse me. It was not a bot. I didn't think so, but I just had to say that because of her comment. Or his comment, whatever it is. So we get apply the threshold at 2.5 where the barcode item stops because the stock price is expensive for the amount of stock. So the probably that. Yeah, I'm not sure trading. I mean, like I said, I've seen it with other penny stocks, so it has to do, I think with just the price of it, like, so we can look at other penny stocks that have it. Elbiz does it sometimes. I mean, like you can see it here, it's kind of weird looking. I mean, especially if you look at the 1 minute. This is all 5 minutes, so this is illiquid too. Bird, I mean, look at this. This is just like flat barcoding, but also kind of lack of liquidity, I'd say. So BBY is a kind of a special case. I mean, I don't really trade penny stocks, so I'm not super well familiar, but it's kind of a special case because there's so much volume, yet it's still doing this, I think, and it's such defined. Remember HSDC or HSDT, that one? Just illiquid. Give her the Blade Runner test? What the heck? Bank of America CEO Brian Moynihan said that the U.S. economy would reach a technical recession in the third quarter of 2023. None of them know what recession is. It's some arbitrary phrase. Who cares? Stop calling it a recession. Whatever. All different definitions. When FRC goes under, and it will is the 30 buyout uninsured deposits at risk. The nonsense seems to have created systematic risk where there was none. Brilliant. 30 billion of uninsured deposit at risk. Okay. You guys harassing people on Discord. This Moonfire root are nice. I say you're gonna be really like human. It's funny. Try to sell me a pair of leggings. That's all I keep thinking of with Lulu. Lulu. TikTok says don't buy the boat. I agree, don't buy the boat. I'm gonna build the boat. What did I say about the weeklies? So my one strike cash card puts on BY, I'm just gonna let expire. Which might seem normal for you guys, but typically I try and I try and close my my short options. So my covered calls and my cash secured puts. I try and close the short legs just as a security, as an insurance. So I'll close it for the minimum or whenever, even if I'm rolling it earlier, either way. But BBY is so cheap, those contracts are so cheap. You know, I have 50 of them, so to close 50 of them for the minimum is $50, which is kind of expensive since I only received like $213 in credit. That's a pretty big eat into the profit, so those I'm just gonna let expire. Just leave them, and as long as BBY is above $1 by close, they will expire worthless. And I don't even know actually. I don't think I'll have to pay that minimum then. I think it's just, there's probably some fee, but I'm not having to pay to close it. And no, I don't have covered calls. I did. I closed them a couple days ago. 20 bit. Oh yeah, boats have money pits for sure. Oh, I understand. I agree. This isn't gonna be a boat, Ace Ventura. It's a yacht. I mean, look at like the banner of my channel, please. You can tell me not to buy a boat. You're ridiculous. I don't want a boat. It's a yacht. I just did this guy's voice perfect. It's a yacht. Name this movie. It's a yacht. That's the second time in that movie that that phrase was said. Spies moving up here. Bit. You bought a bunch for next week? You bought or sold? You bought a bunch of calls for next week? Still barcoding. That gas lease is bouncing a bit. I'm not looking to buy a boat, you guys. Come on. Stop. 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 That. That's an 80-foot electric, solar, powered catamaran. That's what you live on.
To improve efficiency, and our cost actions are taking hold, driving an improved outlook for the current fiscal year. In turn, boosted its outlook for the full year. Now expects adjusted earnings per share for fiscal 2023 of between $14.60 and $15.20. That's up from a prior forecast.
You bought calls?
$13.40.
No problem buying calls. No, those might do good. I'm not buying calls. Look at GM here. I'm not buying calls in. Oh, I got Phil. Oh, I did. I bought another leap on GME. On that downtick right there. I'm not buying calls in BY because the IV is still insane. Okay, I'll look at Ascari. I feel like, yeah, I'll look it up. Especially, I mean, you're paying a huge premium. Would you get 1.5s? It seems like, oh, it's so cheap.
Year over year, so we'll be expecting
it is, but it's still a premium.
Also talked about potentially cutting flight hours.
You have something that should cost $1, but you're paying $1.50. It's like, oh, it's $1.50. It's still so cheap. No, you're paying a lot more. The percentage from $1 to $1.50 is a huge amount. The cute boat. BY, I'm just buying shares and selling options. I did have debit spreads, but actually those are going to expire today because worthless because that's what they're doing. They're just the market makers and the brokerages too because it's so cheap are just breaking it in on this high IV.
Speaking of those analysts, any pile-on effect here? Are the analysts happy with what they saw?
Yeah.
Yeah, we're certainly seeing. Well, I should note that actually it got an upgrade from Stiefel ahead of this earnings report. So 60% of analysts are
95K a week.
Alex.
It's not bad. I mean,
one of them ahead of earnings.
I don't want to rent one. I want to own one and live on it.
Boosted its price target to 222.
With the crew.
But FedEx, with this big gain today, is trading at 222 right now. So not a lot of upside from here. But yes,
pretty boring lately.
Of, price target hikes, analysts are getting more bullish
Sick
there.
of work.
BBBY bumped to 305. Barclays.
Oh yeah, that's Scar. That's pretty sick. Is that carbon fiber? Is that exposed carbon on it?
DBS at 260, Goldman at 250. So they're all on the buy camp. On the equal weight side, Wells Fargo's at
it looks
now
like it though.
240.
Yeah, that's
so
pretty cool.
Definitely, you know,
It's like a power yacht.
Morgan
Those
Stanley
are
did come out with a
those are
note,
more about
though.
speed
They're in
and.
the equal weight camp. They say we confess that full details on the
Yeah, these are expensive just because the powertrain on these are crazy to move that much weight, that much drag.
They commended management for being more
that speed.
nimble in reaction to what they call a tricky peak
Maximum
season,
speed
but they say it remains to be
1.98
seen
knots.
how
What?
much of this was a pull forward of seasonal
true.
cost actions from fiscal Q4.
Cruising speed's
So
18 knots. Yeah, it's
definitely
fast.
A bit more of a cautious tone from Morgan
Fast for a
Stanley,
huge
but
boat
overall,
like that.
definitely analysts
That
are
it?
more bullish in terms of
Like
how
that.
far FedEx's stock price can go.
Yeah, and all you have to do on those conference calls is start talking about efficiencies
the solar cat
and
is-
cost cutting.
It's filled with solar panels,
investors out
as well
there.
as
Stock is definitely up to the upside. All
even
right,
the
thanks to Caroline
propellers.
Wood, senior markets correspondent here on the network, breaking
You can
down
generate power when
FedEx
you're
post-earnings.
cruising
Now
because it's
let's
going to have
bring
a
in
sail
Joe
probably
Mazzola,
too or a
Director of
kite.
Trading and Education at
So
Charles Schwab.
it should
Joe,
be
I wanna
totally
get your,
self-sustainable.
Your take here on the equity
Definitely
markets, the roller
parked,
coaster that we've seen this
but
week,
even with some
the
traveling,
fall, the steep fall in yields that
you
we're
should be able to
seeing. I think,
go.
the 10 years down about
Depends on how sunny it is, but you should be able to go like 2 or 3 knots, pretty much
this
unlimited.
week. Your thoughts here on the markets?
There's a move up out of the barcode on BBBY.
You know, the markets are repricing in.
Like GTA, yeah, it's like the yacht in GTA. That's right.
The markets are basically now saying that this idea of a soft landing is completely off the table.
This is kind of happening at the same time as SPY, which I don't know, might be related, maybe not.
I think that that's still something to kind of keep an eye on, but. I mean, just look at what
I'm
the
sure they're
Fed
trading
Watch tool
cans
has
of
done
soup,
in the last couple of
fresh
weeks. I mean,
lobster.
it wasn't that long ago that we were pricing in an 80% chance of a 50 basis point hike, and now we're at 68% chance of a 25
Solar,
basis
yeah,
point
solar.
hike, 32% chance of no
So it's
move.
basically filled with
That's on the
solar.
back of, what came out
There's
of the
quite a few of them
ECB,
now.
where they had a 50 basis point
Powertrain maybe with
hike.
hydrogen
A
even,
little bit slower to the game in Europe.
depending
They
on
have, they saw February
when
CPI
you'd get it.
0.8%. Annualized
This one,
inflation,
this is
8.5%
also.
year-over-year.
These are all solar, or no, sorry, these all the handrails, the side of the handrails. These actually fold out. This whole corrugated thing folds out flat. When you're docked or parked or whatever, it becomes a roof. And then I think this is solar also. Then this whole roof is solar, and then these sides are solar, and the roof on that is all solar.
The idea of maybe a 25 basis point hike next week, and then
yeah, I like these like wings that open up though. It's kind of sick. And then I think some of them they have a deck that like folds out.
Thought, Joe, because yesterday
Also,
when the ECB,
this is just one of the ones. I like this one though because the pontoon design. It's got the old like World War II style. I can't remember what it's called, but these basically just crush it through the waves. They're way more stable.
Global economy here, Alex. But is that the game plan for the Fed next week? That Powell should just do the quarter basis point and then be dovish on his call because maybe he has to be.
Well, to meet
Burl?
market expectations, as Joe is saying, I think that's probably going to be the play. You're going to have to see
That one is
the
called.
words start to meet with the market's pricing.
look it
The
up, but I
market's
can't
pricing
remember.
in cuts
It's got
to
kind of
go
a weird
through the
name.
end of the year.
Yeah.
Do we get those or not?
Yeah.
Time will tell. But
Irvington?
if the words don't start steering there, it's going to have a meeting
Factory,
with
huh?
market expectations,
Uh-oh.
finding those words or those
Hey,
actions.
made
But
to
I
the
will
big
say,
leagues.
From watching the Fed over the last few years, particularly under Jerome Powell and under Janet Yellen before that, they tend to move on a methodical path, regardless if they say they're data dependent or not, and they try to steer it like a cruise ship, not to disrupt the market participants along the way. They try to be transparent, and their plans to kind of hit that off ramp, if you will, or to dock the boat take a while. They try to lay the groundwork for that over a multi-month time horizon. So you saw it with the inflation is transitory narrative. I don't believe that they actually thought that the last few meetings they were saying it, but they had to ease out of that, not to quickly over adjust and to adjust to things. Some points they move a little bit slow. And so the one exception to that has been when something breaks in the financial system, or the feeling that something's about to break in the financial system, and they have not been hesitant to slash rates to zero or whatever it may be to stimulate the economy or backstop the financial system. And so I'm not saying that we're there, but what I'm saying is if you're looking for the exception for where they completely disregard their path that they've been on and they quickly adjust, it's been to save things, not to stop inflation.
Yeah. Still probably some work to do, and I think the OECD did say that the global economy should continue with their rate hikes at this point because inflation hasn't been taken care of. But Joe, if you look at some of the data that came out today, one that stuck out to me, industrial production came in a little bit lower than expected. U.S. leading indicators.
How far will fall? I don't know how far it'll fall. There's gaps. There's lots of gaps to fill down here.
That the University
It's
of
been
Michigan
strong.
number on this prelim data point
This is the coal
wasn't
factory,
actually
right?
lower because of everything that's happened in the last
Interesting how this thing's
7
held
to
up so
10
well.
days.
No idea how far it'll fall, but yeah, it's got this little head and shoulders up here.
remember,
You've
though,
got the
it's
bearish
the lowest
MACD.
since December. So I mean,
It's bounced the last few days,
think
but
my biggest take out of that
still in
was
a downtrend.
expectations for future inflation have come down dramatically, and I think that helps Powell make the case to
Yeah,
the
it'll
25
keep falling
basis
until
points and
it doesn't, I guess.
stall or
It'll finds buyers.
That to me,
185 is going to be a pretty big support, probably.
when you look at expectations,
Even
for
look at
future,
the
not only
volume on
not
it.
only the inflation rate, but also just conditions.
Yeah, so as you see, there's kind of a gap here in volume. That's where your gap fill is going to be. So
and I think that
getting down here, if it breaks that, then probably get a gap
does give
fill.
him, like I said, a little bit more cover to kind of pull back. Going back to what you guys were talking about, 25
Sure.
basis points, 0 basis points, whatever it might be next week. Boy, that language is going to be critical because what the Fed does not want to do is say, well, we are not raising rates this week because of concern of financial conditions. Because what will that do? That'll make financial conditions even
GME is
tighter.
moving up here a touch, SPY as well.
See a pretty steep sell-off in the equity markets. You're already starting to see credit spreads start to widen, and they're moving. And then expectations, as you guys talked about, expectations for the terminal rate or the terminal value of interest rates at the
Sure
at the
thing,
end of the
sure
year,
thanks,
they
man.
move dramatically. We talk about it. We talk about volatility in the equity markets. That's nothing compared to the volatility you're seeing in the fixed income markets right now. We are seeing some of the swings in the fixed income markets that we have not seen in a long time in terms of.
I want to do the loop in that boat.
And what you're seeing on those yields. So, yeah, keep your seatbelt on. It's a bit of a bumpy ride.
Yeah, definitely.
Yeah.
The bond market's kind of directing the overall equity market at this point. Joe mentioned the slide in yields that we've seen. I mean, the 2-year was above 5%, now at 3.9% in basically 8 days. That is, to Joe's point, crazy. I mean, I've been following the bond markets for years, big here in Chicago. Those are major moves, Alex.
Oh, the bonds. Yeah, the bonds expired today too, I think.
To think that the Fed has this tremendous influence.
I don't know if it's taken.
The market ultimately moves.
But you're welcome
And the
to
2-year,
name it that, I
yield, Every
think.
time they've traded below Fed funds rates, the tightening's been over every single time since except for one in 1978. And ironically, at that time there was inflation.
I think your
pressure.
names
So
can be the
if you're
same as
looking
long as
for that
it's
exception that could be the mirror of now. Maybe you could
wherever
point
it's
to that,
located,
but
right? Wherever it's from.
everything's saying that the Fed's going
You
to
can't be in
have
the
to
same,
take this off-ramp.
I don't
Will
know,
they?
city, county,
Only time's going to
and have the
say,
same name, but I think
start
I think
looking
names
at
are
this, and
have
you
the same
to start
names.
thinking about it from a logical standpoint.
Favorite
The
GME hype
biggest
video?
takeaway, this has been the theme of the year from my
Video
perception
269.
of the markets. Is
Watch
it's
an
always
old
been a catch-22.
GME hype video?
Even if they take
Dang,
that
dude.
off-ramp, even if the tightening is over, it's because it had to be. And that reason isn't a good thing. And so just because maybe
Thanks
you
for your
see
likes today, guys. You've
potential liquidity
supported
coming into the market,
well.
it's because that liquidity was
Your new
needed
members
by the market. It doesn't necessarily mean that
and the
market
donos.
is
Yeah, there's
suddenly gonna have
still
easy money and go straight to all-time
there's
highs.
still
So it's gonna be a catch-22.
3 members that are unclaimed.
It's going to be an interesting next few months, I think.
I believe
Joe,
short
real quick, I wanted to
Fridays.
get your
Whoever's in
take
here is listening. If you want a
just
free membership,
the push into big
it's
tech
there.
this past
It's
week,
there
even
waiting to
though
be
we've seen
claimed.
a roller coaster everywhere else
Out
in
of
this
office.
market. The move into big tech, it's almost like investors and traders are using, you know, Apple and Meta platforms, NVIDIA as, you know, basically backstops and maybe safety plays. I don't know.
Yeah, no, that would be my assessment too, Tom. I think there's.
I guess you'd have to scroll way up to find it. What? That seems broken.
For yields coming in at the back end of the year, I mean, even as much as they come
Doesn't seem right. You really have to go all the way to where it is.
Support that tech case, right? Because last year we saw
scroll up, Sweet Lou, and find the post.
Rapid rise in rates. So
it's gonna be a big green box. It's gonna be the gifted memberships.
But I think you're right. I think a lot of it has to do with. It's interesting.
That's crazy. It's on a time frame.
Quality, but when you're looking at some of the
cash the Hudson River,
some of the
yeah, I'm not gonna have mine
investors a little
named out of there or ported out of there or docked or whatever. It'll be registered in New York. The Port of Origin registering these unique names and signs. Yeah, but you can have the same name as someone in another
communication services. You look at IT, you
other
look at
port,
healthcare.
Right?
They're clearly outperforming, and I think a lot of that has to do with the fact that
you're on a phone app.
That once again have that free cash
maybe
flow
hide
and
chat.
that have the balance sheets
See if
that
it's
are attracting investors
popping up anywhere.
Yeah, and
that's Ace don't.
Yields is definitely helping.
There, hit that.
We talked about that ad nauseum.
Thank you, Ace. Now, I'm curious. Actually, people don't claim it.
The Nasdaq, but now reversing.
Is it still?
Right. Let's take a quick break
is it still the same, or does it have to be claimed? That is actually something I'm interested about. Take a look on the back end to find out. Thank you, Ace. He just gifted 5 more subs.
Coming right back.
You legend. Right there, Sweet Lou. Click on the green box. Don't make that in vain. You too, Access. Right into the top chat, yeah. I didn't.
The ego on you.
There you go. Sweet Lou became a member. You can thank Ace, Papa Ace.
Papa Ace.
Papa Ace. Okay. Yeah, I see it under top chat, but maybe there weren't any left. I think there were though, because it tells me how many new members, and there weren't 6 new members from this morning.
The ego on you.
There you go, all these new members. Well done, Ace. It worked. You can claim it too, CHOB. I love George. You have the same name. Yeah, I thought so, because I feel like I've seen the same name on boats before. There you go, renew. Nice, well done. Trey's got a membership from Ace. Well done.
The ego on you. The ego on you.
Here's Ace's response when people can't find the link, or they're too lazy to scroll up. About 5 more. Great, got him. There you go. How you claim? Click on the green box up on chat. Hit
the ego
receive or accept gift. Now we're all green, not friends. That's true. Chat. I've never been into a stream where everybody was a member, but Ace, I think you've pretty much done it here. Morning, Tasty. How weird for people that are new here today. Like, what the heck? Every single person is a member. Doing the Lord's work for sure. Spy chopping around here. Kind of hit that resistance from earlier. Coming down. We'll see if it bounces here, and then we'll have a little inverted head and shoulders on the 5-minute. It'll be bullish. If it breaks through here, though, have to see what happens down here. If it bottoms and bounces, or if we flush. I'm not trading it today. I'm out of margin. Daisy Jane. While gardening, nice. Thank you, Daisy. Appreciate it. Yeah, have a good weekend. Enjoy the garden, man. That's awesome. Barefoot in the garden, toesies in the dirt. Ace is a gentleman and a scholar, indeed. Moderators of the members. He is a handsome man.
Corporations, and especially other tech companies, and every company across the across the wide spectrum is talking about spending on AI, and they own about 95% of the market for their graphics processors, coming up with that. So what's your take here? And you got an example trade for us also.
That they're pounding the pavement with right now, right? Is the AI. I mean, look, I think there's a belief that the chip glut that we saw in 2020 and 2022 is starting to kind of unwind a little bit, and there's going to be demand in 2023, especially for the high speed processors that are needed for AI. And as you mentioned, Tom, that is something where NVIDIA really is a market leader at that point. You got two upgrades today. You saw the upgrade from Morgan Stanley and Citigroup, both taking the targets up around 300 to 305. I think what is interesting about this stock is the fact that it's up 80% on the year and really up 15% or so this week. Is that as I think Alex covered the majority of it, is that there is this rotation back into what could be the market leaders in a new interest rate regime. And let's not forget, I mean, this stock sold off dramatically last year, so it's basically back to where it was about a year ago, and a lot of that came from January just through through mid-March. So you've seen a lot of that movement already. NVIDIA came, they raised their guidance, and they said, even though that guidance was a significant reduction from last year, it was much stronger than what it had managed in the last couple quarters. So what's interesting about this name to me is what you need to
This is remember just more girlfriend. Yikes, Javier. I mean, that just got real personal and escalated quickly.
I got to be honest with you.
You have to click the green box, Ace Ventura green box on chat, and hit receive gift or accept gift. I think your YouTube account has to be linked with a Gmail or a Google account.
Those nice gains this year by owning the shares. One of the things to consider,
yeah, I think there's more. The box is still there.
Would be taking advantage of almost like a stock replacement strategy at this point.
To enable gifting, I think you just click on the box and hit enable gifting, or the three dots.
For you guys today, it's the
enable gifting.
April 21 versus the March
accept gifting.
April 14th expiration versus the March 31st expiration. Buying the April 250 and selling the March 270. It's basically a version of like a covered call.
Interesting.
Don't own those 100
15
shares.
bailouts.
You're kind of
I can report them. Oh, BBBY moved up. Look at you. Oh, look at you. No one called that movie.
This, as opposed to owning some of those shares right now, it's just because of the move that it has.
I'm
not making a case on valuation, or I'm not making a case on whether or not I think it's going up or down.
So another part of the movie says, "Oh, it's a yacht."
8% appreciation, and you're looking
same
for
guy that always
some
says,
risk management techniques
"Wow."
As a share owner.
But this was a different part of the movie. This guy's being interviewed. Tell me about this boat.
Some of those shares off the table and potentially, replicating something like a cover call strategy with this long diagonal. Basically, what this does is if you can do this for somewhere along the lines of
Bring the Zor ball. All right, Nate
$14 or
Dogg.
so, instead of having $260
BBY is
per share,
almost flat on the day. There it is. Break even, $1.06.
100 shares at risk.
Bailouts
You
are for the
reduce
rich.
some of that risk by
How
taking
true
this
that
down
is.
to the debit price that you're paying. And I think we're looking at about $14 debit here. So that's what's at risk, right? It's debit that you're paying on this long call diagonal. It puts your break even around 250.
What we got here, Bed Bath? What do you got for us?
In terms of where that break even would be. So if the stock continues to go up, the risk that you have initially will be that 270
Got a
call
good spot.
that you're
Maybe.
short. You would have
Owen
to
Wilson.
hold that if it's up
Yes.
above 270.
Owen Wilson's the one that always
towards
says,
the end of
wow.
March. But it allows you to continue to play
He's in that
some
movie
upside while you're
with that
taking
guy
some of that long
that says,
share risk
"It's a yacht."
Off the table. And that's the way that this
Yeah,
trade is constructed.
you've got a lot of
less
clues
capital
now.
intensive here, Joe, on the call diagonal. Let's break it down. Buying the April 14th weekly 250 strike call. That's in the money by about $8. That's got about a 62 delta, so it reacts more like the stock, almost like that stock replacement you mentioned. And then selling the near term March 31st weekly 270 strike
moving up.
call.
This could
So
kind of be an inverted head and shoulders already. The shoulder's a little higher, but maybe some calls.
$14
some crazy quad witching rally.
Risk. Just over $1,400 per spread on this one. Joe mentioned, Alex, the
breakout. Let's see
just
it.
above 256 on this one, but it's got the high delta, takes advantage of a move higher. But even if the stock kind of stays here, you can potentially remain profitable on this type of trade.
Yeah, and I think there's a couple of really
call.
important takeaways from what Joe laid
all my
out
day
as well
trades
as,
for next
yourself,
week.
Tom. One is Joe kind of joked at the front saying, this
Disney
is one
movie?
that sort of had his number, and sometimes that's the
Wilson?
case.
I love
Be it
Owen
Joe,
Wilson,
be
though.
it me, be it you, be it anyone at
That's
home.
hilarious.
This is just a trade illustration using
Broken nose guy.
NVIDIA as sort of the vehicle to talk
Yep.
about it. And I think that there's a lot of really good lessons with this type of trade. One, risk definition. Two, kind of strategic use of leverage. I like to refer to it as capital efficiency. And he talked about the $25,000 or so dollars that it may cost to do a covered call. Well, this one closer to $1,400, $1,500. Obviously, that's comparable in sort of upside, but far different in one downside. But time that's the amount of capital that's set aside during that time that you're in this type of a trade. But in a name like NVIDIA that has sort of got that macro narrative building up around it, its ties to AI, calls for the semiconductor bottom, there's a lot of optimism brewing in this name. And you're starting to see the skew where calls and puts are trading pretty flat. It could be the time to utilize some of that call premium against, be it long shares, a different call like this one uses in a longer dated expiration. I think that the logic is sound. I think it's a really interesting trade.
Yeah, good look at stock replacement type of call diagonal on this one. You do have some assignment risk on that short March 31st weekly 270 strike call
Sort of
into
on that
expiration over the next 14 days
Goes
on that
behind.
one. You've got 28 days until the April 14th weekly series that you're long on those 250 strike calls. Thanks to Joe Mazzola, Director of Trading Education at Charles
almost
Schwab,
break
helping
even.
us break down markets and that example trade there in NVIDIA. But coming up after the break, Alex and I will
Last
be
Friday,
joined
we
by
had, what,
Landon
like an 8%
Swan from
rally?
Portfolio for a discussion on Square.
Oh, that's why I'm like, why are you
Today,
upset?
it's still up solidly on the year.
Hey.
Stick around, Fast Markets coming right back.
Jeez, man. Wrath, click the box, man. Get your free membership. T-Dub got it. Thanks, Ace. I was like, what? What's going on with you and Wrath? Appreciate it.
The ego on you.
I'm sure T-Dub appreciates it also. Don't you, T-Dub? Don't you? Then tell him. Yeah. Express your gratitude. That's right. T-Dub. Did you pick that name after you watched that Seinfeld episode? Call me T-Bone. T-Bone. I don't even know who's that one for. What AMC's doing? First and last. Yeah, sure. Ace, thank you. Thank you, Ace. He gifted one more membership, so that's probably for you, Big Hugs. You better figure out how to click that where he goes wild and just starts putting too many out there to force you to do it. My call's it's up. We popped, broke that resistance, and now we're invert head and shouldering the upside. That is neat. GME is getting a move up here. I'm assuming that's for Big Hugs. Or no, that's for Wrath. Wrath Wizard, you've been gifted a membership. You should accept it. Don't be mean. Close this call now?
The ego on you.
Dave Mounts got it. Hi, Dave Mounts. Pull all these lurkers out from the woodwork. I love it. Force them to talk, and if they don't talk, they should feel bad. Oh yeah, you wanted to talk about AMC. Yeah, I thought those were converging, AMC and Ape. Just wasn't. I thought the ticker and everything was going to converge. Has that not happened yet? What were you wondering about it? Just its price? Jump to conclusions. Yeah, I might close this call. I mean, I got the pop. Like, probably keep ripping, but I don't know. I got it at the money, so it's not gonna lose too much as long as it stays the money. That wick, though. Dave, hello. GME also just wicking. Looks like another stock I know.
They don't all go in the same direction, especially happiness. Usually it kind of goes the different way, because if you're losing customers, you're retaining your happy ones. But this is not the case with Cash App. When you look at the company overall, you can see the chart here. It's kind of, you know, just kind of moving along. It's down a little bit recently. No big runs. I mean, it had a couple of big spikes there in April, and then a little bit earlier a couple years ago, but nothing that would really get you excited as an investor on a purchase intent basis. But again, this is the whole company combining Square and Cash App. But overall, I think that, you know, they're in a place right now. The stock's at about what, 73 or so, and over the last several months,
Good
about
job,
9
Dave.
to 10
Don't
months,
lose the place to
stock
lurk.
has just
Smart
bounced
man.
between 50 and 90.
Holy crap!
So
That spike call's now almost back to break even
halfway,
now.
a little bit
just from
higher than
that.
halfway between
Well, now I just have to
between
hold
the
it.
low and the high end of that range. So I think that the story here is that Square is doing
Crazy
well.
wick up to the
Cash
50
App is
moving
losing
average.
steam significantly.
I think it'll keep
Venmo.
going though.
And so, what will investors make of that? But that's kind of what
I
the
bet we'll
data is
retrace
showing
at
me
least
right now.
Yeah, and we got to make that clarification. This is called Block now, Alex, not Square, but we're used to it being called Square, but they changed the name. But you got a question for Landon here.
Yeah, and I think obviously the block illustrates the hitching of the wagon to the crypto stuff, which of course
69
helped
users.
when it was going well, and it's
Boys.
probably been a hindrance since it hasn't been the
Also
brightest
Johnny
part of
for
the
the
market.
combo.
But Landon, my question to you is that you said the general company seems to be
Oh,
kind
that's
of trying
right. I heard there
along
was a
okay,
lawsuit
but
about that.
in general,
Crazy.
purchase intent mentions are just
What kind of
sort of
breakout is that?
meandering and down quite
Also,
substantially
I
compared to
take
its
it.
peers. The overall stock price looks like basically any tech stock that had a huge boost post-pandemic, and it's come back down. In this case, actually lower than pre-pandemic levels. But my question to you is, what is there to be excited about here? The company pitched all the future kind of DeFi stuff and the digital currency stuff and the crypto and all that, but the market wants nothing to do with that. Now, I don't think they're in the metaverse or any of that stuff, so they got that working for it. But what's the optimism?
It's too bad. This looks like it's a false
is
breakout
this
now.
optimism from the
Or an
CEO
engulfing
going to
candle,
direct us?
too.
Because I can't see it in the data.
Yeah, I gotta agree with you. I think that
What
all that
happens
stuff you
at 3
mentioned with
minutes?
the DeFi and the crypto, I think that is a very strong point for this company, but I think it's like 5 years out, honestly. I mean, we need to see a really big run in crypto. You got to have Bitcoin in the 6 digits.
Higher highs,
before
higher
you
lows.
start, really impacting
SPY's
something
gonna
like this.
rally next
and
couple
so
weeks, maybe.
I don't think it's Cash App. That's what it used to be. That used to be a lot of the driver for our data, showing that there's a lot of excitement. Getting a ton of small accounts was the appeal. And as we talked about, Venmo is really just kicking their butt right now. I mean, it's surprising to see how much better Venmo is doing. They're taking market share away. They're growing. Cash App is either shrinking or growing less quickly. And you can actually see a 2-year comparison here. So this pie chart on the left is right now 2 years ago, and you'll see that Venmo compared to Cash App was about 1/3. Cash App was about 2/3. Fast forward to now, 2 years later, and the roles have basically flipped. It's not quite at 2/3 Venmo. It's at 60-40 instead of 2/3, but it's very close. So Venmo has completely surpassed Cash App when it comes to what people are talking about and how they're being used. And I think a lot of that has to do with their ability to get accepted in more places. I mean, you can now check out on Amazon using Venmo, whereas Cash Apps, I think a lot of their claim to fame was, you could direct deposit your
Check out on
stimulus
Amazon
or your
with Venmo?
tax refunds, but there's hopefully no more stimulus, and I think tax refunds are smaller. So that's those were one-time things where everybody shops on Amazon, every week. So Venmo's doing a better job of getting out there and getting supported, and I think it
Credit
shows.
Suisse
I mean,
CFO
PayPal
team's been
overall is
called up
doing
to
better
work
than
over the
Block
weekend
as a company.
to clean
They
out
have
their
higher
desks.
happiness, their purchase intent is doing better, and it's the two apps themselves, Venmo for PayPal doing much better.
I don't know the
and
source
Cash
for
App
that.
For Block doing worse. I think that their core business, Square, is chugging along. I
mean,
think
is there
it's strong.
much
I think it's
left
a good company,
on the
it's a
bone
good
here?
brand, but I don't think it's
Credit-
going to
Credit
warrant
Suisse to
any
even make a
really
play?
large tech multiples that you have seen in the past, because I think a lot of people were counting on Cash App to take it to that next level, and frankly, I think it's losing steam.
Yeah, and we've seen the stock move up by 18% this year. I mean, you probably throw
Maybe
a
it's pretty
comparison
high.
on top of Bitcoin, which is rallying.
Got some movement. Yeah, there you go, BBY, 1.8% to the
That we've
upside.
seen from
Broke
Cash
the
App,
high, I think, on the day?
to Venmo over the
No.
last basically 2
Highs
years.
up here,
according to your data.
109.
Pretty substantial here. With that in mind,
From sources familiar
Landon,
with
we
the
don't
matter.
have earnings
Yeah, I didn't
until
see
the
any
beginning of
sources.
May on this one. Is your data still reflective? Like if you did have an earnings score, it continues to deteriorate?
Yes, it does. So right now we're looking at a -49, which is a pretty strong bearish score. It's not like hammer the puts or anything, but if they were reporting, we would definitely be on the bearish side. And again, it's a tale of two brands. It's really the Cash App brand failing, or not failing, but just falling behind Venmo, whereas the core brand of Square is actually doing well. So I think it really just depends on the volume of those.
I think
two
inflation
compared to each other
will
and
come
what
down.
investors care
It'll
about.
keep
In
coming
my
down, even
mind,
though
Cash App was the
that's bailing out
story
banks.
of how they can achieve these really high
That's an
multiples
engulfing
and
candle
really
up
fast
there.
growth,
Bugger.
whereas Square was a little bit slower. So if that's the case, I think investors could be disappointed.
Oh boy, minus
Jeez.
49 on that.
Depends
a
on-
little bit
depends on the
negative
administration,
there,
though. I mean,
for Block
we have in
here.
there.
Great stuff as always, Landon. Have a great weekend.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data.
Stop looking at me,
on
Schwan.
Square/Block here. Alex, pretty negative as far as the data goes. How do you want to set this up for an example trade?
Yeah, so say you follow that line of thinking and you're bearish
Yeah,
in your own conviction. I looked at an example trade that would benefit from a downwards move in
Volume
Block,
on BBBY.
ticker SQ.
Gets little pops when it
in
rallies,
this
of
particular
course.
case, we're just looking at a butterfly, but it is skewed slightly in its construction in order
not
to
unusual. It's,
eliminate that downside risk theoretically.
Maybe
here.
less than
You want a
yesterday
bearish
so
trade.
far.
You don't want to be
But end of
put in
day
a
we could get some
situation where it
volume
goes down
spikes
too
for
far,
sure.
You end up giving back and end up
Or
losing
anytime,
on that
really.
trade. And so I wanted to structure something again, no downside risk
Not like
theoretically.
consistent
and that's what
volume
we've
on it, you
done.
know?
Going out to the April expiration, buying one of the 75 puts, Tom, selling two of the 67.5 strike puts, and then defining the risk and profitability here by buying that 65 put. So $7.50 wide debit spread being bought, only a $2.50 wide credit spread being sold. So it's done for a debit, $250, but because of that price, because of how it's structured, this one just levels off to the downside instead of having risk to the downside. Best case scenario is a move to the short strikes. If you sort of drew a trend line, I'm not a big technicals guy, but if you drew a trend line in some of the recent price action, that's where I got that 67.5 area being the best case scenario. If we kind of retest the series of higher lows, it would kind of target around
true. I guess that's a possibility.
At a $250 debit though, Tom, $250 in risk plus the transaction fees. Break even would be 72.5, and that risk occurs.
Turn your computer off, and the earnings will be
and stays above
lickety split before you know it.
All these options expire worthless.
Yeah, let's break this down. We've got the price about 240 on it. It's come in a little bit, and you can see that from the risk profile. Buying one of the April 75 puts, selling two of the 67.5 strike puts, buying one of the 65. If you pay 240, as Alex mentioned, that's your risk on it. Break even 72.60.
Average 10 days, 51 million.
Below 65 is still profitable. About a double on this one also. And that's why Alex looked at this as an unbalanced put butterfly to the downside. But a good look based on what we're seeing on a Likefolio as far as some weakening data that they've seen as PayPal continues to dig into their market share on Cash App on this one. But an unbalanced put butterfly to the downside. If you think that over the next 35 days we're going to continue to see some weakness down towards that 67.5 level where you sold two of the options in that strategy. All right, good look at the put butterfly there. But coming up after the break, Alex and I are going to take a look at Google parent Alphabet,
Your mistakes.
which is up about 12% so far just this week. Fast Market's coming right back.
Yeah, I might jump out of these calls, dude. I don't know. I don't want to wait for this. I like that engulfing handle. Basically break even on them. GME coming down there a little bit. Gotta sell those dailies really fast, especially if you get like a little breakout. Yep, I mean, this wouldn't be the time I'd sell GME at least. We break through this low and then don't get a divergence on the RSI, then I would. Price would be lower than now, but this is a nice double bottom that's forming, and at, you know, multi-year lows, so it wants to go up. And earnings could definitely do that. Breakout by Swing Out Sister. Never heard that one, I don't think.
Still lower by about 0.5%, but again, this is a market that's coming to grips with just an enormous amount of information this week. I think the one thing to point to is just how inflation data seemed to ease a little bit, right? Some of the numbers that we watched didn't really feed into the Fed raising at the rate that we had seen or expected them to, and then obviously the disruption from the banks and the bank collapse ultimately sort of feeds into that narrative as well. So just keeping an eye on the market, again, at 3,900 in the middle of the range that we established basically since May of last year. You know, I've been harping on that 43 to 35 upper and lower extreme. So here we are again, comfortable at this level.
Yeah, crude oil, Ben, was up earlier. Nearly $70 a barrel now, just below $67.
I'm looking at this
barrel.
1.5.
Continues to be under pressure.
I do need to roll it, which I probably will.
So far this
So I
week,
can roll to next week
levels that we
for
haven't seen since
5 cent credit,
December
maybe.
of 21.
Yeah, what a breakdown
Same
there,
strike.
right there. The chart says it all, Tom.
I can't really roll it down. I struck to
lows
1.
today,
Unless I'm
65.38,
gonna go
rallied
way
back
out in
up to
time.
67.37, but you can see we're still down on the day by about 2.5%.
Depending on how bullish the
trading
chart
around
looks, I could just let this go and get the
but,
shares.
You know, I think a big part of this, you can just really speak to the fact that
It's $268 in credit for another week. That's
when you get this kind
reducing
of a disruption,
basically
Tom, you see
the
demand
cost average on
destruction
those shares.
ultimately, and I think that's
I'd
what's
let them
playing
get
out here.
assigned.
In addition to, you know, the dollar, which, well, for the most part, firmed up a bit this week, so I think that weighed down a little bit. But that was a real technical breach, right, of the $70
Yes,
level.
I rejected that little
from the
breakout.
IEA and OPEC, so it gives us something to keep
Oh,
an
the
eye
dollar's
on
been dropping.
next week. Again, in theory, right, lower crude prices kind of eases some of that
Market
inflation
didn't really rally a
concerns,
whole
but
lot from
ultimately
that
it does feed into
drop on the
weaker
dollar.
economic growth, slower economy, and less demand, which may not necessarily be a good thing.
Yeah, it's a good thing for gas prices, that's for sure, Ben, and inflationary pressures. But we'll have to wait on some more inflation data. CPI got a few weeks until that next number. All right, thanks to Ben Lichtenstein, host of the Future Show here, breaking down the equity markets and crude oil.
There's
But now let's
people
bring
trading
in
it. There's
George
algos
Tillis,
trading it.
markets correspondent here
They
on
train the
network. We're
algos to
talking
trade off
Google
of,
Alphabet here, George.
moves that,
Stocks had a pretty good run,
you know, from people.
so far this year, up about 15%. They're just raising prices on their YouTube TV.
It works on
what's
anything.
your thoughts here on Google
Stocks, bonds, futures.
Well, I think the price action is very impressive. You have to think about Alphabet or Google. Doesn't rely on funding from regional banks. That's for sure. And I think that's
not perfect. I
speaks
mean,
to,
there's going to be
one of
fails.
the reasons why this company is doing
But
very
it's
well. I
probabilities.
think the nature of mega cap technology in this environment is also faring very well because we're still in a situation where growth in the economy
to combine it with risk management and doesn't do what you're expecting based on the
tech companies. So we know
your
Google's
technical
very
analysis, then
profitable. It's got a
you have to know when to cut and how quick to cut.
Now, if you
Kill
look
losers
at the
quickly.
report last quarter, the
Best
company
traders
missed
are
both
good
on
losers.
sales and earnings, with earnings down 29% year over year, and that's to be expected because we saw deceleration in ad spending.
Cut being formed here on
and that's effectively where
BBBY.
Google generates about 85% of their sales
like
in both
5
search
minute
and
though for cup and
advertising.
handles.
But sales are actually higher by 1%.
Coinbase is
And
up
if you look at the
8%.
categories in which the sales grew, it was
Yeah,
in
are
all
these going because
categories,
the
everything from
banks are
search
going
ad,
down? People are thinking they're going to start using
YouTube
crypto
ads,
more?
Cloud and services, as well as Google Networks. So
I saw Mara up
I think
here
the
also.
company's well positioned in this environment.
Mara's up
because it is
5%.
a mega cap company. It's basically still has an effective monopoly in search. And BNP Paribas also today upgraded the stock, and they maintain $123 price target on the name because of the fact that they see durable competitive advantage. The company is extremely profitable. It's had a challenging year over the last 52 weeks, and that's to be expected, like I said, because of search ad and ad spending, which was down. But going forward, the company's still got that monopoly position. The challenges from OpenAI just don't necessarily manifest into competitive disadvantages at the moment. And this is essentially a company that has extremely large operating cash flow at about 30% of sales, and that is very meaningful. So it's a company that doesn't necessarily have to find ways to cut or reduce costs, much like Meta Platforms has in the last year or so. And I think Google's well positioned on a forward basis because of what's happening with volatility in the markets, and it's a stable place to hide out.
George, I'd first like to apologize to all YouTube TV subscribers. I just became a first-time subscriber of YouTube TV like 4 days ago, so I must have been the bad luck that got those prices higher. But jokes aside, we were describing these kind of companies that have had capital sort of flock to them as almost safe haven assets, or they perform sort of like that. Alphabet, to me, seems to be the one that checks all those boxes of things that it's perceived to be what investors are looking for. Strong capital positions, as you described. Very strong, if not monopoly-like positions within their markets. And then it doesn't hurt the fact that this stock lost 35% of its value over the last year, and it's no longer perceived as super high valuation. Any thoughts to how the macro environment could now play into appetite for risk in this name?
Well, I think the macro environment has really hit the stock in the last year. I think on a forward basis, things look like they're improving. I'm not just saying that just anecdotally. I'm just looking at the earnings profile. Now, the $1.05 last quarter is now going to be exceeded based on next quarter's estimates at $1.09. So on a forward basis, all the estimates in the next 4 quarters are below last year, and that's conservative guidance. But the stock price has also reflected that, being down close to 30% over the last year. I think if you look at the forward earnings profile relative to the multiple, it's trading around 19 times forward earnings, and it has a 21% net income margin. So any growth on a forward basis, which there is estimated for Google on a conservative clip, will manifest in a positive price action. And that's just based on theory, and it's also based upon the mechanics of discount present value of future assets. So I think this is a situation where you have to look at this as a defensive technology names, a mega cap powerhouse. And I think that's what the market is telling us with movement in companies like Google. Look at Microsoft this week as well, AMD, NVIDIA. These are powerhouse-based companies, and I think that they're places where people know they have durable competitive advantages, strong earnings profile, growth going forward, and can of course navigate these tumultuous waters that we're going through right now.
And they're loving the fact that interest rates are getting hammered this week, George. I think that's playing into this narrative.
You don't like
also.
YouTube TV?
All right, thanks to George Tilla, senior markets correspondent here, helping us break down
Buy's rejecting that break.
Alphabet.
GME's coming down too. I put another order for another GME leap.
From year ago levels, Alex, but having a nice run this week, 12% gains. That's pretty solid. Your quick thoughts here on Google Alphabet.
I want exposure.
One of the things that George sort of danced around, but I think made a good point with is, let's say that OpenAI and ChatGPT really does disrupt and improve the search experience.
Time frame on GME, I think, is
this marketplace is
more certain of a
so
sooner
big,
run
and it's become
than BBY at this point.
Second nature.
But the run will probably be smaller.
You probably know how to do it with your hands when you're not even thinking about it. How quickly you can get to that. You don't even need to type it in anymore. It just starts in the search bar. So much behavior is going to have to change for a meaningful piece of that market to go somewhere else. It's going to be very, very hard to be a new entrant into this space, and the product's going to have to be substantially better, I believe, for this market to be disrupted.
Yeah, and digital ad spend, they said, starting to trough a little bit, and that's 90% of their basic revenue. But I looked at a strategy here in Google Alphabet that's going to avoid earnings. Earnings are at the end of April, so it misses that.
First Republic Bank shares plunged 25% as $30 billion rescue plan fails to soothe
What's
fears.
a strategy that may work in that type of
Biden
scenario?
asked Congress
So
to give
look at a
FDIC more
combo
authority
trade.
to
Sometimes we
fine
call this a
bankers
risk
from failed
reversal.
banks, claw back
Alex, where I'm going to
their
buy a
executive
call
pay and bar them
that's
from the
slightly out of the
industry.
money, and then I'm going to use a put to help finance the purchase of that bullish call. So going out to the April monthly cycle, 35 days till expiration, buying the 105 strike call, and then
You're talking about YouTube Red or YouTube TV?
100 strike put, which is
there
just
even
out of the
YouTube
money
Red
to the
still?
downside. You're basically
YouTube
collecting
TV
about
is like
a 46
cable,
credit
basically.
on that here or there, but that'll take your break even down to
guess there's not really
99.60
YouTube
on this
anymore,
one.
is
But
there?
Alex, this is one of those strategies that you've got to be comfortable owning the shares if the stock does fall below that 100 strike at expiration in there. You've got a lot of risk on this trade, about nearly 10 grand.
I mean, covering would cause price
to
action.
Zero. Your thoughts here? Real quick on this this combo trade that's using one neutral to bullish strategy to help finance the bullish segment of this strategy.
Yeah, I think this is a really important time to look at this risk profile. And you'll notice that there's 2 lines. One's the expiration profit and loss, and that's basically what's going to happen if you held this through expiration theoretically. But on a day-to-day basis in the secondary market, assuming there's still liquidity in this name, which is one of the most active names, I think that's probably
Still might get this head and shoulders.
It's going to perform like this purple line. Even if it's between
Right.
100
Yeah, Red's
and
like
105,
basically
and there's still
ad-free.
time to expiration,
Ad-free
this thing's
YouTube.
going to move around with the movement of the stock.
Right.
It'll perform a
TV
lot
is like
like shares
an
of stock
app.
because it has
Your
such a high
TV.
potential chance of
I
actually,
suppose you get on your
at
phone
one
or
point, if you
device
held
or
this
whatever,
through
but-
expiration, actually becoming that.
Yeah, it gives you like
almost
cable.
got
It's like
100
$50 a
delta
month or
on it
something.
because you're selling
You
a
get
put.
sports and it's cable.
Which is positive deltas, and then buying that slightly out of the money call, which is also long delta. So it reacts more like the stock. That break even below the 100 strike at 99.60, and then anything above 105 is where you want this to go. That's where you profit the most on this type of strategy. But you do have some assignment risk on that short put. into expiration over the next 35 days. All right. That's going to do it for Alex and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up with Alex hosting.
That is getting nuts, Ace. All right, thank you, Ace. Holy smokes. Are there even 5 people left that aren't members? I guess trader name, DHOB, Furs, Tainted. All you lurkers, there's free memberships waiting here for you if you want to take them. Take them by the throat and strangle them. I love his aloha wear. I forget how much he wore in that movie. It's pretty sick. Look at his wear. You get a member, Grumpkin. Congratulations. You can thank Papa Oprah Ace. Just kidding. Papa Ace is totally sufficient. Wrongly rightish. Like all these lurkers, man. You forced them to come out. Report or block. Find another green thing to click. Or click the 3 dots and enable gifting. No, I mean you can still lurk as a member. I mean you definitely are. Yeah, it doesn't change that. It's getting nuts. And I don't even have a thing for. I don't actually know how I would do that. I didn't see that as an option. I need to find it.
The ego on you. The ego on you.
Look in style, exactly. Want to spy next Monday? Maybe. We could have a big move after this OPEX. Look at the chart and see if that's. Below where it says live chat. Yeah, it's a little green icon, little Ace Ventura. Shows a little gift and then 5. Maybe the 3 dots on the chat, or clicking on the box should. So 400 on spy. Yeah, I don't think that's out of the question by next week. Yeah, if your YouTube account is not enabled with a Google account, then people are saying they couldn't do it then. You were cursed like furs.
Script up, down, and continues.
Yeah, yesterday was a massive move higher, so it doesn't, yeah, I completely agree. It doesn't feel surprising at all here to see collective weakness. But as always, we have a ton of individual movers to get through today, and actually some positive news, some movers to the upside. We'll kick things off with our upvote and downvote segment. Following that, we will chart and trade those upvotes. And our FOMO discussion today is all things Warner Brothers Discovery after receiving 2 new bulls on the street and actually holding on to a slight gain. And another
Yeah,
name that's
long trend, I'm
outperforming
definitely
on a
very
year-to-date
bearish on the
basis.
market.
Then
So,
we'll discuss Nvidia also getting a pretty hefty
and that's true. Over the
upgrade
weekend,
today
there could be
from
news that
Morgan
comes out.
Stanley. Last but not least, our under 30 name today is XPeng, which actually fell on disappointing earnings and then rallied.
Yeah, we talked Nvidia pretty extensively on Fast Market. I think it's one of the critical names in this market today, and I'm looking forward to having that conversation again. Of course, go to the EV market. We'll go overseas, look at XPeng, and then
it could have rallied price for a while.
Quietly been just a monster behind the scenes this year, so that'll be fun.
Makes me want to sell some covered calls.
Let's start as we do with upvote, downvote, not endorsements.
Need
not
another
recommendations.
Friday like last Friday.
This is a good place
a little
to start.
premium in them.
FedEx, a bright spot.
I was going to say, I think this is a good place to start because it does signal some overall optimism. As shares are up about 8% in reaction to their quarterly update when they did see, they're topped their 2023 forecasts, and they did report an improving third quarter result as ongoing efforts to cut costs helped offset some of their demand declines they saw in the quarter. They beat their earnings estimates pretty handily on soft volumes and then saw revenue that came in weaker on a year-over-year basis and did also just slightly disappoint what the street had been expecting. They did boost their full-year earnings forecast to a range between $14.60 to $15.20 a share. That was well ahead of even their prior expectations and what the street had been expecting.
Fresh
Their
meat up
CEOs,
mess.
they've continued to move with
I
urgency
think it's
to
had an
improve
effect.
efficiency, and their cost
I
actions
think
are
so.
taking
You've already,
hold, driving
you've already seen it in the
improved
last couple
outlook for their
days.
current fiscal year. They said they're on track to deliver about $4 billion worth of permanent cost reductions by the end of fiscal 2025. Management did also say FedEx is holistically adjusting to the cost base on all dimensions, and now every dollar is under scrutiny, which then did lead to the fact that
or mess
they
with
do
the algo.
expect their
Oh, I
U.S.
think it
headcount to be
helps.
down about 25,000 roles year over year by the end of their fiscal year, which occurs in May. So we saw a ton of analysts update their coverage, mostly positive. Credit Suisse was actually the only analyst I saw that lowered its price target, but
Yeah,
Stephens,
I'd like to see a few more days to see
Citigroup,
if how it
UBS,
plays out
Baird,
as far
Cowen,
as.
just to name a few that are still
But
feeling
yeah, I mean,
very
still
strongly
today
on
might.
FedEx.
And even the Credit
yeah,
Suisse
because I mean, it's not like
analyst
BBY
has
is making a big move
outperformed,
or
the price target was lowered to
something like
a
that,
price
which would
that's significantly
garner
higher
more
than
traffic.
the stock's currently trading. So even the less optimistic outlook is still optimistic, and so I think that really highlights just how impressive this report
Maybe because
was.
of quad twitching,
the
but
market
I guess most
action
people don't
speaks
really know
for
about
itself
that.
as well. Stock up 8% on the day where the overall market is sputtering here a little bit. But what I thought was fascinating was
No, you're right,
initially you
Tainted.
saw UPS
They
rally
blew up around
alongside it,
COVID
and then
and
as the
everyone just
markets
started
turned
trading
sour,
with Robinhood.
UPS actually lost all those gains, but not FedEx.
yeah.
FedEx really holding on to
The
a
cost
strong
per clicks
day.
were also crazy then,
All
of
that
course,
being
and
said, though, gonna say
that's
down
kind of
low. News
all
is
gone
out,
away
move
with
is happening.
viewership.
We'll see where it
Viewership's
ends up.
declined
Maybe
a
we'll
lot
come back
since
to this
then.
one next week.
Yeah, UPS now
But
down
yeah,
a
at the
percent.
time
I
it
was
was
also going to
finance
mention that
was
because
crazy.
options markets were pricing in a move just on FedEx's earnings, which I guess we are seeing now just to the downside. But our next name is one
Need more
I feel like that has
volume.
had
Thanks,
so
Daisy.
many issues lately with recalls. That is Ford Motor, which is down over 5% in reaction to some of their news that they got hit
I
with
want
a
to
recall
tip
of
you.
about 1.5 million vehicles.
No, I've got a
which
better
includes
idea.
Their Ford Fusion,
back.
Lincoln MKX,
It's cheaper
mid-size
entry,
cars, and their F-150
less paperwork,
pickups,
less
which are
fees.
critical because their
Yeah,
F-series of
let's do it.
vehicles are the best-selling U.S.
Do it.
vehicles collectively.
They're
Now,
highly
this is a result,
successful.
they said, of brake hose and wiper problems. Dealers will be able to replace those parts free of charge, but I saw a really interesting statistic
HMYT
that
has a
actually
great
before
ticker.
this recall, the top 12 automakers in the United States did recall about 26 million vehicles over the past year through 407 separate recalls, but the average recall affects roughly 64,000 cars.
Proterra is up
1.5
12%.
million, I mean, it's pretty substantial. It's obviously much more
I
outside
think
than
they're
the
dumb.
average recall we see from an auto company. I was reading a report that said this is actually, to put it into perspective, not that
Yikes.
big of a deal for Ford. When
Can't
you
remember.
consider
I feel like I've traded this one
Tesla
before.
has recalled about 3.8 million vehicles over the last 12 months in the U.S., over 20 separate calls. But I was actually looking back at my notes because I felt like I just discussed the F-150, their EV
So many people's
Lightning,
volume's always so
and
super
that
low.
is correct. So last week they actually announced
What do you
only
mean it's
18
volume?
vehicles being
Oh,
recalled,
like its actual
but one of their pickup
audio
trucks, their
volume?
electric pickup trucks, did catch fire, which then prompted
Funny.
that recall. So it just feels like right now they're not able to catch a good headline, Alex.
No doubt. I'm going to say upvote because this is a name that's been working its way to the
That's
downside
a
a
little
little
pipe
bit.
fancy.
And we haven't talked about a lot. And it's sort of
Surely.
transitioning from traditional, American-based manufacturing of combustion engines that are using fossil fuels to trying to be an EV player. And we'll, of course, see bumps along that road. It's had excitement in recent years, and it's lost kind of that excitement.
Okay, I've got another order for another GME leap.
In regards to the recall,
seems like a good idea to
there's varying degrees. You can
idea to load up here. I mean,
because the windshield
maybe
wiper
cut
doesn't
losses
work
if we
with
break
some
through
of these,
this low, and
or you can be recalling because the brakes aren't working.
but really
that well, and your
GME, like,
stopping
it's held
distances
up.
are increasing, which is one of the other
It has held up
reasons.
really well against the SPY.
When those are the kind of things that are needed to be fixed, that's not good. And
I mean,
can
it
say
has
that
come
those
down,
are the
but it's
things
not
that,
been crazy. This is
get that fixed in time.
This is what you would
it leads
expect
to,
with
an accident
the
or
SPY
something.
running.
Lawsuits can ensue, so you don't want to go
You know,
down
if
that
you compare
slippery
it to, like,
slope, and that's why they're
even last year, it
proactive
was a more
about this
aggressive
stuff,
sell-off
but
into this earnings.
different recall reasons or better.
So,
or worse,
seems like
and
a-
certainly
seems
things
like
that
a
can lead
great time to buy.
To accidents or crashes are obviously not the things that you want to see being recalled for.
Right, and I guess in terms of recalls, this was pretty minor, but the one concern was to me that it affects vehicles.
That being said, there's
from
BBBY up
2013 to 2018,
2.5.
So they're not EVs. Those
At
are just
today's
legacy
high
autos. So
of
this is a legacy auto
$1.09.
company. It's like, should you be having such
That ain't
massive
bad.
recalls? I don't know. But Ford has been, I mean, after seeing a banner year back in 2021, they have seen just
Eyes
collective
now
weakness. So
trying
we'll
to
dive
break
more
that
into that
upside
story
again.
coming up next with Rick. But our next name here today is
It's looking
Bumble.
good.
Now,
I mean,
Citi did start
I
coverage on
expect we
Bumble
could
with
see a
buy
pretty big
rating and
move today, like we did
$24
last
price
Friday.
target,
Like this.
saying that Bumble currently
quad
is one of
witching,
the
I think
best
it could
growth
shake
rates
things up,
in
but
the internet group, with
doesn't have to.
expected modest EBITDA margin expansion as well. They said that core Bumble app has seen continued
Like to
share
see
gain
today
in
at
the
least
online
green.
dating world.
Yesterday's
And the company's
inverted
recent
hammer is a
product launches
nice
are leading to
bullish
better
signal.
versions of their paid users as
bullish
well.
reversal.
They also said their brand
And then we do have that
message
RSI
now really
divergence,
does seem to be
albeit it's pretty
resonating
subtle.
well with younger audiences. So whatever they're putting out is clearly working. But we discussed Match
But,
just
I mean,
a
yeah,
few
this
days
thing
ago.
could move up to
Match is
$1.50
down
in,
about 13% year to
like,
date,
half
down
an
about
hour,
13%
20 minutes,
month
so.
to date, but higher this week. And when you look at Bumble's chart, they're underperforming
And then-
Match pretty
and then I
substantially
think
on a
we're
year-to-date
probably
basis. And now
confirmed
also
on
rising
a
this
low
week, but
for
also seeing this
foreseeable
weakness
future.
on a month-to-date basis. So
Doesn't have to be
while the charts
$1.50,
look
but
similar, Match has been the clear outperformer.
say a high
the
of
two.
yesterday,
Bumble
if
is
we break
just so much
yesterday's high at
smaller.
least and hold
Gonna
above
say
it,
Danavo
that
just
would
because
be
I
very
want to
bullish.
talk AAL more, which is
On
going
that
to be
being
the
the
final
bottom.
name. That'll be our last upvote. But I think that this is quite fascinating. But I think the biggest takeaway to
But
me
yeah,
is
it's looking good.
everything you said.
I mean, we're
sounded
flattening
so
out here above
optimistic.
$1.
Got me fired up from that analyst. And the price target's 24. That's an impressive rally from here. It's about 20% higher than the current share price. But we're looking at a stock that 2 years ago was trading almost $73 a share. And so expectations just need to be reset. And we have to take even optimistic views.
All right, thanks, Tanya. Thanks for stopping by, man.
Price levels to the upside that are targets.
Talk
that are
smack. I mean, I might.
nowhere near where
You're
some
not a
of these
member
stocks
after all.
traded, prior to last year, and that's okay. But it's got to be the takeaway, and that is the takeaway for me here.
Green on the day,
today,
yep.
Jenny, is
BBY,
I'm
we
not
are
gonna
up
say that this stock can't be
1.5%.
$73 again
Oh.
sometime, but it's got a long,
The big
ways
thing
to
with
go.
Bed Bath, it seems
And
like it just
get
has to
there,
hold
it's gotta be
prices. Like
24 first, then 25.
we oftentimes
then
get spikes
26.
and it sells
that's
off.
okay.
So
And so
once we
having
start seeing
upside, price targets that are
green
within
bodied
reason, I think is
candles,
a good place to start.
I completely agree.
That
And the fact
hold.
that we're at $20 here, given the fact
that
that
would be
shares
good.
are up
That'd be
almost
significant.
4%, it does feel like even 24 feels like a ways away, given some of the overall volatility and just the weakness in their year-to-date
Yeah,
chart,
I
frankly.
mean,
Our last name, though, I agree, is an
very
interesting
surprised.
story, and that is American Airlines, as Wolf Research.
I don't think it'll
Research
close
did
above there
upgrade
just 'cause-
shares to peer perform from
because the,
underperform, but no price target.
hedging that will need to be
Noting
done,
American
but
Airlines stock is
I don't
down
know,
about
I think we could see
15%
a
in the
move.
last 6 trading sessions and remains heavily shorted with a 10% short interest.
Your cost basis
It's
is
been
119. That's pretty
consistently
good. SPY
executing
moving
and
up there.
making
Let's
and/or
see.
beating estimates in recent quarters while running
Bad
a
hombre.
fairly clean operation. They also said underlying fundamentals continue to favor legacy carriers given strong
Luchasa?
international pricing and demand trends, as well as
Must be a witch. Quad witching. There you go. Makes sense, Ace. Well done. Well done.
Put into
Gonna be a big quad
names
witching
that
day. I believe it.
tend to think have a high short interest, like AMC or GameStop, typically have about 25%.
2 p.m.
So they are less than half of that. But
That's good information.
Man, I was looking at
Let's
the
see.
airlines this
Start
week,
trying
and,
to
and
sell it to
quietly,
quad
airlines
witching.
have been just seeing some massive losses. Americans
So
down
we're coming up to it
11%
then,
this
huh? We got
week.
about 15 minutes
United
before
down
some settlement times.
17%, Southwest down 9%, and Delta down 13%
Oh,
just
it's
this
choke.
week, Alex.
Yeah, this is going to be quite interesting as we watch how this year plays out. Obviously, there's kind of rumblings now that the Fed could be changing its course, and interest rates certainly reflect that, and they've gone down. Well, no name in this space has more debt than American Airlines. And so lower interest rates in theory can only help this company as it constantly has to roll that over. The better, more favorable rates it can get will only help. However, we also have to think, well, if that's happening, is it because there's going to be economic pressure? Is that going to impact the amount of demand that's going to come back into some of these names? So far, we haven't seen that. The money's still going to things
rejecting
like
that
travel
break
and
again.
experiences. And I know, at least in my case, there's still tons of weddings on the calendar that were all pushed down the line from the pandemic. We're still working through that pipeline. And so those are trips that, unfortunately, I got to take. And so you start looking at those situations, Jenny. Obviously, international companies, FedEx versus UPS, are starting to come back. American Airlines, United Airlines, Delta, certainly more internationally focused than like Southwest is more domestic. All of these trends seem to be working in the right direction for American. It's just going to come down to how does it actually play out.
I completely agree, and I'd say based on trends at airports, I mean, I've yet to be on a plane that wasn't absolutely packed. Airports are packed. We see TSA lines back to normal. They're ridiculously long. So when you go to an airport, you're definitely reinforced on a positive outlook for the industry, but clearly they do have their own set of issues with their balance sheet. We'll dive more into Ford as well as American Airlines coming up next with our chart master. We'll be looking at some technicals as well as some example trades coming up next.
Yeah, I just got a little stretch in. Let's see. Levinson's Graticule macro hedge fund to shutter after losses. I've heard of that one. The Justice Department has investigated the owner of TikTok for possible spying on U.S. citizens. Oh, you don't say. 6 more U.S. senators endorsed bill to give Biden new powers to ban TikTok. TikTok. $2.8 average, turning 2.3. Not bad, not bad. I mean, that's still like multi-decade lows under that 4 before we broke it, but you know, looking at the long term, that's cheap. Okay. I definitely want to check it. I mean, you've got a lot of pull, I must say. All right, let's check this hype video. Provided by yours truly, Ace.
And what the wild card is telling me, it's saying, when in doubt, shake it about. So that's what I do. I shake my magic 8-ball about, and what I'm saying now is I've already drawn the card. Should I buy 6,000 shares? not a cat.
Dude, it's so epic
Not
he
an
said that.
institutional investor.
That's like,
You're not a hedge fund. You were
I
talking
mean,
about
it's,
buying
you gotta imagine.
Happy when it crossed 20. So are you buying that stock today? Yes.
Yes.
So yes or no? Are you buying that? For me personally, yes, I do find it is an attractive investment at this price point.
Yeah, the dude's totally straight face. He's dope. I forgot they like heckled him and then asked him again if he was buying at that price. I still don't even know why he was even on there. Like, he did not belong there. It's kind of messed up to even call him in. It's pretty sick. Thanks for sharing that, Ace. Yeah, I definitely seen that one at some point in the last couple of years. That is a good one. That is nice. Noise. Man. That brings back like memories almost. That's crazy.
That could be another area to watch.
Yeah, and Rick, in real time, inching towards now their session lows here, and like you mentioned, only about 6% off of that yearly low.
I don't think we want that actually.
Alarmingly close to, just given the fact that every week it feels like there's another negative piece of news for Ford. Shares have lost about 7% this week alone, so not a great chart, and it hasn't been for quite some time. But Alex,
I got in some yesterday.
I
got in some today.
News that this isn't like their cars
I'll
are
get in some more on
blowing
Monday.
up or something, that it actually
and then Tuesday
impacts the safety of their drivers, at least from what I could understand from the press release.
You're gonna get Ivy Crush though from earnings a bit. Bit of Ivy Crush, and actually the next 2 days the Ivy will probably continue to rise, so your calls are probably gonna go up in value, even if the stock price doesn't really, just because of earnings. So
for the last several months.
Well,
I haven't gotten any shorter dated calls, just
can be a little bit
leaps
scarier,
or
but hey, I'm
January
gonna
calls
let Ford
rather.
figure it out. I'm not involved in that, thankfully. I did want to say too, as a preface here, real quick, all of the trades today.
I might get some shorter dated calls today or maybe Monday.
Have one thing in common: they're all under
it's
the,
at a nice price.
the
I
share
mean,
price of 15.
it does seem like we're probably repeating this pattern back here. We're just it's just stretched out in the time frame, unfortunately. But we won't know until we have a move. It's something like this.
Spread strategies that involve more than one option.
This would be at the end of March. So I'm looking at first week of April for expiration.
In fact, many trades and traders
make sure it's covered.
Don't ever look at option spreads. They just look at single leg option strategies or just equity.
And if we get that same percentage move, that'd put us at like $40
on lower price stocks here
just
today
under.
as sort of the vehicles
There's a gap
for those
up there
illustrations.
too.
Just to talk about another way of looking at some stuff. And so
I'm
with
not
Ford,
going crazy on it. I'm not.
The first option strategy that I actually learned about, and that was
they very well could have closed all their short positions over the last
either the first or
2 years, and stock's fixed, and we're not going to see a big move.
That they learn. And this involves
just looking at the chart, I mean, it's
a little bit of time.
It is looking like a traditional normal type double bottom.
Below where we're currently trading
as it
stock right now,
kind of confirms that with more price action to the upside. The only curveball you have in here is earnings.
This put for a credit. And so what does that do? Well, when you sell the option, you don't have the right. Instead, you have an obligation. Well, that obligation in this case is to buy the stock at $11. And so that will most likely be actually enforced on us or assigned to us if the stock's actually below 11.
That was pretty jacked that he went there.
In the
like that they called him in for
that. We do this for a credit, and we're hoping that the stock stays above that strike.
Yeah, let me see if he starts streaming again. I might just shut down mine if he does. Or my stream would just be watching his stream.
Figure assigned to that, and that would just be
just kidding. None of that would happen. But I would probably watch his stream some.
And then times that by 100. So if we did this for 50 cents, it'd be 1,050 in risk. But it's really that you'd become a shareholder in Ford, 100 shares for every one of these options.
Did I first get into it?
And then you assume the risk of
Ford I traded long before the sneeze.
Possible loss. And so
I didn't get into it heavy until after the January
that's the best
run.
way to think about it.
I waited till
Break even at
40
10.50
something.
will increase your probability of success if you compare it to the alternative, which would be just simply to buy 100 shares of stock at the current share price. which of course would be 11.15. So you have that extra
40
65 cents
pre-split
of
though.
cushion, which on an $11
Oh, that's actually right where we're at, I
stock
think.
is quite a bit
Or
in
not.
terms of a
Where are
percentage. Well over
I think that's actually where we
5%
are.
of the stock
Is it
price. So it
$10
allows for a little
40?
bit higher probability of success, and it allows for the stock
Yeah,
to
$10
literally
is
just go
40 now.
sideways, and we could still be at max
I
profit.
didn't get in heavier
This
shares
is
or
also
anything like
one
that.
of the
Just
first trades
buying
I
options.
learned, and thank you, Scott Connor.
SPY, they're
I got
finally moving
nostalgic
up.
listening to
GME's
that.
getting a
But our
bounce
next
with
name
it.
today, American also lower today, and we are seeing
BBY's holding up
Wolf
here,
Research
the
analyst
high of
that
the
says at
day.
this point shares are too
Sort
heavily
of, yeah.
shorted, so
Nice
he
little
sees
cup still.
some optimism. And
Maybe
I will
building a
say that
handle.
American, while it
Maybe.
is having a brutal week here, Rick, it is still up 8% year to date.
It is down about 21% since the high that we saw before our last earnings event as well here.
I don't know how Ace
the
is still green
price
though, honestly.
action looks a little bit
He's the
dangerous to me as
exception.
well because we were in a downward sloping channel where we
And I don't know if I believe him
you know,
either.
had that
I think I'd like
gap
to see
up,
some
and that's
screenshots
kind of
there,
where
Ace.
it began to the upper side.
Like, that's incredible.
And we're breaking to the
Nobody's green on
downside
GME.
through a downward price pattern.
Not that
so
it
that's
hasn't
kind of
sold
not
for a
looking
loss
too
and then
good
popped
for the
back in at
bulls
least.
here. We also broke through a couple levels that caught my eye. First, the 1530 level, that light red, pinkish colored line. That's where we saw that gap up begin. And it's also the point where we have all three of our major moving averages converging right at the same level. So right around the 1530 mark is a key price level to watch to the upside. But before we get to that, the 1450 level looked pretty important too, because that was the highs that we topped out at many times in the past in the recent range that we were in. So today we're retreating near the volume profile point of control right around the 14 mark. We're slipping a little bit below it to the downside here. RSI was oversold earlier this week. We crossed back out of it, but now we're just on the
Doesn't look
verge
like
of
GME's gonna
crossing
come down
into it
enough to
again
fill
here.
my
If things get a little bit
another
worse
lead.
today, it most likely will cross back into that oversold area, which is a further bearish signal. So, and that's why it's important to make sure you wait for the close when you're following these technical trading signals. You can get faked out.
I
You can
know.
see that, you know,
You have to
it
put
can
in
cross
work to do that.
into
You
the
wanna get real
oversold
good.
area, then cross back out if we
Like a
rally heading
video
into the day. So
and show
don't jump
refreshing.
the gun when you're
I
making
know you
trading
could hit that
decisions
too,
based on
but
these
it would go to
indicators.
the
You gotta
work
wait
to
for the
that.
close. So looking as well at some potential
I don't actually
support, we
see
can see
screenshots. I
there's
really
this
don't care.
blue
I think
dashed
it's awesome.
line starting with the yearly lows and hitting
Market is
those
starting to
next
push. Yeah, we got a
lows
little
around
inverted
the
head and shoulders
1230
here.
level. So that
We
green
got a
dashed
bigger
line
one
there,
on the
that could
kind of
be
4-hour
the
daily
point
with the
where
head and the
we
shoulder
start
shoulder.
to worry about further yearly lows. But before that, the blue dashed line could
But yeah, this
provide
is
us
quad
with
witching,
some
so a lot of things will
support
be
near about the
shaken up
13
and freed up
mark.
for the
Yeah, and the thing that's a little bit
next
more encouraging,
couple
I'd say,
weeks.
about Americans' chart really is the fact that we are still up about 18% from those
It
lows.
was a 4-to-1
Still
split.
does feel like we have some cushion, although
I don't know
we
if
do
that's
know
what you're
that
asking,
these
but-
companies can move, and they move with really force as collectively the airline space has seen this selling this week, Rick. But we will leave it there. Appreciate all of your technicals as always, Rick Ducat, our chart master, and Alex. This name, I think that honestly, this Wolf Research analyst is making a really good point, considering the fact that we are seeing so much selling
Yeah, that
in
same
this
with me.
name, and
The
it
first
doesn't
time I
necessarily
traded was,
follow the narrative we've heard from American. I know
it was single
United
digits.
did give some disappointing
And it-
outlook
you know,
earlier
just-
this week, but American still
was-
seems
yeah.
steady. You mentioned its balance sheet, which is important, but when looking at this
Yeah,
name, say
SPY
you're
doesn't wanna-
optimistic on the airlines,
doesn't
you
wanna
still
rally.
feel positively on American, and you go to the airport and you wait
Lot
an
of-
hour
lot of
in
sell
line
pressure on
in
any
the
sort of
security
rally.
line like I recently did.
And if you recall, of course, I said the short put
I-
was
I
the
know,
first
Ace,
strategy
you would
that I learned.
use After Effects
For
and
many,
do it in
the
5
second
minutes.
strategy, which is the covered call, is the first that they learned. So these two are very, very related. And traders and investors going through the years and have just simply made careers of just implementing these two option strategies into what they were already doing. That doesn't mean that it's always going to work. It doesn't mean that it's something that you should or shouldn't do. It's just simply the fact of the matter, which is that these are two of the first strategies that many learn, and they're honestly two of the most commonly expressed strategies in the options trading world. And so looking at a covered call in American Airlines, the risk profile is identical to that of a cash secured put, except you already
Oh, I
own
got a
the
call,
stock,
okay.
or you
Also
buy
got-
the stock
actually
alongside
got
the
a
selling
good
of an
order for that.
out-of-the-money call.
Got filled on it.
Typically, at least that's how it's done. By doing this, what are we doing? Well, we
April
own
6th,
those shares
17
already.
call.
So it starts there, or we're buying them alongside this. So we own the shares. Well, that short call gives us the obligation that we have to sell shares at that price of the strike if assigned. And so rather than being just short the call and then end up short stock, we actually have the stock, so we own that deliverable, and then we simply would just give those shares over as a process in the assignment. And so with this, say we were buying the stock alongside selling that call, and say
Can't
we
you
went
see how
after April
busy
and
he
looked at
is?
the 15 strike,
I mean,
it was
the man at
trading
Ace
somewhere around 13.35.
doesn't put down the
Obviously,
buy
these
membership
move around
button.
as the overall market moves and the stock price moves
Exactly what he
on
said
any
first.
given day. And so if that was the price paid, the beauty of it is that's the break even. The price in which you enter this name or this type of strategy is the break even price, just like when you buy stock, except
yeah,
we're
I
able to
have
move that
green
price
calls
down
on
a little
GME.
bit
What do you
because
know?
we're
I don't know how.
collecting
I just got a
premium on
lucky
that
fill on
short
this.
call,
On
but
this
in
dip.
turn, we're giving
They're up
ourselves a max
6%.
possible
Got
profit
4 of
to
them.
the upside because we're locking in a
So
sell
pick these
price
up on this
essentially,
account. I need to
to
get
the
all these
upside
accounts
with
back
that
over
short call.
25K
And
so I can
with this one,
not be worried about
say
day trading.
we're looking at
I'm
this
putting a
15
little bit of
call in
GME
April,
and
you were able to do
BBY
this
and
whole
all of them.
package for $13.35. That's the break even.
Yeah, so I
and
got
then it maxes
4
out max
17 calls
profitability,
for
at that 15
April
mark. So
6th.
that's $165 in max profit, not accounting transaction fees.
And I'll
just
continue to
like with the short put, I
probably
talked about
scale
that
in.
risk being the stock's risk
as we
going
move
down to
up,
zero. The same applies here. So
you know, I'll just keep it
because
close to the
there's
money
100 shares
basically.
involved, and the stock could go to zero theoretically.
It's honest
you
work,
do assume
man.
that full risk. So in this case, $1,335.
I like this. We're going back to the basics somewhat for our Friday example trades.
meeting?
But also important to keep in mind that short options can be assigned at any
I'm not
time,
hopeful
and
for any
carrying
announcement.
option positions into expiration can add risk, like unanticipated
3.
exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at all things
I'm
Warner
not
Brothers
expecting any announcement.
Discovery.
That'd be
Shares are
sick,
up
but
2% after gaining 2 new bulls from the street. We'll dive more into that news coming up next.
Earnings though, I think earnings could be pretty good. Free cash flow positive. Hopefully that's gotten even better. EPS hopefully beats expectations. That's really all that matters. Whether it's like, of course I want it to be positive, but I'm not expecting that. If it beats the expectations, which are usually always lofty on GME, that would be a great sign. Not expecting proper reaction. Yeah. Yeah. I just chopping around down here, man. Ace, what you did is you queued up all these people. This is good, actually. All these people with memberships, because when we stream earnings, usually we have, you know, a couple thousand people or whatever. So, I've not done it before. I've done slow mode, but yeah, if chat's getting too crazy, I will do members only. Especially with people that just pop in for that and just to troll or whatever. Different rules. CVS? I'd rather go with Rite Aid. I don't know, maybe CVS. Are they in a better situation financially? I know Rite Aid's got some not as good. At a good price, but it seems like the good price is going to only get better. Oh, you're coming down to these supports. Yeah, 73 might be good to scale. I don't know. Is this an industry that's going to stick around though? But I wonder. Yeah, no, it's possible I will. Like, I don't like to limit people, but if it gets too fast, I'll just do members only. Or if people are just spamming too much. I at least do like subscribers only usually, so people have to subscribe for so much time. That filters out basically everyone. Thanks, Daisy. Appreciate it. Thank you very much. There's crying noises. Alright, little pop up here on SPY. Maybe it'll break. Like Donro said, the settlement, he said, is at 2 for SPX, SPY. I don't know when the other ones are, but the last couple hours on these days can get kind of wild.
In about 3 weeks, we will start seeing financials start to report earnings. I'm sure analysts will actually start asking those questions.
Yeah, I'm just not sure if the brick and mortar and
so very interesting developments.
Just the way that industry works is going to stay that way. I don't know.
And shore up not only
I don't know how it changed,
institution as well as First Republic Bank as well.
Yeah, not quantitative easing. I would almost say it's like a quantitative lending of sorts, but we certainly do see those assets on the balance sheet of the Fed increase substantially, basically wiping out like 4 months of
stream from my boat
in just that 1 week.
But it's 54.21.
Certainly makes next week very,
I'm not gonna be buying that boat,
intriguing as we hear from Jerome Powell.
Okay, I'll come stream for your boat.
We'll see what they do. In regards to what we heard from Silicon Valley Bank,
that'd be enough for me to get like
a work in progress. We'll see how that all spills out, but it's a step
there's the SPY
to the conclusion on ultimately where things will end up there. And then you talked about, hey, just fasten up those seatbelts and be ready because headlines are flying out. It seems like by
financial loss I had the last
so the weekend will be
3 years
quite
chasing
fun as well.
GME.
Kev, any final thoughts before we send you off for the
And
weekend?
then some.
No, I think that's actually about it, Alex. You brought up a really good point. That $300 billion equates to actually 3 months.
Long enough for you to exit a trade.
The Fed has been reducing that.
Yes, absolutely.
By about $100 billion.
I mean, when you talk about CVS, I'm not assuming you're talking about a quick scalp trade,
that
but
next report that we have on Wednesday is going to provide us a better picture.
A long-term hold.
There is a notion out there that a lot of these financial institutions that need funding just went to the discount window directly instead of going to this new program, and that may not be fully reflected in the report that we saw yesterday. So we might see some assets shift around in the coming week here, and that'll give us a better picture on how potentially damaging our financial institutions are at this point.
8%.
Yeah, time will
FedEx
tell.
still holding up
Looking
9%.
forward to the updates as we get them.
Yeah, the crypto ones are rallying. It must be. I guess it's from banks.
A little bit choppy here, but doing its best to try to pare those losses as the day rolls on. So I think that last hour of trading here is going to be fun as well. But Kev, have a great weekend.
Yeah, he's calling it too. SPY rejecting there
for the update. Let's bring back in Jenny. It's time for FOMO. And I believe this was the strongest performer in the S&P 500 in January. It's still been pretty strong the last month and a half or so since then, but nowhere near as strong as it was. But that's Warner Brothers Discovery. Breaking back into the spotlight from a content standpoint,
this is a bullish candle to me.
Through its HBO,
More so even
HBO
than this,
Max programming.
Yeah, and it does seem like the street really likes that. And we
Still
are
that
seeing
divergence
shares
is holding,
up
of course,
because
yesterday's close was high enough.
Pure play streamers, names like Netflix, Paramount, that are actually lower. So it is seeing a degree of outperformance, and it's down about 8% for the month.
Fed funds are seeing a pause.
From its high, but still.
It comes out 50 basis points where you get screwed.
For the year.
I mean,
and like
screwed
you
in a good
said,
way, I guess. I'm losing a dump. Whether that's screwed or not, I don't know.
January. The news we did get today was from 2 different analysts.
Are you looking at, where are you pulling your data from?
That did upgrade shares to outperform
the government website?
With a $20 price target, which is the street high. The analysts said the skeletons in Warner's closet have been accounted for. A great line. They also said that after a 2022 rife with negative surprises around their Warner Discovery integration and TV advertising's market in general, and after 2 rounds of forecast reductions, today's expectations are attractive to underwrite. They noted that investors seem too pessimistic about the company's networks business, with Warner Brothers stock currently in a draconian pay TV scenario. Now, they did admit that they are still bearish on the linear pay TV outlook. but the network generates lots of cash, and it will for still many years in the foreseeable future. Plus, they said, given Warner Brothers' scale and its licensing strategy, and like you said, Alex, that HBO Turner synergy, it does provide the company some overall cushion. Now, they do anticipate that Warner.
I mean, they give on there, right? They give percentages for what it is.
Estimates of about 3.9 times.
So the highest percent is still for 25 basis points, right?
3 times by 2024. Also getting some love today from Wells Fargo,
They
which
have
also did
so much
upgrade
I
shares to overweight
checked.
for
I could
people
just check, I guess.
Also with the street high price target of $20 a share. And that analyst did acknowledge the fact that recent macro events might make levered equities seem worse.
There might be news on this SPY move, actually. 4 global banks have put restrictions on new dealings with Credit Suisse.
The potential for these synergies. I like that they both
Direct sources with direct knowledge of the matter. Two banks are taking measures that involve cutting unsecured exposure to Credit Suisse and new dealings.
Ever since, but Street still feels
Deutsche Bank slash value it assigns to Credit Suisse securities as collateral on loans to wealth management clients.
I did see 5 that are leaning bullish, 1 that remains indifferent, and
that
1
might have been part of this little sell-off here.
So we do see an average price target of $17, implying
Society Generale has not changed existing positions with Credit Suisse, but is not increasing them either.
What I can say,
HSBC private banking business scrutinizing loans linked to Credit Suisse securities has not made a final decision.
2 lines of thinking, and one is the Netflix approach, which is just get as much.
Credit Suisse did not have immediate comment. As previously said, its capital and liquidity basis is very strong.
To stay subscribed, because they've always got something new and possibly interesting and fun to watch. Disney sort of took the same approach. They just have such a catalog of content, and of course they're churning out new content as well, that they're hoping we just have so much stuff here that you're just going to stay subscribed. Obviously in that case, Target's maybe a different demographic, maybe looking for more kind of a family-oriented demographic. But HBO has always approached content a little bit different than some of its competitors, and that's been one of not a lot of content on a yearly basis, but perceived as extremely high quality, kind of almost must-watch kind of TV when it does come out. Apple's sort of taken that path as well, and so you see the shows like Morning Show or the shows like Ted Lasso really be kind of critically acclaimed and the kind of much-watched TV. There's not a lot of shows on Apple, and so I think there's 2 lines of thinking. HBO Max is certainly in the 1 line of thinking, but also has a ton of historical content in their catalog as well. But to see them become that major player again, I think has been a win for consumers, and I think, you know, we're not going to only probably just have one of these. You're going to have some combination of them, and that might shift as the content comes out, and you might cancel and resubscribe. But I think we all agree Netflix is the winner, but who's to say that Warner Brothers isn't gunning for second place?
I completely agree, and I think in terms of HBO's quality, it's sort of famous for that. I mean, their shows are so well done and so much effort put in. And I know, you know, Game of Thrones was another one of these huge successes for HBO, but they consistently have titles like that are just really beloved among the consumers. Netflix, though, I will say, cleaned up at the
there's gamer rants for BBY. I mean, of course, today there's a lot that's going to expire with this probably.
Shifted a little bit, I think, into now
next week, you know,
content, but
there's still some there, and as we rally, I'm assuming that will get loaded up.
I think needs to step away from that merger back last year.
The capture's pretty light.
Establish them as their own company here, but no doubt HBO is
that's still
definitely
25,000.
favorite and one that it does feel
like is pretty
critically acclaimed.
Big break will be 5, which will probably be resistance.
Warner Brothers Discovery,
we are seeing
some strength today. We have seen shares falter, like you said, but up 50% this year, so still a really strong performer.
Yeah, and so I wanted to talk about if the
40,
covered
so
call
20
and the
minutes
cash
till
secured put weren't the first strategy to
SPY and
learn.
SPX start settling.
Guessing, and of course there's always exceptions. This strategy was the other one that could have been the first that many investors learned. That's just simply buying a call. And so it's the FOMO segment, stands for fear of missing out. Stock's been a huge performer. There's a lot of fan favorite kind of TV shows being made by this company. That FOMO, I think, for this conversation can be perceived as to the upside. Getting on board and looking for a possible big win if this stock goes higher. And that's really what the long call seeks to accomplish. It looks to have limited risk, but has unlimited upside. And so naturally, what does that typically mean? Typically means that you need something to happen, and it maybe has a lower probability of success.
Why does he explain a long call more than anything? They do crazy spreads with crazy legs and expirations. They don't explain much at all.
So for this example, what I did is I went out to a weekly expiration. I went out to April 6th.
No, I didn't sell GME those
date. and looked at buying a slightly in the money call in this case. The $14
buckle up before the share
call.
offering.
If we're able to do this for $1 debit, that would mean our break even
No,
is
I didn't like.
for a
I
stock
wasn't
that's
planning on
currently
selling
trading at
GME shares, so
$14.45. You can see that's a little bit higher. So we'll need
yeah, I never
this
really tried to
stock
time
go
any
higher
tops.
to break even at that.
I would play
at that
options
expiration. But
with
what's
them.
potentially fun about this trade, or why this is such an intriguing trade to so many, is we have a
Just
dollar
assume my
figure that we can
phobia.
define that is,
And learn.
whatever it is that you pay for this stock or this particular strategy, and that's $100 in this case. But you have no cap to the upside. So I have a capped loss and I have an uncapped upside, and that's very intriguing to someone oftentimes because it allows for them to express that outlook but not give up anything in return.
Down
So
here a
there's
bit.
always trade-offs. In this case, it's different than owning stock. Well, one, because that has an expiration date. But two, the break even when you buy the stock is just simply where you bought it. In this case, you actually need the stock higher to get to that break even. But for those who are really optimistic, this is a strategy that many use to benefit from something they have a strong conviction in one direction or the other.
And I think this is such an important example trade as it is a building block of so many others we talk about so frequently.
I do
on
set
this
cup
show.
and handle
But
absolutely
that'll
right
do it
here.
for our FOMO
It's
segment.
hard to
Coming
know,
up
like,
next, we will look
I
at
don't like cup and
another
handles in
name
such
seeing
short
some
time
optimism
frames.
Today, we'll dive
Or
into
one.
Nvidia upgraded
Also,
by
since it's kind of
Morgan
barcoding,
Stanley
like
in the arms
patterns like
race
this,
fight
I don't
for
hold this
AI.
high.
Caroline Woods joins us coming up next.
But it does look like a robot's version of a cup and handle, an algo's version. Super early, but I read a synthetic condor. Easy peasy. No explanation necessary. Now let me explain to you this long call option. You maybe never heard of it. It's where you buy the contract, and then the contract has unlimited upside with limited risk. Let me show you here on a chart. You're looking for 23 days. Is that break even on GME for you, or is that where you're taking profits? I think you'll see that this month. I predict you will see that this month. Yeah, this is, but it is a nice version of an algo robot whale teeth smile handle with an ear. Break even. Well, if you're trying to get out of break even, I think you will be able to. It can be done. Unlimited potential to the upside? There must be a catch. Credit Suisse will hold meetings over the weekend to assess scenarios for the bank. Dude, they're done. You heard Robert. That they've been corrupt forever. Now, is it even worth it to have puts on this thing? How much would they go up? They have gotten cheaper. This is the April 6th put. It was $10, now it's $4. That ain't bad. That's the 50 cent. 50-cent one. Wait, why is it? Let me, oh, there. Here's the max. Oh, max value on it though. Cost $4. Max value is 46. So if it goes to 0, I mean, you're not probably gonna be able to get out if it's all the way at 0, but Might grab a couple for fun. $155% IV. Let's go. Is that enough time? 20 days? Probably not.
Shift in cloud spending toward AI. You know, as I mentioned, it's up now 77% since the beginning of the year, and I think it's important to look at valuation. Given how far it's run, it's really only 10% off its 52-week highs of around 289. The analyst does touch on that, saying if we extrapolate growth trends for 5 years, NVIDIA valuation is high, but not dramatically out of line with peers, saying we have missed the bigger picture elements that NVIDIA is now the arms dealer for one of the technology races that matters most. Also points out that there are few bargains in areas with long-term growth potential, especially as conditions are difficult. So getting more bullish on NVIDIA. Also got a price target bump from Citigroup as well. They are in the buy camp as well, but they boosted their price target to $305 from $245, which could also be giving the stock a little bit of a lift today. So as you said, shares up about 1.4% right now.
Really fascinating stuff, and I love the analogy there of the arms dealer for that important race. I think that illustrates it well. But Caroline, before we let you go for the weekend, any final thoughts here on what's been a big winner?
Well, you know, it's interesting because I was taking a look, you know, I like to kind of put this in context of what other analysts are actually saying. At this point, almost 75% of analysts still have a buy rating on NVIDIA, despite the fact that it's run quite a bit, you know, so far. That being said, when you take a look at the median price target, so we said Morgan Stanley's at 304, Citi's at 305. The
Settlement's coming in 10 minutes. I starting to move.
That's actually come up almost 30% since last month. It was at around 200 last month. So it's come up quite a bit, but that only implies what? Low single-digit returns, very low single-digit returns, around $6 upside.
When do the other indexes
so
settle?
It'll be interesting to see, you know, if
I'm not gonna
analysts
find
continue
out.
to look at this as a buy and maybe shift those expectations even higher as it continues to run and really buck the downtrend today, and we'll see in the future. But otherwise, we'll have to see if they think maybe it's getting a little bit too expensive and shift the ratings a bit.
Yeah, that's a really good point, Caroline, because positive revisions are obviously a good thing, but not able to catch up to the stock's price that continues to really be resilient given some of the overall selling in this market. So NVIDIA has been such a story to watch really so far this year, but we will leave it there. Have a wonderful weekend. Caroline Wood, Senior Markets Correspondent for the network. Now, coming up next, it's time for Under 30. George Tillis will join us to discuss XPeng, their fourth quarter results, and they were disappointing. Shares are up 8%. Hopefully, George can paint a better picture of why we're seeing
index
such a rally
futures, index options, and then stock options and stock futures. That's the four. The four witches of the West. Good, Pablo. I'm gonna turn up a little bit actually. Here we go. There they are, there's four witches. Spy's kind of just hanging out at this resistance it's built. Hopping around, or maybe a move starting in 10 minutes. Maybe it'll get front run. We'll start now. What I miss about having my GME shares is the margin I could get with them. It's kind of nice buying puts and just getting all this margin. I suppose I could do that with BBBY, but the IV is pretty high. Whoa, there's a flush on BBBY. Broke to the downside out of the barcode. $5. Here's the robot handle. It's a perfect square little peg for a bar.
It's still down close to 70%, and it's really a situation where the company is really facing challenges, maybe some production challenges, but I suggest maybe also some pricing and competitive challenges. I mean, Tesla across the board has cut prices. That's forced other automakers, even traditional automakers like GM, Toyota, Hyundai, and now XPEV,
I mean,
and
it is kind of nice
to cut prices as well. And unfortunately for XPEV, the problem being is profitability. On an adjusted basis, they're still not profitable. They're not expected to be profitable the next year. And effectively, margins are already very, very low on a trailing basis. And with these numbers, they're probably expected to get worse. If you look at gross margins as a percent of sales, they're
something
only
like that, Tasty. I'm not sure. I've seen it before with penny stocks.
So if you compare
Don
it to
might have more
Tesla,
insight on
Tesla has about
why it does
25%
that.
gross margins, but the kicker is they're profitable. They've got a net income margin over 15%, and I think that is one of the reasons why we can explain the better performance of Tesla, at least in the last year and even in the last, let's say, 6 months.
Yeah, George, as I take a look at some of this stuff, obviously looking to cut costs, but not necessarily just for efficiency, as we've heard from other companies. It's because things haven't been going so well. I mean, I'm seeing delivery numbers down almost 50% year over year. One of the impressive aspects of these Chinese EVs versus some of the up-and-coming ones in the U.S., not including Tesla, has been that they ramped up production and delivery very, very impressively, very, very quickly. And so for that to be a major setback here, it's kind of alarming.
It is. I mean, if you just look at last year, looking at effectively, 2021 compared to the previous year, I mean, deliveries were higher by over 90%. So we've seen a complete turn of events in the last year for this company. I would say, alongside the other automakers across the board. And it's not just the EV manufacturers. If you look at Ford, I mean, they've been in the news lately. The stock has been performing terribly. General Motors, Hyundai, Honda. These are major international and legacy-based automakers. They've been struggling. So it really comes down to price. And the unfortunate aspect behind growth companies like this one or NIO is they have to maintain resale price. And resale prices, of course, have been down because of competitive effects, not to mention that demand has been down because of higher prices, even though they're coming down. So really challenging situation. I know the stock looks compelling today off this bad news because the stock is higher. But, you know, one day doesn't make a trend change. I've done this long enough to know this, and you can see multiple days of upside potential because of a poor announcement. But a lot of times that might be things like short covering or effectively just expectations at how bad can it get, how much worse can it get from here. It certainly can. But considering, again, the delivery number for the quarter they reported was down 50%, they're still expecting 40+% delivery contraction year over year for next quarter. So caution. That's all I can say for this name. If you want to play the EV space, just play the profitable companies. I'm not saying Tesla is a suggestive buy, but they are profitable. And so that gives you a little bit more leeway and, of course, being able to sleep at night owning a company that's profitable versus one that's not.
Yeah, George, I completely agree. And just Tesla at this point has longevity on its side. So many of these companies are so new to market.
Liquidity generation, you're seeing internalized orders get bought and sold for fractions of a penny.
Ford is having production issues. They had that massive recall today. So the auto space seeing some
the
collective
volume
weakness,
is kind of
really
low still on
Tesla, I guess, which
BBBY
has
today.
always been interesting. We will leave it there, George. Thank you for all of your insight all week long.
Yeah, we're at 22 million. Yesterday was 46.
Thank
so
you, George. And that's
might
also
get a big
for Alex
pump of
and
volume in the
myself
last
for this
couple
section of
hours.
investing. Happy St. Patrick's Day. All have
So
a
far, I think
wonderful
we're at
weekend.
low.
The watch list for Nicole Petalides is coming up next.
Thank you guys for all your support today. I want to remind you to sub up, like up, comment down when we have a video. Happy money sticks around. That's my video phrase. But yeah, if you're new here and you're liking it, don't forget to subscribe, hit the notification bell. Streaming every day, trading stocks, futures, options. Usually do a recap video end of day. I've been kind of out of commission the last week or so I haven't done recaps or even been able to stream, but should be good. Should be good to go now though. But thank you guys for your support, and yeah, we'll be streaming. If I'm able to, I'll probably cut out actually in Power Hour to do a recap video in that time. If I'm not, I'll just stream till end of day. Especially if it's exciting. Could get exciting towards end of day. Low volume, stable price, anything bullish pairs. Yeah, I mean, stable price is good. As long as it's not going down. Building a floor. Decreasing volume. Yeah, I mean, the sellers might be getting exhausted. That's what you'd see on a normal stock that's maybe not manipulated or suppressed artificially. This has been this downtrend. So that could be a sign of a reversal too. Schedule premiere closer to earnings. I don't know what you mean. So for earnings, we'll do a stream. And yeah, I'll schedule the streams. I guess I could schedule the earnings stream today. I could schedule in the future. I don't know how many I can actually have scheduled at once. But yeah, no, that's a good idea. I like having it scheduled. Seems to help. 2 o'clock, there it is. SPY starting to move. Ahead of time notification. Yeah. Yeah, I usually do it. I've been trying to do it. When I end the stream, I schedule it for the next day. Basically. So on Monday, I should have it scheduled for the next day. But when last time I was streaming earnings, that's all I was streaming. I wasn't streaming during the day, so it's a little different. And I think how I would do that. Yeah, I could just do it all in one stream. Like exhausted sellers, that entire amount. Yep, pretty much. Yeah, we can check time and sales, see what you're talking about.
On the TD Ameritrade Network. Hello, Renita. I know you're talking about the banking sector and some of the new concerns as First Republic sells off once again.
Yes, once again, shares down as much as 27% right now, maybe even a little bit more since the last time I checked about 10 minutes ago. And the company is on record or on track for its lowest weekly close ever, and its lowest close since 2011. And this is even after it got a $30 billion lifeline from some of the big banks yesterday. And the bank also suspended its dividend yesterday. But today, analysts are calling that rescue plan a temporary lifeline. They're saying that they would have downgraded this stock, or they are downgrading it rather, like Wedbush Securities. They downgraded First Republic to a neutral from outperform, cut the price target to $5 from $140 a share, saying that they see the sale of this company imminent. Other companies or other rating agencies also cutting their price targets on this stock, also saying that they see a sale imminent as well.
Yeah, and what about Credit Suisse? I know you were talking about that one. I mean, new all-time lows there.
New all-time lows there, which actually I was going to update us all on the situation with Signature Valley Bank's parent company, SVB Financial, if you don't mind, Nicole. So SVB, okay, great. SVB Financial right now is currently filing for Chapter 11 bankruptcy. And so in this protection, typically the proceeds of it, if the company is sold, typically go to your creditors, right? But investors are concerned that they will not be made whole after these efforts come through. But right now, Fox News or Fox Business is reporting that some of the companies that are continuing or in competition rather to bid for this company are hesitant because they're not sure that the FDIC will back up litigation. They want the FDIC to back up litigation. So we'll find out what happens next in this whole banking saga, Nicole.
Yeah, and the KRE, when I look at the regional banking ETF, that is down about 14%. I will say, and you might find this interesting, Renita, when I spoke to Steve Forbes yesterday, and I was asking about different places to invest, he thought the pullback that we were seeing was a buying opportunity, that banks were much better positioned than they were in 2008, 2009, and that if you can stomach the pullback, and you know, we always say
sounds like some witchcraft on a roll.
These are falling knives, but that if you
believe in
can stomach
FTD
that,
settlement,
that in fact you will do well, and that was his sort of thesis. People could check that interview out on Twitter. Thank you for all of that, Renita Young. Appreciate it. Good to see you.
Yeah, next week could be
now let's take a look
pretty
at
rowdy.
The bigger picture. Sam Stovall's with us.
Is it
Chief Investment
worth it even to have
Strategist
like
at
puts on FRC if they've filed Chapter 11?
I mean, Sam, we've
Won't
been
just
around
get
a long time,
suspended at any
and
time?
you know, just as Steve Forbes said, he's like, look, we're in a
Avion's
better position
crazy.
than 2008, 2009. This is the USA. It's the greatest country. He was very bullish, and while he called these falling knives, he still believed in our banking system and these bank stocks. What do you think of that?
I would tend to agree with that, Nicole. Certainly, we're in a better position today than we were back in 2008. Also, the Fed came out very quickly to say that it's going to backstop these banks. We also had the Swiss National Bank do the same thing with Credit Suisse. So the regulators, the bank authorities are certainly stepping up very quickly to calm depositors' nerves. I think basically the concern is that even though there's fewer than 3 days to go go until the Fed meeting. I think a lot of investors are worried, and therefore it's going to be a very long time. It's going to feel like an eternity between now and when the Fed makes its statement, and then we have the press conference by Chair Powell. So a lot of volatility ahead.
Listen, I mean, we never had a quiet period like this one. I mean, I never say never, but I mean, this was the week that we wanted to hear something from the Fed, and we got nothing except from the ECB, where we got a 50 basis point hike. What is your takeaway on how the Fed may or may not move next week based on everything we've gotten in the last week or so?
Well, the Fed has told us that their prime directive is to reduce inflation, and I think that they will go ahead with a 25 basis point increase. I think there would be a reduction of confidence in the Fed if we did end up seeing no raise whatsoever, and so I think that would be interpretive that the market should be worried because there could be more of a systemic financial crisis that the Fed is aware of that they're not necessarily telling us. So I think 25 basis points in March, probably another 25 in May, and then maybe a pause before we start to see rate reductions, probably in the early part of 2024.
You know, the Fed's working on battling inflation. That's what they've said. We're at 40-year highs. This is what they have to do. If they don't do the hikes, then we might have inflation become entrenched, or it may rear its head again in a bigger way. At the same time, what about financial stability? Aren't they worried at all? Don't you think that some people are, by the way, some people are saying, stop it, no more hikes, just end the series now. There are others who say do 50 and call it a day. You could even do 50 and be dovish afterwards, right?
I think that they are, in a sense, between a rock and a hard place right now. Their mandate is to maintain high employment, low unemployment levels, as well as keeping inflation under control. But at the same time, if that does engender some concerns about the financial system, then yeah, the Fed, in a sense, would have to reverse course. But I think by communicating a sense of confidence that they would have in the banks, because that they have passed the stress tests in the past, combined with saying that they are going to be, in a sense, moderating the magnitude of rate increases while monitoring the overall economy, I think probably that would go a long way to calming, in a sense, both sides of the equation. But let's just say I wouldn't want to be Chair Powell today.
Yeah, and there's concerns about the current economy. You know, are we in a recession? Is the consumer going to slow further? The consumer's already using credit card debt and auto loan delinquencies, and you know, they're feeling the pinch. I mean, it's evident by some of the things they're digging into savings. Where are we in this economic forecast? You know, are we going to be saying at the end of this year we've had a recession?
I think we will. I mean, history tells us that whenever we have inflation above 6%, year-on-year decline in leading economic indicators, a sharply steep inverted yield curve, and an earnings recession, the fourth quarter of 22 was the first of 3 quarters that we are forecasting for an earnings recession. History says following those kind of situations, we end up in a recession. Our economists, on the other hand, are saying, no, it's still likely to be an economic slowdown, when particularly looking at GDP, with the third quarter being the weakest at about 0.5% growth. So I think at least we're not expected for another great recession, but certainly a mild one down the road.
Right, understood. At this point now, when you look at the different sectors, you know what? I'm going to get in my own way because I think the dollar is an important story. Before I get to the sectors, tell me about the dollar, because that could in effect stabilize things. If we have a stable dollar, does that help?
Well, a stable dollar, I think, could help. Certainly, we've been experiencing a rise in the dollar over the past year or so, a gain of more than 10% last year because of higher interest rates attracting foreign investors who have to buy dollars before they can buy bonds. And because of the at least trajectory over the longer term for the Fed, that there is the
0.005
likelihood that we are
penny
very close to
arbitrage.
the end of this rate
I don't
tightening
know how to
cycle.
change my time and
So at
sales
least a
here.
pause in the value of
Oh,
the
time and
dollar.
sales
We've
filter.
seen a lot of investment
Interesting.
overseas because the expectation is that the dollar will come off of its highs, which would certainly benefit
Quantity above.
investments
Wait, what am I
overseas.
looking
So
for?
I
100?
think there would be a benefit to
Or less
U.S.
than.
investors
Only gives me
should
above.
we end up seeing more of a decline in the value of the dollar.
Right, understood. Okay, so that being said, now set us up with the sectors, because
Time
we've
and sales
certainly
items.
seen tech, the beneficiaries this week. I don't know if it's
All the
directly
items enabled.
because of outflows out of banks or just because
Pop
rates
this
came
thing
down.
out. You guys see what I'm talking about.
I think it's a
See
combination
what Don
of,
was
in a
talking
sense,
about.
flight safety, flight
So I can
into
only
those groups
set
that will
quantity
probably
above.
hold up in an economic slowdown, because while
All
employers
the
might not be
exchanges.
adding to payrolls, they probably are improving their technology to
Decentralized.
maintain an
There you go.
elevated
Decentralized. Who
compatibility.
needs blockchain?
So also looking at the sectors, materials, energy, financials, and to a lesser extent,
Yeah, TRF,
industrials
TRF,
that are
TRF.
currently taking it on the chin. That to me is an indication that investors are worried about a rising risk of inflation. Rising risk of recession and the impact that
Trade
it would
reporting
have
facility.
on these economically sensitive sectors, whereas
Yeah, off
staples,
exchange.
healthcare, and utilities are actually holding up relatively well.
TRF
And
is
they're your more
trade reporting facility,
traditionally defensive
which is
sectors
off
that do well
exchange.
in a declining economic environment.
And so at this point now, don't you think it's interesting how our inflation here at home, other countries have even higher inflation?
Well, the other
This
countries
NAS,
do
that's
have higher
NASDAQ.
inflation. That's why I think the
So that's an actual
ECB decided to
order
move
there.
forward with its 50 basis point
Above
increase.
99.
Certainly, its short-term rate is lower than that here in the U.S. But at the same time, I think they believe that the deposit base for their larger banks is more diversified than here in the States. And the Swiss National Bank has backstopped Credit Suisse.
We had one
So
order
I think
on the
there's a
lit.
vote of
There, it looks
confidence
like.
by the ECB in their banking
PSX is the
system that allowed
Pakistan
them to raise
stock
rates
exchange.
more aggressively than we think that the Fed will do next week.
What?
Yeah. Sam, thank you for
Still
being on
barcoding,
with
yeah.
me today. An important day after a tough week. Sam Stilwell,
Exactly. Always a
Chief
pleasure to
Investment
talk to you. Thanks,
Strategist.
Nicole.
Thanks.
It's PSX, NASDAQ, OMAX, third U.S. equity trading
Later this
platform.
hour, we'll dive into the consumer sentiment numbers. Our panel will tell us about the weeks ahead. Plus, CFRA upgrading the view on one streaming service, calling it somewhat resistant to recessions. And we're also talking to the CEO of Enterprise Ireland.
We've got a big, still a 500,000 share order on the bid at $1 for Bed Bath. Not really any sell walls up there. $1.09, which is the high of the day. But those kind of just sit there and then disappear and are spoof orders half the time. SPY's coming down now. SPY's getting a little fleshy. Wall Street Journal's Tim Rouse says the Fed decision on 25 basis points or hold will likely be determined by market response in coming days. Adam Levinson is shutting down his hedge fund worth billions after being hit by losses amid ongoing bond market volatility. Another hedge fund bites the dust. I think it's like the second one today or this week at least. I think I read about one this morning. Unless that's the same one. No, BBY is probably not going to gamma dance. Yeah, come back tomorrow. I bet it'll trade it completely flat tomorrow. No, to really get gamma, I mean, it would be next week and the week after anyways. It takes time. Pulls over 1.5 today would be a good send-off though to get started. Which could still happen. See how the roll of this 1.5 cash secured put looks like now. About the same, which is good. I think if the price moves up, I should be a little more favorable on the credit I received to roll it. Taking vitamins. Burps stink. SPY kind of just bounced off that support a bit from earlier. Barcode day on SPY also. Volume. Yeah, it'll probably be high like yesterday's. Because it's basically at the daily average already. Still over an hour. That's 2 hours. Priority NASDAQ exchange. For market makers. Yeah, I assumed it wasn't Pakistan, but I wasn't sure. These are all the wholesalers that GG's talking about, right? No, not really. That's another problem. Yeah, I don't think I'm going to do any more BBY exposure, even though I think the move will be up. Just because the timing on GME, I think is going to happen sooner. Or I'm more confident it's happening sooner. BBY, I think, could go at any time. And possibly the same time as GME. But this move up should happen. So more calls. More calls for me. And GME didn't get flushed down with the SPY right there.
You got to remember, as I mentioned before, that the soft landing, quote unquote, has only happened 2 out of 11 times that the Fed has tried it. One of those 2 times was done successfully, I think, back in 1996 by Alan Greenspan. Alan Greenspan just stated about January 4th that we're headed into a recession, and he called it. And I thought, who else would know better than the guy that's actually achieved one of the true soft landings? I don't think we're going to have a soft landing. I think at the end of the day, I think what I'd like to see the Fed do is realize this is not a 100-yard dash. This is a marathon. We're going to be dealing with inflation for a lot longer than I think the Fed likes us to wants to tell us that we're going to be dealing with inflation. I think we're kind of back into another 1970s type scenario. I don't think it's going to last that long, but I don't think we're going to be done with this in a year.
So in the meantime, you have sort of what to avoid and what to go for. Let's start with the avoid so people don't make any mistakes here.
You know, some of the stock areas that we're trying to avoid, obviously,
That's
banking,
so boring.
real
You want
estate,
excitement? Go watch Netflix.
Avoid that, and of course, private equity related type sectors. I would really try to avoid those areas, specifically banking right
Go
now.
outside.
Too
Go
volatile.
surfing. Go
I
jump
see.
off a
All
building.
right. And then
without a
on the other
parachute.
end, you said high
exciting.
quality, diversification. Tell me about that.
Right, and we're looking for, you know, towards quality industry leaders that, you know, hold relatively better and economic
I know what you mean,
'cause
Ace.
we're headed there.
It-
You know,
it's-
lean toward.
I mean, GME's queuing
relatively
up.
Bigger names.
BBY
some
might be
that
also
can
just with
actually,
the way
you
that
know, hold up
technical
in
analysis
case we
looks.
have stagflation or something of that nature.
This DXA have a wholesale property for pay for and full out ADF arbitrage.
In the big picture of things, are you still saying for folks to put their cash to work, or are you more cash on the sidelines and then buy something when it pulls back?
With what we're doing with our clients right now, we're kind of a mixture between income and a little bit of cash on the sidelines, waiting to see, because we know we're going to be able to buy some of these things at a lower price later. So we are actually retaining some cash on the sidelines, waiting to see how things are going to pan out.
Right. So tell me about some of these names here. You have Barrick Gold. First of all, gold is at the highest levels of this year. You have Brown-Forman on there as well, and Public Storage. So start with each of these. Give me a thought on each.
Well, Barrick Goldman, one of the largest gold miners in the world, and we're still bullish on gold. It's got a 3.5% dividend. We like our dividends, so we get paid while we wait. You know, they're an international gold company operating all over the place: Canada, South America, Australia, Africa. And gold sales accounts for about 90% of its revenue. Copper sales, the remaining amount, and it's got $11 billion in revenue in 2022. Expected $12 billion in 2023. $400 million in free cash flow. So it's a very solid company. $5 billion in cash they're sitting on right now.
All right. When you look at a name like Public, yeah, go ahead.
Your Public Storage, I like them because, you know, we have accumulated a lot of stuff over the years in storage. And I know my wife and I, we just revamped the room of our house and had to move a bunch. I was amazed all the different things that we have got rid of, but stored a lot of it. And if you ever have anything of any magnitude to store, you're going to find storage space is limited. And Public Storage, I think, is a really good. It's a REIT, and it's really good right now. Again, 4% payouts, 4% dividend, $800 million in cash, $4 billion in revenues. Rated very, very well, both Moody's and S&P.
You know, what's interesting is as you pick this REIT, there are other REITs that seem to be very out of favor at this moment if they're related to office. But a REIT that has storage, is that the difference? What kind of REIT it is? I mean, which ones seem to be better positioned than others?
Oh, yeah, for sure. Because this is storage is why it's better. We've actually been holding off, and we're going to be buyers at some point on the REITs that deal with commercial real estate, just not right now, because companies are not coming back
That is
to work.
depression
Now, we're
as a parachute.
here in Kansas
It's
City.
exciting.
Cerner's a big player here in Kansas City. You know, I think almost all of their buildings are vacant. They've got a building over on 435 that they just built the thing for $130 million, and it's
I mean,
vacant.
to me, it's
totally vacant. They're working remote.
It doesn't matter which one goes first.
Right. Mark Falter, great to have you on the show. Thank you so much.
I guess BBY for me. Spies coming down here.
Thank you, Mark.
'Cause I really don't have much exposure in GME compared to my BBY position,
Highlighting Netflix, CFRA upgrades this stock
which is maybe
to
kind
a
of foolish.
strong buy. All right, we're going to talk to Ken Leon next.
I mean, GME seems like it's been fixed, and it still could be. We haven't had confirmation. We need a couple 20, 30, 40% moves the next couple weeks. Yeah, storage units is a great business. I looked at buying storage units before. Nice passive income. Highs coming down, broke through that low. Living in a storage unit. I've also considered living in a storage unit, actually. I've been on both ends of that financial spectrum. I looked into it and they had too much security. I would not have been able to get in and out without them knowing. At least the one that I was looking at. Oh, it's coming down more here. I'm looking at. Oh yeah. Interesting. I'm getting credit cards wanting to up their credit limit. Yeah, I'm getting credit limit increases. I would think they'd be tightening down. Terrific. Always try and up your credit limit on your credit cards. Should do that like once a month. Maybe not once a month. Every other month. Mid-century furniture. 380 spy put. March 31st. Yeah, I mean, a lot can move around after today. The chart has been so volatile, it's really hard to get a good direction in that time frame. The longer term, yeah, we're still in a downtrend. So I feel like we might still kind of rally next week for a bit. Just because this kind of inverted head and shoulders we built down here. Kind of this channel we're climbing up in. $380. Yeah, honestly, I don't think that's off the table. If we start to move up next week, though, you might want to cut it because the upward momentum has been pretty strong the last 3 days. So you don't want it to go much further than this, or it's going to take too long to come back down. I just think neutered. Yeah, that's pretty much what I mean. It might pump. I don't know. About an hour and a half. That's a lot of nuts. Nice. Loft above a shop. Thank you, Ace. Appreciate that gifted membership. If you guys aren't a member yet, click on the green box, enable gifting, accept the membership that Papa Ace has so generously offered to you without any strings attached. Got Nick N, you're not a member. Dave Yacht, you're not a member. Gotta be careful chatting here and not being a member. You will get sniped by Ace. He will snipe you out of thin air. Thank you, Ace. I appreciate it, man. Stack of 20s to buy lunch. Yeah, I mean, if GME is fun, if you believe in the fundamentals on it, then you're happy with your investment. It's a year-long, multiple-year process. John Parker, thank you for your donation. I thoroughly appreciate it. You're not even chatting, just straight up throwing donos and lurking. I love it, man. Thank you. You're a long time supporter of the channel. I appreciated it. So thank you so much, John Parker. If you're not a member, there's a free membership there sitting, I think. You can become a member too. I think my Streamlabs should catch up here in a bit.
Let's get nuts!
Oh, let's get nuts! There it is. Hope you're having a good Friday, man. Good quad witching. Get outside this weekend. Enjoy friends, enjoy family. Enjoy your little purple bear. He's mixing him off yet. John. Yeah, GME, the fundamental. BBY is so undervalued, I think, at this price. It just takes patience. Stock market's the transfer of wealth from the impatient to the patient. So, if you're going to get in the stock market and be impatient, you're going to transfer your wealth to those that are patient, basically. If you want money, you can go to the stock market. If you want money fast, you can lose it in the stock market. Having it both ways is highly improbable in the market. And if you did, you got lucky. Don't expect it again. People happy with their GME investment. It's the weekend. Remember Jimmy wants a double membership. Thank you, Ace. Are you serious? I think the other one didn't even get claimed yet.
Let's get nuts!
Let's get nuts. Thanks for dono, Jason. Thank you, man. Hope you have a good weekend as well. And all of your guys' support, I really appreciate it. You guys have been awesome. Yeah. Just, yeah, it's crazy to... crazy thing about all the support you guys have been giving, even just the subscriptions and the likes and just all of it. Not even talking about the donations. You guys are nuts. You guys are nuts. That's awesome. No worries, Jason. I all appreciate it, man. Thank you. Looks like SPY might be double bottoming here. Didn't get crazy fireworks yet since the settlement, but it did sell off. Good thing, Javier. So yeah, sorry, I haven't been able to stream quite as much this week, but recovering good. I think I should be able to continue on. Have a good launch, Ace. Thanks, buddy. Appreciate it. If you're not a member, click it. Ace is gifting free memberships. We'll find you. No matter how far or how long, I will find you. You stay alive. I will find you. Great movie. Probably too much of a gem to have with these childish gifts provided on Discord. Sound familiar? That's right.
Let's get nuts!
Stay alive. Tenzin with the donut. Thank you, Tenzin. I appreciate it, man. You stay alive. No matter what occurs, you stay alive. You guys haven't seen this movie.
Let's get nuts!
Classic. Gotta watch it. Sure thing, Christopher. Thank you, man. Thanks, Game of Inches. I appreciate it. Yeah, Discord is kind of where get a lot like good source of information there. We share a lot of DD and media and Twitter feed and that sort of thing. And we're hanging out and chatting on there when we're not streaming, I guess. So happy to hear you watch me on your TV. That's pretty cool. Let's get nuts. See what these newsies are talking about. Oh, nothing. I wonder if BBBY will close green today. Let's get nuts. You definitely should. Not sure we're gonna get that BBY move. We have all the way till 4 to see something crazy, but look up is it FTF rebound or ETF rebalancing? Let's see. Semi-annual value. Oh, it varies. I didn't know that. I think it varies. Updated list. If I can find it. Thank you, Tenzin. I appreciate it, man. Wait till she's sleeping and then get nuts. Oh, let's get nuts. Trying to find out. Well, I'm downloading stuff here. I liked the other George GIF, so I put that one in, but that audio wasn't very applicable, so then I put Ice Cube for getting nuts. I don't have a prediction price. I mean, where it's at right now is my prediction. I was thinking if there's a possibility we could get a move just because it's quad witching by end of day. So we'll see about that. I mean, that could literally be in the last 10 minutes. So yeah. Definitely like to see it hold above the low from yesterday. That would be a good sign, and yeah, the higher it closes the day, the better, of course. Like every day, but especially today because we just started getting signs yesterday with this candle and the divergence of a bottom and reversal. So we want it to continue to support that thesis by holding some level and holding some strength, basically. Alright, Game of Inches. Sounds good, man. Sounds good. There you go. You found the membership. Yep, free memberships there. Yeah, if you guys have become a member, jump on our Discord and DM me, and I'll give you the Happy Crew role in our Discord as well. And we stream the earnings. They'll probably be in members only. So, yeah, there's different privileges for being a member. And I'm going to be adding more. I mean, I'd kind of like to hear your guys' suggestions. The ego on you.
All right, thank
Yeah,
you
that was
for that. Ben Lichtenstein, appreciate it. Have a good weekend.
Discord.
Thanks.
Yeah,
It's St. Patrick's Day.
there's a bit of a
Leo
learning curve.
Clancy is with us, CEO of Enterprise Ireland. We want to talk about Ireland, the unique relationship between Ireland and the United
Hey,
States.
top of the morning to you.
Such an important day for all of us and Irish businesses.
More like top of the morning to you.
Well, thanks for having
They
me
talk
on.
so
It's
fast.
a really important day for Ireland.
Especially,
and
like,
it's,
in the
it's
country.
a national celebration.
Can't understand them.
But it's also an international celebration.
Like, not
it's one
English.
that everyone knows Ireland for. I'm
Best
delighted to
TV
be
show of
here
all
in
time.
Washington today,
It's
and it's really significant for
basically
the
probably
U.S.-Ireland
close
relationship
to it,
in that
if not the
we are, I
best,
believe,
yeah.
the only country in the world with a standing appointment with the U.S. president on an annual basis, and St. Patrick's Day brings that. So happy St. Patrick's Day, first off, to you and all your listeners.
Yeah, without a doubt. I mean, it's celebrated in a big way here at the New York Stock Exchange. I know you're busy in Washington each year with this, but we do have Guinness, which obviously the Irish beer owned by Diageo. They every year do a nice celebration here at the United. And also we had the NYPD marching band. They march in the parade, and Cardinal Dolan has been here many, many times as well. I did want to talk about Ireland, which is, you said, size of South Carolina, but such a huge relationship with the United States. In fact, the U.S. is the second largest export market for Irish companies. What are we getting from Ireland?
What you're getting from Ireland is that Irish companies, proudly for us, Ireland is the 9th biggest source of foreign direct investment for the United States. So for a country that is just over 5 million people, to be the 9th biggest investor into the US is great. And 100,000 American workers, as you're showing on screen, are employed by Irish-owned firms. And we're delighted that US isn't just an export market for our clients. It's somewhere that we are adding economic contribution locally as well. And I think that's really important for a trade relationship, that there's a both-way benefit to the companies participating.
And what's really wonderful was this relationship went right through COVID. We've had increases here, and from what we received from Ireland, and our relationship really even solidified more during COVID, a global pandemic. Tell me a little bit about that time, but the certainty of U.S. and Ireland together.
Yeah, I think COVID was it was a difficult time for all of the world, and I think every economy in the world suffered. US companies do a lot of business in Ireland, and through COVID, we managed to keep those businesses going. We managed to make sure that Ireland continued to work for business even during the worst of the restrictions. So that's something we're very proud of. And what we actually saw is that our economy grew through COVID and continues to grow. And that speaks very much to the resilience that Ireland has, to the innovation that we bring as well. So from an Enterprise Ireland point of view, we're about supporting Irish companies to export around the world. We know that the only way that works is if our products and services are innovative, and if we're bringing a lot of value to the places we invest in. And increasingly, we're a services-led economy, as well as having a very strong advanced manufacturing sector. And that helps in terms of being able to do business across borders, even in the context of the pandemic that we just had.
Manufacturing, finance, information. Tell me a little bit about each of these categories. Some of the companies that we probably know well, or maybe not, but that are so important.
Yeah, so if you look at manufacturing, first of all, we've a long heritage in manufacturing across all sectors. I'll pick one, maybe just the food industry. Ireland is famous. People will know Ireland as a green location in many respects, but we're a huge producer of food. We produce enough food in certain categories to feed a country of 45 million people. So a lot of our food goes to export. But what people don't know as well is that a lot of Irish companies that got really good at food manufacturing in Ireland and food processing also have huge operations in the United States. So Kerry Group, Glanbia, and others have very large manufacturing footprints here in the US, much, much larger than in Ireland. And they're taking a lot of that food expertise that we had over time, adapting it, testing it in Ireland, and then bringing that capability to the United States, partnering with US firms and with producers and creating food value here in the States. So manufacturing is a both-way story, certainly, in terms of investment into the US as well as capability in Ireland. Services, we've got a very growing fintech sector in New York earlier this
Thanks,
week.
Game of Inches. Yeah, sounds good, mate.
New York Stock Exchange event.
Yeah, I don't know much about XXI, but that's good to hear.
So
I
we're
just
seeing
like
a
the
lot
chart.
of good fintech disruption coming out of Ireland. We have one
Picked up
business
some shares yesterday and
that's
some more
just
today.
announced a partnership in Atlanta this week, and you know we have a lot of fast-growing companies across that sector. I can't remember what your third sector was, but the manufacturing and services are certainly very strong.
Yeah, without a doubt. As we look at all of this, you mentioned fintech, and even here at the New York Stock Exchange, these opportunities, what would you like to see even more so for these Irish companies and what they bring to the States and how it's done? Or would you like to see something change as far as a regulatory environment or making things easier? Are there hurdles in the way of even getting this done faster, better?
Yeah, nothing top of mind from a regulatory hurdle point of view. The US is a great market for our clients. It's a great place to do business. And our clients know that when they come to the US, they need to establish a presence here and add value locally, connect with the market. And that's certainly the approach that they take. We've had companies with us all week that are either in the market and have established presences or are contemplating opening offices here and looking to start doing business. So across all of them, the US works. It's a good place to do business. The only thing we would ask is that people who know us well and who value what Ireland has to bring in terms of products and services would spread the word. And we think there's huge increased opportunity to do business between the US and Ireland.
Yeah, and I think today is when everybody says, Erin, go bragh. Go bragh, the meaning, right? Till the end of time. And so I think that everybody loves to celebrate St. Patrick's Day. And all things Ireland, we do have a wonderful relationship. And as I said, it's not just for the Irish today. I think everybody's celebrating with you. Leo Clancy, thank you. CEO of Enterprise Ireland. Thank you. Still ahead, we bring in our panel to discuss the state of the consumer following today's consumer sentiment data. Next on the watch list.
Well, not any fireworks yet in this buy. Had that rejection and sell off right at kind of 2. We're hanging out at the lows. Coming up on 3, 10 minutes to 3. See what CNS closing and power hour brings. Quad witching St. Patrick's Day. March 17th. Put an order for some more April 6th calls on GME. Still have ones more leaps I'm trying to get filled. I didn't want to go too heavy before earnings, but getting anxious. No news. I mean, why was everything so green yesterday? There wasn't a reason for that pump, so I just kind of gave some of that up. Kind of back to the median. volatility. Yeah, I mean, the market's in a bearish trend for sure. I mean, macroeconomics are not bullish at all. So any rally is, even if it's sustained for months, like this one, it's gonna hit, I think, a top and gonna have a new low. We actually haven't done that since October. So we've held up very well, but we more or less just consolidated since last November. You know, with this being the low and this being the high, we just kind of traded more or less sideways. Last bull market last year. This last year, I guess 2 years ago. Jeez. Yeah, 2 years ago. And bull market still 2 years ago. That's true. All of last year was a bear market. That's so wild. That's a whole year. Crazy. Some of you guys have only been trading since we've been in a bear market. Yeah. High coming down there. Getting close to testing a low on the day. 2021 was fun. Problem was, 2021, I was shorting banks. I was shorting CS and I don't even remember, all sorts of banks during 2021. This rally was insane and so irrational. But I was way early. I was 2 years early. So it doesn't really, if you're right, that's great, but that's only part of it. You have to be right at the right time. If you don't have the timing right, it doesn't really matter. Buy's almost at the low of the day.
For overall GDP growth.
Look at that 5-year inflation expectation, 2.8 versus 2.9. I mean, over 5 years. You know, it's amazing how they don't really see much of a change. I mean, they see it coming down some, Lorenzo, but not really seeing some great leap for the battle of inflation, which of course will be better than what it is right now. What was your takeaway, Lorenzo?
Gentleman's correct on consumer sentiment being, lower than expected. I think the consumer, as he pointed out, many of them were surveyed before the Silicon Valley Bank collapse. And so to the extent that you have more people involved that look at it, I think the world changed a lot in the last week. You can look at the Fed fund futures rates and expectations for this year as an example of that. But I think the consumer's weakening. I think we're heading into a period where the market's going to continue to soften and the economy's softening. And the reason I make those suggestions is that as I spend my weekends with my teenage sons, and one plays football, one plays basketball, and I interact in that community, which is not a high net worth community, I hear from Main Street what's really going on. And so these surveys are wonderful, but the reality is when you hear that folks are having a tough time making rent, that they live paycheck to paycheck, they can hardly afford to get by, that to me is real data that provides information. We talk to investors globally, literally on every continent, and those are high net worth individuals and institutions, and so the reactions are different, but it's really a tale of two cities. I think it's two different sets of thinking based on just current economic standards.
Yeah, and I appreciate that color when you talk. So that being said, should the Fed stop now and not raise again? Up on that.
Yeah, well, look, we have been predicting that the Fed was going to raise at 25 basis points next week. I still believe that's going to happen. I think if they don't raise, that would send a scary signal to the market. So I think they have to, and I think I'm supported in that with the ECB raising by 50 basis points, despite the fact that Credit Suisse is having problems.
In fact, it was before the whole SVB fallout and failure for that bank and the crisis that we've seen for some of these others. So that being said, what do you think the Fed does? And as we are hearing now, the Fed cut and that talk is back in to a certain extent. What are you thinking here, Alexander? What should the Fed do and what will they do?
Yeah, I think the Fed will move forward with 25 basis points. The volatility we've seen in Fed fund futures and the 3 standard deviation moves in short-term Treasury yields kind of explains the fact or reveals that no one really knows, right? This has changed dramatically by the hour. But based on the ECB 50 basis point move, inflation expectations still remaining elevated. You know, if you look back it seems like a decade ago, but just a week ago, we were talking about a Fed funds target rate reaching 6% at the end of the year. So I think to retain credibility, they also move forward with 25 basis points and probably take a wait and see approach going into the following months.
So at this point now, I know you're both involved in the market. Lorenzo, quick thought, advice for investors, quickly?
I mean, look, we've been short duration on fixed income portfolios. We have a view that, investors should have exposure similar to the way institutions invest. So a third in equities, a third in fixed, and a third in alternatives. So for fixed income, we've been short duration. And with equities, we've had a value tilt. We're looking for companies that are, stable cash flow, really strong credit, more of a value tilt and what have you. And then in alternatives, we like real assets. So, with real estate, multifamily, we like private debt if it's done right. And for growth alternatives, we love private equity. So that's how we've been positioning portfolios and thinking about the world going forward.
Yeah, all right. I'm going to have to leave it there, folks. I really appreciate both of you coming on today, Alexander and Lorenzo. Thank you. Alexander Reed and Visage Wealth, Lorenzo Esparza, Manhattan West. Thank you both. And that's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me. Oliver Rennick, Market on Close, next.
That he's aware because they had planned on 50 bips, judging the way the market had priced that in before this, and some of the commentary we heard about them warning that inflation was still too high. So 25 would be an effective step back, but still show there on the pulse of the one other very big problem, of course, which is inflation. All right. In the meantime, markets all over the place. Hard to try and spin this as a good event, but bulls will try. You've got some stuff that is working. Tech companies are generally pretty firm. Chip makers are trying to break out, led by NVIDIA. You've got gold up 3.5% alongside the Bitcoin move. Those have been two of the winners here over the last week. BTC up now right about 7%, gold up 3.5%. It's a huge move by gold standards. Keep in mind, we have to think about assets relative to their own volatility and their own ranges, where we think about something like gold, which is pushing now to recent highs. Of course, over the past year, it's done a lot better job hedging out inflation, preserving your capital. The 52-week comparison between gold and Bitcoin is not even close. It's a huge win for gold. But when it comes to risk assets moving in anticipation of monetary changes, Bitcoin's the one that carries the juice and the fire. And it is moving with some serious velocity here. Both these trying to break out alongside strength in technology tells us that the market is indeed still remaining very, very stubborn in its assumption that lower interest rates and a lower dollar are a recipe for gains in tech companies. Will it work out? We'll find out next week. What exactly is being priced in at this point by the market kind of looks to me like some of the narrative is building a little bit towards no hike. But we'll find out. It's hard to know really what is priced in at this point. We've had a lot of fluctuation given the crazy action in treasuries. Bonds rallying 1.5% almost in the 10-year futures today. It's a big move in bonds. It's also a pretty big move in the dollar. I've been wondering when the dollar was going to break, if it would, and it's not quite there. Neither is the yield, actually, because it's sitting right back at 3.5%. So levels that we have seen before and have held. With all of this said and done, maybe not done, we are actually still generally holding on to ranges. So the range in the case of the 10-year has that low of 3.5%. Probably not something that breaks until we get some notice from the Federal Reserve. If Powell does indeed just sit on his hands next week and do nothing, then this yield is probably going to make another move lower alongside the dollar. But I think that with some of these lines still holding, the dollar's trying desperately to keep 104 and the yield 3.5. I think that does tell us there's a possibility here that Powell will still do 25 bips next week. Now, thinking about the general market, the problem here is inflation is still around. The problem also is that we haven't really resolved the bank issue either. So both of our main problems right now didn't seem to make much progress this week. And with regards to the banks, I'm particularly referring to the regional banks and FRC First Republic, because this is the one that right now everyone seems to believe is on the chopping block, with banks coming together to inject $30 billion, a rescue package from other financial institutions following the government's own insurance and rescue last weekend, yet the chart looks as bad as it really could. We haven't made a new low since Monday, But this is the type of action, the drop and the dribble on the chart to the right looks like one much more likely to break down than suddenly reverse and go higher. You've basically got a descending triangle in this 10-day chart, something that's typically bearish. If it doesn't happen, it could have a pretty big rip to the upside, but there just seems to be very little buying appetite in the bank that everyone right now is focused on as being the next risk point. And to me, that is a bit odd, if not disconcerting, given how much effort has been made by the government and the biggest banks in the world to try and tourniquet the bleeding. It looks like the market just keeps on bleeding out. So it's a situation that we'll be monitoring over the weekend and, of course, into next week to see what Jerome Powell has to say about it. But there's still even some updates here this afternoon and continuing to hit headlines. Renita Young going to help us out with that. We've got Alex Coffey in the newsroom. Good afternoon, guys. So, Renita, latest here, I know that some of this stuff is like expected, right? Like some of the parent companies of these banks are officially filing for bankruptcy. But then we also saw that after Yellen's testimony last night, support from other financial institutions, the stock doesn't seem to be getting much relief at all.
No, let's start with Credit Suisse. Now, those shares right now are down more than 9%. And this is even after reports said that some of the teams for the CFO that report to the CFO, they're going to have to go in over the weekend.
Damn.
Yeah.
That sounds like the least.
That's the least, right? But they're going in over the weekend to figure out some of the possible scenarios. And of course, everyone's trying to figure out, well, what's a possible scenario? You've got analysts, bankers, investors all speculating on a possible scenario here. They're saying, analysts, bankers, investors are all saying that some possible scenarios could be an outright takeover by a rival, perhaps, a breakup of some of the businesses within it, or even a wind down of some of the existing businesses. Meanwhile, Reuters is reporting that at least 4 major banks have put restrictions on trades that involve Credit Suisse. And so that's another very bad sign of its ability to play with other banks and get more support from other banks. And this is, of course, after it said that it would get that $54 billion from the Swiss National Bank yesterday.
Such a big move, even with the support from the other banks. So we're seeing this abroad, we're seeing it here. Investors are just really unimpressed by a lot of the rescue efforts.
They are. They're like, meh, that's what they're saying, especially with First Republic, because so those shares are down probably more than 26% right now, after it got $30 billion of rescue money from 11 big banks yesterday, right? And so today, we've got tons of analysts cutting their price targets on this stock, downgrading the stock, saying that first, Barclays says that the $20 billion it was a dispute yesterday of whether it was $20 billion or $30 billion. One person said $25 billion, but the $20 to $30 billion of insured, uninsured deposits from big U.S. banks provide a vote of confidence, right? And he says that this significantly reduces the probability of failure over at Barclays. But Wedbush downgrades this stock to neutral from outperform and cut the price target to $5 from $140 a share, saying that, yeah, we see a sale most likely with this company. And JP Morgan also saying that this deposit, it's not going to do much to help the longer term issue here because it still has higher interest rates to contend with, right? And then over at Atlantic Equities, the analyst downgraded First Republic to a neutral from an outperform and cut the price target to and also said that, oh, no, they didn't choose a price target. Pardon me. That was the situation with Atlantic Equities. They just said don't buy anymore, right? And they said that the bank has a lack of clarity on this uncertainty, on everything happening within it. And the fact that it's not giving a lot of clarity, it's not giving a lot of things, makes it believe that its balance sheet is unnecessarily or unequivocally heavy, it's saying. And it's a high level of uncertainty around the forecasts of this bank, around First Republic.
Okay. Shares are getting walloped today.
Yeah.
With all these efforts being made and the stock's still tanking, Alex, what do you think the message here from this week is as we head into the close? Russell's down back almost near the lows.
Well, the first thing that I would say, Oliver, in regards to some of the relief that some of these banks partnered up to provide for, let's say, First Republic in particular, this doesn't come with no strings attached. I mean, these aren't charitable organizations coming together and donating to a cause here. This is for-profit organizations doing what they feel is best for their business, be that to stave off continued contagion or fears of and causing bank runs, or just simply because they see a profitable opportunity in the weakness of this bank to potentially buy for pennies on the dollar. Only time will tell, but just know that the prevention of failure and this stock going back to where it was are two very, very different outcomes, and both don't have to necessarily happen. Just because this bank maybe doesn't fail doesn't mean that you should expect this volatility in the stock to undo itself. So that would be my big takeaway, but I think it sets up for a really fun week next week, Oliver. Every single time except for one instance, which was in 1978, when the 2-year Treasury falls below the Fed funds rate, that means the Fed tightening cycle is over. So we have one exception, and it was during an inflationary period. So there's a chance that we see more tightening ahead. But I think we're closer to the end than we may want to admit, because it came on so quickly.
So thinking about the way the banks are responding to the efforts to support them versus the potential for a pause next week, I mean, it might seem kind of twisted, but to me it's like the more the banks drop almost after there's been all this help, what would not hiking rates do at this point for even just a 25 bips? You know, it's like if they're already, if the market's telling us that Credit Suisse and FRC are either going under, they're going to have to get sold, and that is just sort of a function of their fundamental situation at this point, then it seems like Powell doesn't really gain much from letting inflation run a little bit and not pushing back. Quick thought on that, Alex?
Well, what I would say is the tightening cycle coming to its end may involve a 25 basis point hike next week. It's just what it looks like going on that. Right now it's a 2-to-1 favorite in favor of 25 bips over nothing. We'll see if that solidifies one way or another as we get closer to the event. But banks failing is inherently going to provide tightening on the monetary policy and monetary supply, and liquidity is coming out of the system when that happens. $300 billion in discount window and the new facility set up added into the balance sheet last week. That's inherently easing of monetary policy. So, quantitative lending, QE in a different fashion, whatever you want to call it, that's the Fed injecting liquidity. But this has been the catch-22 all along, Oliver, and this is what makes it so fascinating. They're only doing that because it needs to be done. So we've talked about this the whole time. Even if the Fed pivots, even if you get lower interest rates, it's because the economy couldn't handle the higher interest rates, and that's inherently bad in its own way.
Okay. All right. Definitely some food for thought here, and a good update on the bank situation. Renita Young and Alex Coffey, thank you guys very much. Jennifer Schnabel joins us from State Street Global Advisors. Let's talk about bonds. She's vice president covering ETF capital markets. Jennifer, welcome back to the show. Let's talk what's happening here through your lens in the ETF world for bonds and fixed income. Is it as chaotic as it looks here from the price action?
Yeah, no, definitely. Definitely. Thanks for having me again on the show.
Absolutely.
It's certainly a challenging time for investors. It has been actually, I think, for the last year, but especially more so the last week and a half. With interest rate uncertainty and certainly the stress in the regional banking sector being at the center of all of it. I think it's really incredible. If you just think back 10 years ago, 10 days ago, I should say, we heard Powell speak about how the Fed would be willing to raise 50 basis points at the next meeting should the totality of the data, including the inflation data, warrant it. And that took the market by surprise, as you know, because they had already downshifted their increment sizes from 50 to 25. And then just a few days later, that entire narrative, the market had it sort of on an about face. And now we are 10 days later with, as said in your previous segment, the majority of the market expecting 25 basis point hike, but still many talking about a pause for next week. And then a whole lot of whipsaw in between hikes, nothing, and even a cut, depending on who you were speaking to. So it's certainly a challenging time with inflation still a problem here in the U.S. and around the world. And it feels like a battleground of sorts, trying to understand if the Fed will be committed to its mandate to fight inflation or incorporate financial stability into the equation when they meet next week. So The trickiness has certainly parlayed into investment themes in the fixed income ETF universe, but we are seeing very dominant themes emerge. The most prevalent being a continued flight to safety. So pouring of money into government bonds. This has been the case for some time now, but again, in the last week and a half, has really shown itself. The ultra short duration suite, I would say, is where this is being felt the most, namely T-bills. So our 1 to 3 month T-bill ETF, BIL, it's been on a tremendous run over the last year. It has gained it's basically doubled in size over the last 12 months, going from $13 billion in assets under management to $29 billion today. And it's gathered $2.3 billion in new assets in just the last 6 trading days, just to give you a sense of the investor sentiment there. This ETF has also been very popular as a place to park your cash. A lot of investors, both institutional and retail, who want to maintain a cash sleeve, have like a sort of a safe haven slice. They feel very comfortable using this as a reliable place to keep their cash, and as we all know, with rates rising over the last year, can earn a nice yield over 4%. And this was not the case, obviously, over a year ago. Right. So we've seen a lot of popularity pick up in this ETF. This has also been a very popular way to express I just want to wait it out. I don't know what's happening. I don't want to take a view necessarily on what the Fed's going to do. I can just keep my cash here. The other part of the curve.
Is there sort of a distinct progress then kind of being made from this, where if people are buying treasuries and buying T-bill funds to find safety, I mean, in kind of an odd way, are we sort of fixing things a little bit that were broken? Because this is what they're supposed to do, right?
Yeah, a little bit. I think it's a little bit of choosing the best of the, I don't want to say the best of the worst, but if you look, everything is relative, and if you look at the menu of options, this seems to be still towards the top. A little bit further out the curve, this particular week, we are seeing, it's worth noting, I think, for those who have a more formed view on rates and the path that might ensue ahead of us, our 3 to 10 year Treasury ETF has seen $2 billion of inflows in just the last 3 days. So maybe there's more conviction formulating around, the rate hike stopping or when it will end, et cetera. So just a lot of chatter there amongst the fixed income ETF suite, but we're really seeing a lot of inflows across the entire curve in our government bond suite. But really, it's still very skewed towards the ultra short area.
Interesting. The 3 to 10 SPTI, that's what you just mentioned there, the intermediate fund. What about on the credit side for like actively managed corporate bonds, high yield versus safety there, investment grade? What does that look like?
Yeah, sure. And of course, I mean, it's depending on the investor's view, but to the extent that people want to layer in some risk or re-risk or never left that area, we're seeing a tremendous amount of interest and comfort increase in the utilization of actively managed fixed income ETFs. So different from the indexed ones, our newly launched flagship credit ETF, HYBL. This is an actively managed fund by Blackstone, Blackstone's loan and high yield fund team. This fund has about 50% bank loans and 50% high yield bonds. And the nature of the active management, I mean, we are in a dynamic environment, as we all know, Oliver. These are difficult times to navigate, and this tends to be, I think, when active management can shine. Many investors don't have the wherewithal, perhaps, whether it's IP or whether it's resources and technology, to be navigating and pivoting between specific individual securities, and in the case of this fund, between different asset classes, taking advantage of of opportunistic moments to pivot between the two, to take advantage of technicals that might ensue, especially during a trading environment like now, when liquidity can be challenging, and leaning on a best-in-class manager and everything that comes with that, an expert trading team, can be very helpful.
All right, HYBL. And then BIL for the short, SPTI for the intermediate for treasuries. Seems like when push comes to shove, investors are still willing to bet on U.S. bonds, even with everything that's going on. Pretty amazing to see folks return back to safety trades. Jennifer, thanks for the details.
Thanks so much, Oliver.
Absolutely. Have a good weekend. Jennifer Schnabel, Vice President at State Street Global Advisors and ETF Capital Markets Group. All right, there's the bond side. Let's talk some stocks, and a group that I think deserves a little bit of attention after a pretty rough session today and really a rough week. Just when it looked like they might be ready to break out, led by United, the airlines have taken a turn for the worst. Jim Corridor's got some data he's going to run us through next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Airlines were looking good as United got to a 52-week high, but then things turned south, and the group has been getting hit alongside everything else. Jim Corridor joins us from SimilarWeb, Senior Insights Manager, looking at the web traffic and the data. What happened, Jim? These stocks look like they were finally starting to reflect some of the reopened demand, and then they just sank.
Yeah, thanks, Oliver. Yeah, what happened was conference season started, airlines started talking. United said that they're starting to see weaker seasonal months perform poorer than stronger seasonal months. And when we look at the data here at SimilarWeb, conversions were down sharply in February. Web traffic is down as well. So it does look like consumers are looking to do other things now rather than just fly.
Okay. So what do you see in the numbers? I mean, obviously the markets come under some pressure. Who are the airlines that don't deserve this downward pressure?
Well, if we look at the numbers in terms of market share, it does seem that there has been a shift.
Right, sorry,
Southwest,
guys.
because of the debacle they
Those
had
crazy
over
eyes.
the holidays, has seemingly lost some market share. People are choosing to
Spy
book
did
away,
rip up there.
so their share has dropped
Calls
by
are
about
tough,
2
man.
percentage
Dailies
points.
are tough.
United and Delta have
Made a
picked
little
up
bit
that
on it,
slack.
but
American has also seen a
that
drop
decay
in market
sucks.
share. So while
Just
we are
futures.
seeing a declining demand environment, there are some airlines that are performing better than others, and it looks
Aaron
like United
Condor's
and
a
Delta are
distant
the
goal of
two
his
that are
dinosaur.
doing better.
What are they doing so well? Why
Don't worry
United
about
in
that.
particular? Because that's the one that was really
Start with
ripping higher.
Starwood
I think
learning
that
to
United
go long and
has,
short on
done a
stocks.
really good job in customer service over the holidays. They were a much better
Guys.
performer than American and Southwest.
Crazy
They
eyes.
are adding flights, they're adding routes, they are in the PR constantly with environmental issues, with their new pilot contracts. They're doing a lot out there to keep their employees happy, and that results in a better
Yeah, I use E-Trade,
So
E-Trade
the
Webull,
drop
2D
off
Ameritrade,
from
and
the
Fidelity.
Early demand at the beginning of the year. Some degree of maybe seasonality, or have we gone beyond that? Is there maybe something happening with the consumer?
Yeah, we have to remember that last year was a sharp reversal because it was the end of the pandemic. There was the year of revenge travel. People were looking to get out and fly.
Revenge
The numbers
travel.
were very strong last year. There is always a little bit of seasonality. February is usually weaker than January. January is weaker than December. But what we're seeing in the numbers is more than seasonality. Airlines saw conversions in February drop by 20% year over year. And from January to February, that was down 10%. That's more than usual seasonal, which would be about 3 to 4%. So we are seeing the numbers look a little worse than seasonal. It does seem like maybe there's a canary in the coal mine for demand for airlines right now.
Okay. Hey, Southwest, I get, right? When you say they're losing market share, they had a pretty major mishap. What's the deal with American? How come they're losing market share?
Yeah, I think that they also did not have a great holiday season in terms of their performance. They may have tried to push the needle a little bit too much on
Yeah, I would
airfares.
paper trade
Consumers seemingly
options
have become a
first.
lot more price sensitive. Our data
Yeah, I'll
is
just
showing
stream
they're
till
spending a lot
close.
more time looking for
I
deals.
would
So,
just
with American
right now is
being
when
maybe
I'd
a
be able
little
to do
bit
a
higher
video, and
than United, they
it's kind of
seemingly
late
lost
already,
a
and
little bit of share.
Okay.
yeah. There
We'd
might be
remiss
some
to not discuss
action at the end of the day too
JetBlue
before
while
the
we're
stream.
talking airlines. What comes next?
Yeah, I'd paper trade. I think you can paper trade options
obviously
on
the DOJ
on
is trying to
E-Trade.
block the merger with Spirit.
Paper
But if you
trade
look
on
at our
there.
numbers at SimilarWeb, we're computing that the
I
combined
don't know how they
entity
work.
controls
I would start with
less than
selling
12%
options,
of the market.
selling
still
covered calls and
sharply below
shares
where United, Delta, Southwest,
you own,
and
and
American
then
are.
selling cash
It's
and
hard
cleared
to
puts.
argue that builds an amount of concentrated market share that is to the detriment of the consumer. So I think that if they prosecute that case in the courts, they will be very likely to win.
Okay. Thanks, Jim.
Sure.
Appreciate the data and the update as always.
Thanks, Oliver.
Yes, sir. Jim Corder, Senior Insights Manager at SimilarWeb. Pickup in United. Market share being taken from Southwest and American over the last couple months as demand slows a little bit from a strong early start to the year.
Done the paper.
And the stocks have been getting slammed, so
yeah.
lines up with the data from Jim. When we come back to bearish options, one bullish, a little bit of a crypto-connected trade, DoorDash and Nike on the other end.
I'm moving up now. Eventful or relaxing. Thank you. Same to you. I'm shooting for a relaxing one. Gonna be shorted because there's more shares rated than exist. It's not a finite amount of shares. Just like your dollars. Not a finite amount of those, they just make more of them. The value of it is Fugazi. Prime. Re. I still think people say re. Never did that. Actually, I was looking at my paper trade. I opened up these two. These were following the puts, naked puts, cash grid puts screener on bar chart. Because one was BBY and one was Carvana. Liked them both. They're both down, but I have until April, so we'll see. Carvana's is a little more sketchy to me because that's 7.5 and it's trading at 7 and 7. I never have to cover. Yeah, there's lots of ways around them having to cover. So, yeah. Oh, SPY rejected there. Up just chopping around down here, down at -1% more or less. No, that's good. Carvana one, it's just a data farm trade. But that's just paper, that's not a real trade. I'm not actually doing that one. Just wanted to see that play out. Yeah. Stupid people try and change the rules. Nailed it.
Back to 8% today, 27K right now.
Yeah, and ever since they kind of pivoted away from the whole
I did get some more calls on GME.
You know, theme.
I got some more 17 calls, and I have 8 of them for
crypto space. It's relied
April
on
6th.
that movement in Bitcoin. Still down about 42% from year ago level. Still up about 17% so far this year. So it's had a good run on the back of those gains we've seen in Bitcoin. Yesterday, Mizuho upgraded the stock to a buy from a neutral. Put a price
I'm waiting to roll. I haven't ordered to roll this
and buy now.
Cash could put on
pay later.
BBBY.
Ecosystems are starting to pivot them towards profitability, but we did have Lightfolio on fast market today, Oliver.
BBBY flushed through the bottom. That's too
PayPal
bad.
And Venmo's, the PayPal's Venmo is eating the lunch out of the Cash App at this point. So that's a concern moving forward. For this
so
company.
I rolled my $1.50 cash
besides
grid
that,
puts
we did see some
to
unusual
next
option activity to the upside
Friday
here, probably based
for
on
like
that
$180 credit.
Mizuho yesterday.
SPY's flushing there
they
also.
were in there buying the March 31st weeklies.
So same strike,
this month,
receive
$180
credit. So basically all those credits.
7,000 of the 79 strike calls for a debit of
and basically just consider that reducing the cost basis on here.
Trader, at $80.60 over
how
the
much
next
that
2
is
weeks,
per share
about
per
9%
contract.
above the current share price. So you're
Do the math,
going to need some more extension of those gains that we've seen so far this year. But a really
Interesting
short-term trade here. Looking for
BBY
some
maybe
more
got
upside
flushed down with the SPY. Looks like it initiated that.
So pretty straightforward. 79 strike.
330.
7,000. So they definitely got some conviction.
72%. We've heard over 100% on BBY.
You know, it's been a lot sleepier, the stock, than anything in crypto.
That's true.
Or even
Short
some
interest.
Of the other tech
There's a reason why it's shorted so heavily.
Well,
this is still below its
probably
going to
go down. It's probably not a good stock.
But I think that that lends into the
Pretty
data
big red candle there on SPY.
It's been read out there. The fact that
Into the end of
Venmo
the day, got 30
is
minutes
starting
left
to
on
really
this
ramp up
quad
their
witching.
expansion. And just 2 years ago, in 2021,
We'll see what's
in March,
exciting. We could rip.
it
we
was
could
about
dump.
2/3 of the people used Cash
Possibly just
App,
stay in this
1/3
range, I
used
suppose.
Venmo. Now it's actually flip-flopped to.
I want BBY to stay above $1 though by close because I got dollar cash grid puts.
Venmo
I don't think I want
owns about
those.
2/3 of that market, and
I don't want another
only
5,000
1/3
shares.
Cash App. So we have seen some deteriorating growth metrics.
I'd like to see a
as
little
far
more
as,
confirmation
the
of a
Cash App
rebound.
Side,
Even though we have the signals,
Okay. All right.
better wait for the
Two
momentum.
bullish trades,
before I'd add-
one bullish
add to it,
trade,
I
two
think.
bearish trades. The
Got
bearish
enough-
trade you got in
enough trying to
Nike,
time the
DoorDash.
bottoms on this thing.
You know, Nike's kind of lost it a little bit, but it isn't
Today
doing
it
too
looks like
bad.
it's maybe set up an
Still a
engulfing
good
candle
year
too.
overall, but we're kind of, you know,
Well, we'll see how it closes.
$5 on the year now, where we were at 130 at one
We close
point. We
about
dropped
16.
about $10 in the last couple months.
We've seen some revisions go into earnings. They have earnings on Tuesday after the close, so this
I don't
will be
really
a big
care where
one to
GME
watch.
closes.
Foot
I've got-
Locker reports
got
on
my
Monday
calls
morning,
ready for the rest
so
of
that
the
might
month.
give us a little bit of clarity into Nike
All gonna
because
change
they still
on
have
Tuesday,
that
gonna get
partnership. Even though Nike's moving more to
Slapped
direct
on
to
that
consumer,
Data Crush
they
or
still
IV
have
Crush.
that partnership with Foot Locker. So
Foot
we
Locker
might,
doing great.
Yeah, and you know, estimates have been going up. Analysts have been negotiating their price targets on Nike ahead of these results, but it did hit nearly 3-year lows in last October, about just over $82 a share. So it's had a nice run from those levels. Jefferies just came out with a note today. Firm's digital panel shows interest in sneakers was strong during the holiday shopping season, but remember, weakness in Adidas and Puma after their earnings results this past month were not positive for growth numbers and for guidance moving forward. So that's a concern for Nike going into
Volume's picking
this
up there on
report next
BBBY.
Tuesday. And we did see somebody setting
Breaking out
up
of that
maybe for
algo.
some potential downside in these because it's an earnings play because they
Breaking
did
out
the
of
March
that barcode.
24th weekly series
Adidas,
that
yeah, I've
expires
never heard
next
that.
Friday. So you'll capture that earnings event. They bought over 8,000 of the 114 strike puts for an average debit of about 275. So to the downside here where you start making money at 111 25
I
over
just
the
remembered
next week.
I
That's
inversed
about 7%
TD's
below the current
trade
share
more or less
price.
and made money.
And that's
It was
about what
Rivian.
the option market's
They were
pricing
giving
in
a
for a move
bullish
in these
Rivian
shares.
option spread like
Post-earnings,
2 weeks
put
ago.
volume is about 3 times normal daily average volume.
It's right
that we've
here this
seen
day.
over the last 5
And
trading
just
sessions.
just broke a low.
Yeah,
They just had
somebody's
a
setting up
share
maybe for
offering.
a disappointment here out of Nike.
He's like, well,
maybe
if you're going
based
to
on
be
the
go to the
fact that
upside,
both
here's the
Adidas
play.
and Puma
I
have
was like, what the
fallen
heck?
since they reported.
They gave me the idea to short it because
All right.
I learned about the equity
someone's
offering
fading
and
it, you know,
all-time
it's
lows
gonna
or
keep
broke that
going.
low. Short it.
DoorDash
Did well.
fade
Closed that
there
thing here, I
too.
think.
Long-term chart still pretty
130% or
sluggish.
something.
Got a hit on earnings. Hasn't really gone anywhere since
You
though.
can,
After that
you can
earnings
get
sell-off
plays and
last
news
month.
from anywhere. It doesn't
Yeah, it's still up 22%.
have to
so far
agree
this
with it
year,
or
so
whatever.
It's made some, a little bit of headway. They're still down about 38% from
choppy
levels.
spy.
So it's been a rough ride for DoorDash. They did get some of that bonus news earlier in the week when Uber, Lyft,
down
and
2.5.
DoorDash all got a lift on the California State Appeals Court ruled that Proposition 22 can stand, where the employees are not going to be considered the workers are not going to be considered employees, right? So that was a boost for DoorDash, Uber, and Lyft. But at the same time, there was a note out there. DoorDash just to that path to profitability. They're not. They still have a big chunk of the market share in this food delivery space, and
It's
they
like
continue
GME wants to
expand their footprint to
break this
other
resistance
areas
on the day
of
to
delivery, but they're not
1630-ish.
profitable yet in this type of environment. You know, that's going to be rough. And we had somebody setting up for some downside in here, but a little bit more duration on this particular bearish trade. Trader came in and bought 12,000 in May, 50 strike puts. Average debit of about 265 on those. So the break even of 47.35 over the next 63 days. So you got a couple months. You'll capture earnings. That's about 20% below the current share price, with put volume today about 7 times normal daily average volume. So getting hit today in the market, but it's had a good year so far. But that path to profitability is going to be a tough one. And this trader thinks that we're going to see some more downside in here over the next couple months.
Okay. DoorDash, Nike, bearish trades.
Yeah.
And then little bullish trade in Block. Okay. Yeah. We got about 20 minutes left here. Stock still under some pressure. And every sector in the red as tech caves. But we'll see if that Block trade pays off, if crypto can keep ramping. Thanks, Tom. Coming up, let's talk some more about the ripple effect from crypto prices in the stock market. The Coinbase having a good day, but there's another story here going on as well. It's trying to make a breakout, trading just below its January high.
GME is edging up a little bit. Still down 2.5. It's up 16.3. Bed Bath barcoding now down here at 104 for the low and 105 for the high. I'd like a close over $1. If it looks like we're gonna get close, I'll probably roll these. Oh, it seems seeming like an uneventful quad witching. Volatility might get crazy next couple weeks, though. Now that all this money is freed up. GME edging up. The SPY. ENS is down 11% today. Sucks. XXII is down 1%. Still looks good, still like it. Got this RSI divergence here. I have this MACD crossover, and it's at this historical bottom, double bottoming sorts. Next week, I think we're going to see some upside on GME and probably BBBY also. I think Bed Bath at some point was going to bounce out of this algo range back into the 1.5. Well, actually, out of the algo range, we're above 2.5. So, but yeah, I think it will bounce up back up into that range. Next week, I'm not sure, but yeah. I'm not sure on really. I could see a little more bounce next week before I keep selling off. Depends on news this weekend. Couldn't be hits $1, pick up some orders and momentum. Going down wouldn't pick up momentum to the upside. Momentum up, going up would pick up upside momentum. But yeah, I mean, there's this almost 1 million share order at $1 now. But that's probably somewhat of a spoof. I don't think that's a real. Probably not someone really waiting for 833,000 shares there. Now, if someone wanted it at $1, they would probably want it at $1.04. It's not like they won't buy it here, but they'll buy it at $1. So we've been accumulating shares. You know, people that want to buy it, they've been accumulating. 385. Yeah, I think I go either direction, sure. 385 by next week, yeah. Absolutely, gonna make a gap down there by Monday. Not that big of a move. For how big of moves it's been doing lately. There you go. I stand corrected. Some people are waiting for $1, I guess. I know what you mean, yeah, psychological level. Sure. Yeah, it got to $1.01, so I guess if you're holding out for that last cent. But then you have people front running. Then, you know, everyone's gonna wait for $1, so I'm gonna do $1.01. There's people saying, oh, everyone's gonna wait for $1.01, so I'm gonna go $2. And then that's where you build a support before what you would think is a psychological level. And $1, it is a psychological level, but there's not really support as far as historical until 88 cents. So if it hits $1, it might as well just flush through.
I think we have to think really more
But yeah,
function of the apprehension
it hit
of the market.
a low level and bounce. Haven't
My
really
base
seen
case
a
all
big
year
bounce
has
off a
been
level
like
yet.
to be 100 basis points from 3.5.
But it doesn't have to. It
And
could slowly flip
that
momentum.
said,
And then,
we have like the fear of disinflation, the fear of further contagion. And right now, like, you know, we're worried about bank solvency or bank reserves. And that's higher bank reserves are great for solvency, but not very good for credit creation or for the velocity of money. So that's what we're wrestling through right now.
Okay. Larry,
Yeah,
the
we're gonna let that
trade
happen.
right now, give us something to ponder, think about over the weekend. How do we approach this ahead of
That
FOMC
options
from
chain
a trading
can build up a
perspective?
gamma ramp real quick, though,
Yeah,
as we've seen.
I still have the
We do start to
530
get some
steepener on.
momentum.
I've had that on since
Next
March
week's not bad.
2nd. I'm still
Still a
very
lot of open
comfortable
interest.
with it because something's going to have to give. But that said, if it comes to trading just outright rates, I would perhaps fade any big move that we see, thinking that 3.5 and a 10s is probably the magnet for 2023.
All right. It seems like it is so far
Yes.
right now. Thanks, Larry, for the perspective. Have a great weekend.
Thank you.
Larry Shover from Exchange Capital Resources. 3.5 is indeed the magnet. We're just a hair below it right now in the 10-year. We've got a great panel coming up from the Schwab team. Michelle.
Yeah, I mean, the options chain for next week is
will be joining me
not as stacked as
break
this
down
week.
what
We've
we
got
learned this
71,000
week.
on
Of course,
$1.50.
think some more about
This is pretty crazy,
Powell.
but next week
Right
there's
now,
still
the market has about a 2/3
pretty good
chance of
open
signing a
interest.
25
You got
basis point
25,000 at $1.50, 24 at 2. Single digit thousands, which is still a lot, up until 5, and then 5 you've got 10,000. So pretty good ramp. If it hits 5, then you definitely are ripping. By that point, these are all going to be filled in. So strong support with the gamma ramp up through like $3. And then you'd be looking at next week. Eyes coming down here, coming up to the 10 minutes of Fugazi. GME, look at that, just inversing and showing relative strength. Good signs. Good signs. Calls I bought are up 16%. Should probably just sell them. Screenshot it, put it on the wall. GME, I had some signs. It's the high of the day on GME, huh? Yeah, we broke the high today on GME. It's down 1.5. Climbing up though. BY still barcoding. 104, 105. I was trying to find ETF rebalance. I couldn't find it when it is. Pretty solid strength there on GME. Regardless of the SPY's red candle. Okay, everything's rolled. I need BBY above $1. And that's really it for today. For this week's OPEX month, this quarter. Some stuff expiring worthless. Pay my dues to the market makers. That would be BBY. All debit spreads I opened. It's a good sign. Yeah. Yep, it is. Without support of the market, it's good relative strength. Volume's still very low, but it is increasing here. Got basically all the all the exposure I want on GME for pre-earnings. Probably get more the morning after earnings. Everything goes well. Yeah, we'll stream earnings. That's all I use to stream. I just do recap videos and then like daily videos, kind of, just journaling my trading. And then I would stream earnings, but yeah, I'll probably have 2 separate streams. I'll just stream during the day and then I'll cut it off and restart another one just so I have a separate one for earnings. The dynamic energy earnings call. That's right. Hey, Dink. Your numbers are lower. That's true. That's going to be the big thing because last time they were lower and there was panic, and then other people were saying, "Oh, it's Citadel or someone that messed with the bot and then sold them." I don't remember all of it. Doesn't really matter a whole lot to me, honestly. It's a pretty good move in today though on GME. This is this OPEX move, I would say, a bit. This thing's climbed 3% in like 20 minutes. 30 minutes. Here's the squeeze right here, guys. Hold on. It's a trend, yeah. GME did get a little spicy here. Only one that's given us a WAPEX excitement. OPEX? OPEX. $0.30 of excitement. Yep. That's about what 30 cents of excitement will buy you. Kodak held up good though. I think it's up 10%. There's some excitement. We can all go home. Wait, you weren't at home already? Me.
The 2008 global financial crisis. I mean, we could see some more banks make the news with vulnerabilities. And we are still seeing some measures of stress in the financial system. But, compared to 2008, regulators have enforced much higher.
Yeah, I stream to close every day if I'm not doing a video. So recap video. Usually I'm doing this time so I can be done by market close.
So we haven't really seen the same, as I said, impact on European banks, but banks globally have been down this week for sure.
Interesting. The fact that we can try and kind of balance these things, the inflation fight, as we saw Christine Lagarde trying to continue with, but still having a kind of a smaller version of our problem here. To your point, Kathy, it does seem like Powell's got a little bit of a tougher decision than they did, given that their inflation levels still are lingering higher, and there was a lot of conviction around that 50 bips.
All right, 5 minutes.
What about other options? Does it all have to be about the Fed funds rate, or can he do some tweaks with balance sheet, quantitative tightening? I guess they've already been doing some tweaks.
Well,
Yeah, went
no,
the wrong way.
mean the rise in
You guys
the
see
balance
the
sheet
quantitative
is
easing that
purely
the bailouts
related
already
to
have done
the
on the
discount
Fed's
window.
balance
It's
sheet?
not, It's not QE.
Hilarious.
But yeah, they could announce
It erased like a whole
perhaps,
year's worth of
25
quantitative tightening
basis
in
point
a week.
rate hike in the end of QT. But, again, that's sort of splitting hairs, right? Either you believe the system can withstand another significant tightening at this stage of the game,
Doesn't look
or
like we're
you
getting a move
believe
on
that
BBY
the
today.
economy and the financial system need a moment or two to gather their wits. And my concern is that if you try to split hairs
4
and tease
minutes.
it around one way or another, you're sending such a mixed message that it doesn't help the market figure
I'm
out
gonna
what's
close
going
out
on.
of TD.
So,
Remind me to
I
close
think
out of
we've got
TD
a tough
before the bell
situation
because
here,
I
but
want
I
that
don't
bell.
think there's
It's
any
too
sort
loud.
of easy way
Gotta end with
to
some yes.
assuage these
End the
concerns.
week,
You know,
end the
when
quarter.
these things started, the Fed said, "Oh, well, we have different tools for different
Start to St.
things,
Patrick's
right?
Day.
Oh, well, they opened up the Swiss knife, and they're still getting the whole market to react, even to individual bank consideration." So again, it's not 2008, but it doesn't have to be 2008 for the Fed to pause. It doesn't have to be a global financial crisis for the Fed to think, well, maybe we've done enough for the moment and we should step back.
1.5% down on BBY.
Well said. Doesn't have to be as big of a crisis
Might
to
close
still
higher.
be a bit of a crisis.
3 minutes.
And a merit enough to slow things down from the Fed. Great conversation, ladies. Kathy Jones, Michelle Gibley.
I'll let you.
Nice close to our week here, putting the global perspective.
I thought you
onto
took
our
your
radar,
profits
too.
and went
Very
home, Dink.
important, given what happened with Credit Suisse. All right, so next week is the highlight,
What
of
won't
course,
let you
with
buy
Jerome
it?
Powell. A few minutes till the bell. I'm heading off at the end of the hour, but we need to do a quick update for my risk radar, given some of the price action.
Nice. Well done,
I'm
Daisy.
adherent
It
to
is
the
rewarding.
charts, no matter what
Taste-
you think about
tastes
the fundamentals
just that
or
much
why,
better.
how things happen and what happens, I believe always is paramount. So even though I'm keeping the red on stocks, we haven't gotten above the key levels there. And bonds, until they get below 3.5% in yield, the chart arguably could
won't
still
work
be
because it won't go
uptrending
low
longer
enough.
term.
What's your fill
Dollar
again?
got
80 cents? I was
slammed
trying to get
hard
it.
on a day where I wasn't here, so I'm keeping the green until we get below 103. But crypto and Bitcoin deserves credit for the breakout. Bitcoin's got its groove back here. The light goes yellow. Now that we have bounced off that 25 and found some support, the potential.
I'm closing it down. Okay, it's closed down. Shouldn't get a gnarly bell now. 101. I get a 101, huh? Can't get prices from 2 days ago, Dink. Today's today. We were leaving 101 behind. All right, 60 seconds. GME is holding up nicely. That's where I like it. So these one strike cash grid puts, I'll just let go. I don't want to pay $50 to close them, so will expire worthless. And we'll reopen the Theta farm. Actually, I could open some today. Let's see here if I have time. Ooh, real quick before the bell. 15 seconds. Oh boy. Sell. Let me sell 25 of them. Put, sell. 108. 1 second. I still got the bell. What in the world? Oh, it's from this. Sorry, guys. Whoa, look at the flush. Oh, I tried to get my cash secured puts there. That's okay. I'll sell them on Monday. Sorry for the bell. It's actually the tab. It's not the desktop browser. Freaking thing. Can't believe that. Thank you guys for your support today. Pretty uneventful quad witching, which ends up happening more often than eventful ones. Not gonna do a recap video, but most of you guys were here most of the day. BBBY came down, then went flat. BBBY is pretty much flat. Let's see how we're looking on the daily. So hourly, you could say this is a double bottom down here. Maybe even getting close to a triple bottom at that hour. On the daily, let's see what that candle looks like. Yeah, that kind of sucks. The daily candle does kind of suck. Doesn't mean it's definitely going to come down, but yesterday's candle was a nice inverted hammer, which is a reversal type candle. And then we also have this RSI divergence from here back to here still. But today's daily candle did close red and engulfing. So could still be building a floor here, but that is a candle showing some weakness, potentially more downs. Potentially a new low, I suppose. We'll see. But there's the other bullish indicators like that divergence in that candle still hold up there, and so not all bearish, but a little bit more bearish than I was initially with all the bullishness. GME looking good with that handle camera, which is a bullish candle. What is this? An outside bar? Yeah. And then of course it's kind of double bottoming here too. So I think GME should have a move up. Maybe BBBY will just move up with it. Thank you guys for your support. Make sure you subscribe, hit the notification bell. We'll be back. We'll be on Twitter Spaces this weekend. Follow us on Twitter at HappyMoneyYT. Sub up, like up, comment down. Happy Money sticks around. There's our Twitter at HappyMoneyYT. And jump on our Discord. That's pinned in the chat. Thank you guys so much. If you did become a member today, thank Papa Ace or Donero. And make sure and DM me on Discord and I'll get you your Happy Crew membership. Don't mind the bell. All right, first of my last second. 103. I know it didn't get to 100 or $1 though. I'm happy. Thanks Ace. Thanks Daisy. Thanks Trace. Thanks Human Shop Brag. Good thing. I'll be here on Monday. Yes, sir. Thanks Jim. Thank everybody. Appreciate it, guys. Have a good weekend. Get your mind at ease. Get out your garden like Daisy. Go plant some tomatoes or something. Just chill out. Next week's got a whole nother set of adventures. Thanks, Dennis. All right, see you guys.